Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola. Hola, Thomas. How are you today?
You know, does every day I wake up supposed to have to be up 15 or 20?
I believe, yes.
Gotta hit
They're
new
underperforming
highs.
today, only up 13.
Gotta hit new highs
It's
every day.
It's a law. It's a law. It is a absolute freaking law. But, no, I'm good today, man. I am light on my feet.
You are not. We had maybe 3
light on
minutes.
my feet.
We had 3 minutes to show. I'm gonna give y'all the tea. We had 3 minutes
Light on
to
my
show.
feet today.
John, our producer's like 3 minutes to show. Tom was without his toque, his hat. And so he had to go. He
There's a
left
new
it.
step there,
He
man.
left it. That step's been here, boo, for the 2 years we've been here. And so Tom had to go get it. And so he goes to go get it, and he does one of these.
Light on my
And I'm like, did you get the vapors? You almost collapsed.
I'll repeat it. I'm light on my feet.
Because you can't feel your feet, maybe.
Possibly.
Possibly,
And,
yeah.
No, I'm feeling good today.
Okay.
I got a lot of energy.
I thought, did you go out last night, or is tonight starts the night of
No.
back to back to back going out?
Tonight's like the beginning of Passover.
What?
For those who don't know, that would be like Christmas week. Your in-laws are coming over. Like, you know what I mean?
Oh, I see. I was like, I didn't know where this analogy was going,
Tonight-
or if it
Out of
just
town.
affected like firstborn males. Like, I was like, where's this analogy going?
Passover's a good one, though. For those who know, Passover's a good one.
Tonight's the beginning of like a 5-night extravaganza.
Ah, L'chaim.
Yeah, a lot of people in out of town, a lot of stuff going on. I am booked solid from this morning right through to Sunday night.
Okay, bell to bell.
Bell to bell.
What kind of food are you going out for tonight?
Oh, tonight I don't know. But tomorrow, barbecue. So I've got a lot of weird things on. And then Chinese, then Mexican, then pizza, and then barbecue.
Okay.
Wow.
Oh, wow.
Oh,
Yeah.
It's like going to Epcot.
yeah, right. It is, yeah.
Yeah.
Like drinks around the world. You
Yeah.
do Food around the world in Epcot. Yeah, it's
So we're
pretty
doing
good.
a whole thing. And then next week, we're going to be in Mexico going for the whole fancy.
That's,
I can't make fun of him because I'm going. So.
I know. So I got a bone to pick with all you. Here's the photo that has been just filtered into oblivion. Like, I don't even recognize who this dude is. But good on production for
This
serving
picture?
up this skinny legend. Like, iconic edit. The most iconic edit of all time.
They got rid of one to two of his chins. I mean, this is really good. I mean, I don't know.
They gave him some leg girth.
They did. Like, he went to leg day. Like, he started working out on leg.
It was a redistribution of his
Oh, my God.
I don't know whose eyes those are because
right?
he doesn't have
Jawline snatched.
Yeah.
The contour is contouring. Eyebrows on fleek.
So you haven't seen this? Or you,
No, I see it, but I'm normally off the show.
No, it's
when you
funny.
Put it up.
He asked for it when you're off the show because he knew you would make fun of him. I just say, like, I can't get over this picture of you. Like,
I was like, this is a stunning woman.
the transformation is complete here.
That's my Tinder.
You need to be holding a fish.
Wow.
But I got a bone to pick with you twos. I have not taken a single day off this whole
stop.
summer.
You're
This whole
bitching.
summer. And so I'm stuck here.
You've been on vacation like 12 times.
Not this summer, not from June. I haven't taken a day off since May 10th.
Okay.
May
It's
10th.
August, yeah.
This year?
Yeah.
Oh, that's,
So?
I'm not.
So, but
May
since
10th
the new
last year.
calendar rolled over, I haven't taken any, since our new fiscal year, since June 1st, I've taken 0 days of vacation.
Okay, congratulations.
I'm just saying, how did I get stuck covering for everyone?
When I'm giving a speech, that's not a vacation. I got to write speech.
He's on vacation.
Well, he's my bitch.
We got to clip that out.
Somebody has to hold his bags for him, his gloves, everything else. Yeah, for sure.
Oh, man. I mean, no vacation.
You got 45 freaking minutes. I can do 45 minutes underwater for crying out loud. You'll be fine. Don't worry about it.
Oh, so you think that this is all I do all day? Oh, you want to come for me and what I do?
I was wondering why you were sitting there quiet.
Like, do you want to?
You knew this was coming.
That is not fair. Take it back.
Take it back. Take it back.
Anyway, that's fine.
Hardest working girl in America.
I'm just saying I'm tired.
You'll be
Another
all
piece
right.
of fresh chocolate.
Yeah.
Oh, we talk about that. So, as a treat for all of our hard work, Tom gave us botulism.
No, this is nothing.
It's all you?
No,
this
stop.
has nothing
Time
to do
out.
with me.
This has nothing to do with Tom. This is all me. I found a box near proximity to my desk that's been sitting there for a long time that I haven't looked at, obviously since just before Christmas. And it's beautiful candy that the gentleman sends to us every year for the last
Right, from
10
some
years,
confectionery in Ohio. It's
absolutely
delicious.
outstanding.
Yeah.
Great.
I don't know.
chocolate.
I don't know how you hid that box so long.
I think it's been sitting out in plain sight. So I don't know if just like you
I know, but
hide
I didn't know it
everything.
was candy. We thought we got all the candy.
That's what I thought too. And so I don't know what it is. So I opened it yesterday, and it's candy from. It's got Christmas wrapping on it, so it's candy from Christmas. So I start opening it up, and I bring it out.
Okay, yeah, but which Christmas? Christmas of what year?
2018.
So from the before times.
It could have been.
I think it's from.
So this is pre-pandemic.
It's old office candy.
And it's bloomed so that it's got like that white haze on it. So that means that the
Hey, just
chocolate.
scrape it off.
Okay, but
It was good. It was
fine.
just wipe it.
it's like, hey, thank you for your 15 years of service to this company. Here's some chocolate from 2018.
I gave it to the trade desk.
No
The guys
days
are all
off.
in. It's fine.
The trade guys are feral.
They had one guy try like 5 pieces. He was fine with it.
Yeah, a couple of the
I wanted to
turtles
see
are
if he
missing.
died first before the rest of them had tried it.
A couple of the turtles are missing. You know, a turtle is my jam. I love
It's
they are
good.
so good.
Mine too, that's
And the
mine too.
white pretzels are my favorite. Oh, those are my
Pretzels
favorite.
were great. Pretzels
Just
weren't
wipe
great
the
yet.
white stuff off the top. You're fine.
I'm not eating
I ate it with the
chocolate
white stuff on it. It was fine.
from 2018.
It's fine.
It's fine.
Oh my
You're
god.
skinny biatch now. You just don't want to eat it because of that.
How do I report this?
It's fine. It's fine.
You don't like your free candy?
Yeah, I'm sorry you don't like the free candy. Yeah, right.
From 2018.
Sorry the free lunch isn't good enough too. Whatever.
From 2018. Oh man. All right. Well, I don't even know where we go.
I started opening the box. Tom was like, that must be to me. Like he didn't even know what it was. Every box that comes in the office has to be for Tom. But no, it was
He thinks everything is for him.
I thought it was for me.
Yeah. Yeah. Well, I don't know what to tell you. All right. So then that's it. Now you guys are spent.
yes. Typical.
You lasted 8
7 or
minutes.
8. That's about my
8
average.
minutes.
That's over my average, actually.
8 minutes in heaven. Great. Congratulations.
7.
So you didn't do anything last night, Tom? You just.
No, because I was last night. Where was I?
Now listen, he can remember what the Sprues did in 2005. I go, Matt, you don't remember that movie in 2005? They opened down 85, and they rallied up 100.
Oh! I was actually out. I forgot.
Oh, what happened? Where'd you go?
I was at the Soho House.
Oh.
First time in a year, right?
Year and a half.
Year and a half.
For those who are new here, Tom is a member of the Soho House.
For those who are new here, Tom is not a member of the Soho House. Tom had to get his daughter to vouch for him so he can get into the Soho House because he got denied
Christy got
at first.
rejected, just so you know.
Okay.
I haven't been in a year and a half.
It's because Chrissy didn't do an in-person interview. Go ahead.
I haven't been there in a year and a half, so this was a $6,000 beer.
Nice.
Wow.
Nice.
But it was
That's when you have that few money. See, I would never do that.
but it was nice. I had a big meeting. It's there.
At the Soho House?
Cocktails.
Did you get to go to the pool?
It was so nasty out yesterday.
Oh, yeah, that's right. The
Oh, the rain?
thunderstorms. Yeah.
Oh, my God.
Yeah.
Sideways.
Yeah. It took me a while to get home.
Oh my God. I got stuck in the rain going home. Took me like an hour. I live 5 miles from here.
Yeah.
It
Yeah.
took me over an hour.
That makes me smile a little.
That is kind of worth it.
Well, it took me a half hour to wait till the rain died down so I could even walk to my car. Because the genius that I am.
Oh, yeah, because you melt.
Well, So I had to make a decision.
Wait a minute. They have valet parking.
I had valet, but I found a spot like right around, when I was driving there. There was a spot, so I'm like, you know what? I'll do this. Doesn't look like it's going to rain.
Yeah, that never happened. It doesn't look. It'd been looking like it was going to rain since noon all day. It was dark skies and.
Yeah, but since it hadn't, he figured it's not going to.
Oh, okay. Go
I
ahead.
haven't made it to the pool yet at the Soho House this summer, so I think I might have to make it.
And everybody who goes to the pool thanks you. Okay, they appreciate it. Thank you very much.
May have to make an appearance.
So wait, but then so you had to wait because you don't own an umbrella, you don't own a jacket, you don't own appropriate shoes.
None of the above.
Yeah.
Mm-hmm. No.
But yeah, that's what I did. So I couldn't remember what I did. That's what I was.
How was the food?
It's good.
I've only been to that chicken place that's in there.
Oh, that place shut down years ago.
Years ago. Okay, well.
No, it did.
Well, that was the last time I was at the Soho House.
Oh, yeah, that's for the public.
Well, I'm the public.
Yeah.
I don't have thousands of dollars for a hoity-toity membership. So what did you have to eat?
Bunch of crap.
Okay.
But it was good. It was good. And when you said I knew I was out somewhere, I just couldn't remember where I was.
All right.
Yes, very important meeting.
Was it Jules?
I did talk to Jules.
Ah, that's nice.
And
What's the first thing he said to you?
I hate Tony still.
That's not true. That's not what he said.
It's probably not the first thing, but maybe the second or third for sure. I'm up there. I'm an honorable mention.
You're up there.
That's not what he said.
I don't know why, but I'm up there.
Yeah, you're up there.
He's fine.
All right. How about you, Bat? Is today the first day of school or no? Next week?
Tomorrow is the first.
Oh, tomorrow's.
Tomorrow's.
That's weird that it's a Thursday.
Yeah. Well, they do kind of like it's probably.
like
They got to ease them into it.
Yeah, they walk to their classes.
This is where your class is.
Right, like they don't know. They were there a whole year last year.
Right, the kids
school.
left.
I mean, like, they don't know
Sure.
what room 312 is. It's right next to 313, across from 314. I mean, what the hell?
Okay.
But yeah, that's what they do Thursday.
Well, these are
Friday.
suburban kids. They're not that bright.
This is true. This is true. This is true. Monday probably starts his real classes, but tonight will be his kickoff party.
Tell them this is the grind.
So wait, hold on a second.
I
Shut
had
up.
this conversation too with him, but
Shut up. Wait. So let me get this straight. So this young man who has not held a job all summer, who's just been vibing up till 3 a.m. playing video games, gets to throw a back to school soiree
yes.
funded by his parents.
When
Sure.
is this soiree?
What's that? Pool soiree.
When?
Tonight.
Tonight. You coming?
You can't do it tonight. You've got plans.
Tonight?
Yeah, you got a lot of people.
Tonight?
Yeah.
Yeah.
Ooh.
I mean, Joe Mama for one.
yeah.
All the
During
heads
the
of
day.
state.
He's doing it at night.
All the heads of state.
You got him at night.
I'm not taking care of Joe Mama.
Mama would like
You don't pay. You guys do not pay me enough. Nah, I'm just
Joe
kidding. I love
Mama
you, Joe
like
Mama. Yeah.
I like that.
But that's on YouTube. That's on use.
I had a nice little dinner at EJ's last night. Very nice.
Oh, you love EJ's.
Yes. Got my chicken with my sausage and my peppers. Very, very nice. Beautiful. They did it very good. They made the peppers. I go, do me a favor, cook the peppers through, like all the way through. Did a real good job.
They always, they make the best peppers I've ever had. Mm-hmm. I'll put that on them. I don't know what they put in with that olive oil to make it that way.
Either.
I don't know how they do it because I've tried 100 different ways. I can't do what they do.
Yeah, but you guys are all talk because coming out today, I got a couple of videos where I asked you guys to rank Chicago foods, and you guys were all over the place.
Well, you didn't.
I don't even know what you believe anymore. You don't even know what you believe anymore.
No, because you can't rank it.
Yes, you
Not
can.
knowing what the 10 were that you were giving us.
But you guys
I thought you would go a different direction.
like.
I didn't think you'd go Garrett's popcorn.
Right. Oh, you were left with you got that in the top 5 or something like that?
Number 2.
Oh my God. I gave that like 8 or 9 or something.
That's all I was
like
left
that.
with.
All right. Okay. So
What's your worst of all
again,
those
something
foods?
else that is my
Worst
fault.
of all those foods? Oh, Garrett's popcorn was like 8
Well, don't spoil the video.
or 9 or something.
Mine was kind of like Italian beef. I'm not really a huge Italian beef.
I didn't mind the Italian beef. Maybe the hot dog. I don't know. Something was down.
I got the videos. We'll put those up.
What was your number 1?
Well, I got stuck too with a number 1. I forget. But I had the chicken Vesuvio up there 2 or 3 or something like that, which I think was the best dish that she mentioned.
Okay, don't say it so derisively. The best dish that she mentioned.
Derisively, I have to use
Derisively.
My wife does that. Go ahead.
Derisively.
But she
yeah.
didn't say if it was on the bone or not, so I couldn't rate it.
mean, chicken Vesuvio is on the bone unless
not
it's
everywhere.
stated
Not
in
everywhere.
the description that
not
it's off
everywhere.
the bone.
Do y'all
No. Chicken Vesuvio.
I'm not having another
Period.
Vesuvio argument, but
It's like deep dish pizza is going to be thick unless they say something else about their deep
I know,
dish
but
pizza.
a lot of
That's the way
places
it's gonna
make
be.
chicken Vesuvio off the bone.
It'll say chicken breast Vesuvio. It won't say chicken Vesuvio.
do y'all
and
see
comes
how
out.
difficult my job is?
It won't say chicken Vesuvio and come out.
Okay, well then the 50
As a
times
breast.
that I've been to a restaurant and said, "Hey, is this
Line
on
up
the
at your
bone?
bougie foam eating
Is this on the
restaurants.
bone or off the bone?"
No.
Okay.
No. Chicken Vesuvio is on the bone, period.
Oh my
Everybody
God.
knows that.
Save me.
I mean,
Hey, we got a great show for you today. I'm just questioning my life choices. Today is a wonderful Wednesday here on Tasty Live, and it is August the 13th. At the top of the 8 o'clock hour, we're going to bring you an options jive, short versus long-term VIX products. What does that mean? What's
I think
a
they're gonna show
long-term
evaporation,
VIX
probably.
product?
Oh, it just means the you can different durations.
That's what I'm
They
thinking.
have short-term VIX products and they have longer-term VIX
I
products.
know, but what's an example of a longer-term VIX
The
product?
VIX,
Oh, well then,
You'll
what's
see.
like the VIX has options that go out, a year or 2 years.
Oh, okay.
Mm-hmm.
Well, then what's a short-term one then?
A short-term one might be like a future.
Oh, okay.
Depending on the duration of
Okay,
the VIX.
well, this
you might be
just
looking at
this
that.
did not add clarity at all because I was like,
I mean, it
just
could be
thought-
VIX one day that they're talking about.
Oh, I see. Okay, I gotcha. Well, then
They have a VIX.
we'll break it down
They have a VIX one day. They have a 7-day. They have a 10-day. They have like all these individual.
like a bus pass.
Yes, like a bus pass. Yeah.
There's a lot of different.
Tom doesn't know. He doesn't take public
I
transportation.
love
That's
bus
fine.
passes.
You don't. When is the last time you rode a bus?
I did ride a bus.
When?
Did ride a bus.
Lindsay took me on a bus.
25
6
ago?
years ago.
Oh, Lindsay and I did a video on a bus.
Oh,
6
when was the
years
last time you
ago.
were unchaperoned on a bus?
Right, that it wasn't for a bit.
Unchaperoned. I know
that
it's
wasn't-
dangerous,
That it wasn't for a bit.
Okay, when I first got to Chicago,
But no, like when you travel.
Now we're back 45 years.
No, but when you travel, you don't take public transportation. Like when I went to Germany, I rode the bus in
And you
Munich.
can't consider the bus like at O'Hare, like going from one terminal to the next. That doesn't count.
okay, the last time
Like I ride the buses in London and in Paris. And
Yeah, and a
like,
double-decker bus, that doesn't count either.
No, not the hop on, hop off bus. Like
Yeah,
the
not
sites.
that.
I'm talking like public transportation.
last time I took a bus like a city bus
Bus.
was when I first moved to Chicago.
So 40 years ago.
Yeah, I used to take
45
the
years
South
ago.
Street bus to work. Like before I really had a job, I was just going to the floor, but I
Yeah.
wasn't making money. So I would take the
Oh, much like today. Go ahead.
I would take the bus down there.
Yeah.
Hated it, but met a bunch of people there that all sold traders, young traders.
Sure.
Met him on the South Street bus, but then I quickly started taking cabs.
Okay.
As soon as I made money, I'm like,
It was a little bit of like almost
taking
like
a cab.
synthetically giving the middle finger when you would see the other traders on the bus.
losers on the bus.
Yeah.
and you're in the cab.
As you went by in the cab, that meant you made it. And
Yeah.
You had a good day.
Yeah.
Yeah. It was.
Oh man. I don't even know how we got.
I never took the bus.
How did
I
we
would
even
walk.
get on to this topic? Oh yeah,
I
that's
didn't
right.
drive down there. The last time I actually took a bus that I paid for was I was in Portland,
Would you
Maine.
Would you get bequested the bus trip?
No, I was in
trip?
Portland, Maine, and I had to get.
Bequest. Oh my god.
Whatever it is.
Bequeath. Oh,
Bequeathed?
Bequeath. Behest. Request.
Oh, bequeathed was something else. I'm not supposed to say.
Yeah. Oh my god.
So you'll be good at connections.
I
Failed at that game, by the way.
My brain hurts today. I'm going to keep it moving. Short term
You-
versus
you
long
asked
term
the question.
VIX products. Then 8:40 because it is Wonderful
Have you
Wednesday.
played that game yet?
No.
You'd be good at
No,
it. It's
okay.
right up your alley.
Okay. Is there a cash prize? Because why do it? I'm just kidding. Hey, what's your assumption? So reviewers write in with an underlying, and they have a directional bias. Tom and Bat try to do as many viewer submitted trades as possible. Yes.
Breaking news. I just searched it, Sosnoff. I'm right again and validated by Sean and
Oh
many
my
others who
God.
wrote into me. Chicken Vesuvio is a one-pan dish made with golden and crisp bone-in chicken pieces roasted garlic, onions, potatoes, and everything.
Tell
Bone-in chicken pieces. The first thing it says. End of story. Wrong again, Sosno.
Tell you and all your slow adult friends that I am very aware of what it is.
Hey, gotta keep it moving. Hey, guess what's coming at 9
Maybe
a.m.?
the new places that you go to, but when you go old school like you used to, Sosnoff, when you were the man of the people like you used to be.
Hey, can I finish the schedule? I wasn't even talking about myself. I'm literally trying to get through the schedule of the show.
Oh my God. Go ahead.
9 a.m., Skinny on Options Math. We got Jacob in the house.
No, we don't.
No, okay. Just Skinny on Options Math.
No.
The spirit of Jacob, no?
No, Jacob is.
Spirit of Jacob.
This week, Jacob is on vacation.
Oh, good for him. At least he got out.
No,
Where's he? This is not Burning Man, is it?
He's not doing Burning Man this year. He's just setting up for Burning Man or something.
He got to the north to freedom. I'm so jealous. I'm stuck here. Hey, so Skinny on Options Math, exploring SPX and VIX at market tops. Yeah.
That's timely.
Yeah. And then Scott Sheridan, who's the only one in this office that I have patience for. He's going to be in live from the trade desk, Big Boy Scotty S, counting down the top trending tickers over at Tasty Trade. And not to be forgotten, Nikki Bat. Do not step on his time. If you have a smaller, tasty bite-sized account, Nikki is going to present his trade ideas to Tom and Bat today. Also, a hot, fresh edition of Cherry Picks that Nikki and Data work on just dropped yesterday. It's really good. It goes into detail about how to adjust your trades for volatility, and there's some futures and ETF cheat sheet and some trade ideas. So make sure you go to tastylive.com/newsletters to make sure you're signed up for our newsletters. And Liz and Jenny, live from the floor of the SIBO this morning. So always electric when the ladies are live from the floor. So tune in for that. They were there yesterday, back again today. That is our run of show for today. I'm already tired. You want your daily dose?
Sure.
You don't have a choice. Hit me with my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news,
Breaking news.
coming across the wire. Our leading story, top story, just in.
In today's headlines,
This just in.
Breaking news.
Breaking news.
All right, everybody. Today's a wonderful Wednesday. It's August the 13th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Literally 6 p.m. Central Time, 7 p.m. Eastern. Taylor Swift is going to be on New Heights today.
Not this.
She's going to break the internet. I don't think you guys can comprehend what is going to happen today. I hope Google has the literal bandwidth to handle this,
I hope
people
they
are going to
squish it a
be
little
big
bit.
mad. What'd you say?
I hope they squish the bandwidth a little bit.
No,
Guys.
I need this. Hey, any earnings, Mr. Bat?
Cisco, John Deere.
Disco Cisco.
Yeah.
Disco Cisco. Okay, well, that's not very exciting. You have one job. Hey, as the S&P and NASDAQ continue to hit new highs, S&P ended up around above 6,400 for the first time. Investors are doubling down on a September Fed rate cut after that CPI that came out yesterday. What say you? What's in the wind? What's in the ether?
Well, first of all, bonds went straight down yesterday on that news. I don't know.
They did.
But investors are doubling down on a
Bonds
rate
are straight
cut.
up.
Where did I say that bonds were up? I said the S&P was at new highs and NASDAQ was at new highs, but they want a rate cut.
Well, if the investors were doubling down a rate cut, they would have bought bonds yesterday.
Yeah.
Is that
Yeah, 'cause
true?
remember,
Yes.
as bonds go lower,
Sure.
rates go higher. So it'd be the opposite.
So
really, you would think of that as a
if
golden
they were
nugget
doubling
out.
down a rate cut yesterday, I mean, I do.
They did it the wrong way?
I do think there's a rate cut, but the bonds did the exact opposite of what you're saying.
Okay. Irregardless, which
There's
is a
no
word.
such word as irregardless.
It is a word. You want to bet me? It's in the dictionary. Like, you may not like it, but it is
Boy
a
leader
word.
and Aristotle and Archon as the tiebreaker here. I'm going to go with the lovely
Irregardless is a
lady.
word.
I don't think there's such a word as irregardless. I mean,
Do you want to bet?
I think they.
Do you want to bet that it's a word? Like, again, not your personal preferences and predilections aside, that you're like, oh, I don't like it, whatever, I'm so hoity-toity.
I do not like
Are
the
you,
word.
Okay, but that's not your argument. Your argument was that it is not a word. Do you want to bet me?
It may be.
Do you want to
No.
bet me?
No, because it may be.
Okay, fine, then back down like a little
It
bitch.
may be in the dictionary, but it doesn't count. Is that what you're going to say?
It's not.
That's not how dictionaries work, homie.
It's not. It's not. Irregardless is not a word.
It is a word.
I think the Biden administration recognized it 2 years ago. I believe you're right, Sal.
How did we get off track from talking about rate cuts? And you're Googling?
Here's the. Yeah, I wanted to chat GPT it. Irregardless is a word, but it's generally considered non-standard and often often used interchangeably with regardless.
Where does the first part of the sentence say? Reread the first part.
Redundant.
I didn't say that it was.
It's redundant, beguiling.
It's in the real world dictionary as an entry, but it's not really a word.
No.
You just added that part.
I'll go over the
You just added that
last
part.
sentence he added. That last sentence he added. 150%.
You lie like a rug.
It is definitely not a word.
Read the first sentence again. What does the first sentence say?
I already deleted it.
Read the.
ChatGPT hallucinates a lot.
Can we talk about bonds?
We already did.
All right.
Up 18 ticks, 115.07.
Down 18 yesterday, they're up 18
Opportunity
today.
of a lifetime.
What does your skew say about like odds of rate cut next month or
I'd say
whatever?
100%.
100. Okay, so then that is.
I've been right on the bonds all the time. I've just been wrong on the market.
Okay. What are you doing in regards to SPX at all-time highs, SPY, S&P 500, whatever?
Selling it till Tony's hands bleed.
Okay, because it just gets up again this morning.
Price.
Paying the price.
Okay.
Every day they've just taken a little.
I think you are going to get.
In fairness, it does not have huge positions on that are huge here.
I think you are also going to get PPI today. I know you don't super care, but okay. Hey, this is so funny. Oh my God. It's just, this is legitimately funny, and I laughed really hard. So President Trump yesterday mocked Goldman Sachs' CEO David Solomon and literally said maybe he should just focus on being a DJ. For some reason, something set Trump off about Goldman's projections that consumers were going to have to pay higher costs because of tariffs or whatever. And so we got information about how much we've added to the deficit, how much we are bringing in from tariffs. All that information came in yesterday, and something about that, whatever, set Trump off. And so he's mad at the CEO of Goldman Sachs, but to take shots and to be like, well, girl, maybe you should just be a DJ is so funny to me.
Trump has.
It's so funny,
He has
though.
this need to put his fat little paws in everything.
But we did add to the deficit. It is surging, but we are bringing in money from tariffs. I want to talk about the dollar here. What are you doing why are you shivering like that? You don't want to talk about the dollar? You want to talk about Goldman Sachs CEO as a DJ?
Goldman Sachs.
Okay, let's talk about the dollar. Let's talk about the euro, pound.
Dollar's
currencies.
getting killed today.
Okay. What are you doing with that information?
Nothing really. It's okay for us. We're
Okay.
happy with it.
The euro is up by a half percentage point.
Yeah, the euro's up a lot. The yen's up a lot.
What about the peso? Because you are going to Mexico.
I don't know where the peso's trading right now.
Take a guess.
Shouldn't you figure that
A
out?
little bit of a rally.
Is that a little bit rally? Let's say, I'm going to guess 55.
53 and change, but that's good.
I mean, you were close. That was a
Almost
good guess.
54. Yeah, I thought like
Yes.
it.
Well, it never really moves. The peso's kind of like pegged at around 50, 55, whatever it is.
Yeah, around 50. Right.
Yeah,
This
so
is the
it's-
high end of its range.
So what is that? 20 pesos to the dollar, right? Or a little less. Isn't that what it is?
Less, yeah, 50.
You know they make apps for this. You don't have to figure this out.
I know. Well, I can figure. I don't need to figure it out because I got.
Do you change your currency when you go there? You just
got my biatch.
Got
okay.
his currency
He's
converter.
got his credit card with him.
All right, cool.
I don't need.
I have my wife's credit card with me to be perfectly
I don't
honest.
need anything. I got my Costco card and my credit card.
Wait, are you taking your wife with you?
No.
Oh, she's got to stay.
This is a
with the
guy's trip, okay?
Okay.
It's a guy's trip.
Taking my credit card and my biatch.
Never, like Sosnoff has said in the past, never get rid of your sports car and always take guy's trip. This is what you got to do.
You don't bring sand to the beach.
First things that Trader told
There ain't no beach here, okay? This is a sausage fest. Ain't no beach.
Hey, you want to get into some earnings from last night? Great, love to hear it. CoreWeave shares drop. Even as revenue and guidance top estimates, CoreWeave reported better than expected revenue with help from OpenAI, which invested in the AI infrastructure provider. Revenue guidance from the current quarter and full year also exceeded consensus. Doesn't matter, Street still hated it. CRWV down around, $13-14.
Yeah, but it had a 20-some-odd dollar expected move, so it's
Okay.
well inside the expected.
Did you trade it, Tom, or did you have an existing trade on in it, or did you what?
No, he sold a strangle in his 0 day. It's going to work out well.
Oh, okay,
No, I actually did a really good trade in CoreWeave. We sold a bunch of junk.
okay,
It's going to be worthless this morning.
yeah, that's nice. Circle had earnings yesterday before in the pre-market. So I'm putting this with my earnings, but I know that they already had earnings, but this is a Circle story.
Yeah, it opened up a lot and then the rest of the day
sold off.
But then the shares fell after hours because then in the extended trading session, Circle announced they're going to offer 10 million shares, and then the stock tumbled 5%. 2 million of the shares will be offered by the company. 8 million shares will be sold by existing shareholders. The stable coin issuer shares have surged more than 450% since they went public on June 5th.
Yes, and I would say what took them so long to offer this stock? Good on them.
Well, they thought they were going to be offering it at like $30. They're selling it at $150.
Right.
So
it'd be all right.
Did you do anything in Circle yesterday?
Got another $4 this morning.
yeah, we covered our we
Circle markets are 50 cents.
We covered our earnings trade and made money.
Okay, good. Hey, in other earnings, Tom, sad to report, Kava stock plummeted after the company
I said this yesterday.
Lowered forecast on disappointing same-store sales growth. The Mediterranean restaurant chain lowered their full-year forecast for same-store sales. The CEO on the call said consumers are in a fog right now. So Kava's quarterly revenue missed estimates. Revenue coming in $280.6 million versus $285 million expected.
I did not like Kava
Never buy
yesterday.
restaurants.
Wide markets and their food absolutely sucks.
You were such a fanboy of them.
At first. I loved it.
You
First
were.
time I went, First time I went, I loved it. And then
because it was in LA.
Out the pasture.
And
You're
then we
fallen.
started.
You love Kava. You're a liar.
No, I did. The first time I went there, I said, "Oh my God, this place is great." Then
we only have them in LA.
And we opened the one here, and then we ordered it for lunch. It was so bad.
It was so gross. It was so bad, girl.
Their sauces sucked. Their food sucked. Their portions sucked. I didn't like anything about it.
Now $20, huge move.
Huge move.
Kava make you holla.
Give me Roti any day of the week.
Roti, well, they filed for bankruptcy, so.
I know, but they're still open and they're great.
Okay, well, good luck
Horrible.
with that.
They're not
That's one of
horrible.
the reasons why they call it grody.
It's really good.
Hey, here's a story from the Shoot Your Shot file. Perplexity is offering to buy Google's Chrome browser for money it does not have. They're offering up $34.5 billion. I don't know where they are going to get $35 billion.
Tony's offering $35 billion.
Right, yeah, no, I was like, good job for that. The company said venture investors have proposed funding the deal. The DOJ, the reason this is coming about, the DOJ is proposing that Google divest Chrome as part of an antitrust suit that was being pursued last year against the company. I don't think that's going to happen under the current administration, but you do you. What are you doing in Google?
You buy me, I buy you. They said to Google.
The audacity, though.
Google basically unchanged, maybe up 50 cents. Market's up 14 handles on even the S&Ps, but
Perplexity is valued at around $18 billion.
But they're going to get $34 billion to buy Chrome?
Yeah, that's what I'm saying.
Nice.
I was like, okay, that's a flex. This is really funny. I love it when the billionaires are fighting. Sam Altman is in the process of co-founding a new brain-to-computer interface startup called Merge Labs, and he's raising funds for it, with the capital largely coming from AI ventures. But this would be a direct competitor to Elon Musk's Neuralink.
Why not?
So yeah, like let's all just get computers in our brains. What could go wrong?
I've been advocating for this for a long time.
Yeah,
Shut up.
Do you know what I could do with Tony? And then all the lineage.
We can rebuild him.
Oh, I don't know.
Like the $6 million man.
I don't know if we can save him, maybe, but we could probably save Nikki and Vinny.
What about you, Captain? I don't have self-awareness.
I mean,
they haven't been able to put that in the chip yet.
Yeah, right?
I have been advocating for this to chip everybody for a long, long time. It's ridiculous that we have the technology to chip everybody, but we still don't chip anybody.
Well, in other news, on the other side of this
How could it be bad?
On the other side of this beef.
It ends all the issues. There's no more issues in the world. You chip everybody.
Okay, so you want to control everybody with a chip.
Not control. Just know what's going on.
Okay, you want to know what's going on with
Right.
everything there, but you don't want when somebody else wants to know what's going on someplace else.
I don't mind when somebody else knows. Just think about this. We'll never.
I'm not going to think about it.
We'll
It's
never-
a
we'll
dumb
never think
idea.
that's
It's the
wrong with
dumbest
you. We'll
idea
never
I've ever heard. You're not going to convince me, and I hope they do it when I'm not around anymore.
Oh my God, this will solve every problem in the whole world. I mean, I know people have to get over it, but just chip everybody.
But there's issue. You know that. Like
There's no issues.
There's issues with even just getting breast implants and the health effects of that impacts millions of women, and that's just silicone breasts. So you're talking about a microchip, and you're like, no, there's not going to be any issues.
I'm not talking about the medical part to it.
I hate it here.
Nobody cares when they chip his dog.
I
don't
hate
care.
it here.
A little microchip in a dog. Nobody ever complains. Oh my God.
But the chips for dogs is smaller than a grain of rice.
Well, the chip for Tony's going to be smaller than a grain of rice.
Everything on Tony's smaller than a grain of rice.
And the other side of this coin, the legal and public relations battle between Elon Musk and Sam Altman took another turn. Musk is now threatening to sue Apple, yes, that Apple, claiming the company is violating antitrust rules regarding the rankings of Grok AI in the App Store. Elon has too much time on his hands. He's mad that OpenAI, this is true, he's mad that OpenAI is ranked higher than Grok AI in the Apple App Store, but again, the Apple App Store just uses it based on download. Like, I don't know how you, why are you giving me this, that you think Apple's cooking
I'm not
the
a
books?
fan of the Apple Store because we've had apps in the Apple Store and they take 50% of everything that you pay.
30%.
30%. Oh, was it 50% at one point?
No, I think it was always 30.
I thought it was closer to 50%.
It's
Maybe
30%.
30%
It's 30%.
of everything that they
Sure.
take, and that's highway robbery. So, but
Okay,
Apple,
but that's not falsely cooking the books and like downgrading.
well, if they can do
ranks.
that to me, they can do that to Gronk. That's
But
what-
they're transparent in telling developers that they charge 30%. And so you can.
What are you
choose
complaining
to-
about?
Yeah, I don't understand.
I'm just sorry. What are you?
I'm not. I was just making a face that she's, and I.
And then I was like,
making
"What's
a
the face for?"
Yeah, it's me. What the face was. For.
Yeah.
That's a
So
fan of Apple
Musk
App
is
Store.
Musk is suing Apple because he thinks it's an antitrust violation that they're ranking OpenAI higher than the Grok AI bot. But I don't know.
Do you know what? I'm looking forward to a day in our future we don't have to listen to a single story about Elon Musk.
Okay.
I mean, I'm so tired.
Well, what's Tesla doing this morning? How about that? Or Microsoft?
The hell with that.
Or Apple.
I'll tell you why I love Grok because this is what somebody said.
No, not to this. Jesus Christ.
You say Gronk or Grok?
I like to say Gronk. Tony Batista, the legend, the option trading world, former market maker on the floor of the CBOE, co-founder of Tasty Trade, one of the most respected and influential platforms for actual retail option trades. He's known for his no BS stats-driven approach for being able to rattle off Greek's probabilities and position sizing logic in his sleep. That's why it should be number one.
Do you want us to leave the room while you continue stroking yourself?
Is that Grok? Do you have your pants on right now?
Yeah. Like, do you want to just continue just loving on yourself? Because I can leave. I got stuff to do.
I don't know. Let me see.
All right. Hey, this is chilling, and this is I was surprised by this. So they now found 2 studies have been done. So obviously, they found that AI-assisted capabilities in medicine do yield positive results. So if you use AI to look at like mammograms or to
They
look
actually
or
said they're better than
outperform,
doctors.
right? Yes, but here's the thing. So better than doctors, like looking at mammograms, looking at colonoscopies,
Sure.
looking at other looking at other scans. But here's the thing that's interesting and chilling. They found that if you gave a doctor AI, then took the AI away, doctors became de-skilled and got even actually worse at noticing
Why would
or
you take it
detecting
away?
things because what if you go to a hospital or someplace and you don't have AI? I'm just saying, like, yes, in your beautiful medical facility here at like Northwestern or Rush or UFC, you have the technology, but say you're a doctor and you go somewhere with Doctors Without Borders and you still need to have your doctor skills, but you asked a ridiculous
I know
question.
it's not a ridiculous question I asked, but that's a ridiculous answer. Because if you're going to work and you
But say your AI system goes down. Sometimes our network goes down.
You're out of order. You're out of order.
Let's say you're going to work and you normally drive to work, and all of a sudden your car breaks down, so you have to take a bike to work. You know what? You're going to get there a little slower on your bike. So it's not a big deal because you're going to.
It's not a big deal if they miss your cancer.
No, because you're going to get your bike. You're going to get your car fixed. In this case, now that AI is here, it's not going away.
Okay.
That's a true statement.
So let's not
say
start.
that.
What if it's not there? Well, it's
So
gonna be-
detection rates without AI dropped by
Do you think
6%.
we'll become less of a driver if we all have like autonomous driving? I mean,
Hey, I gotta keep it moving here. China.
Less skilled.
use it or lose it.
Yeah.
Yeah, look at your golf
100%.
game.
China, I'm going to be late. Oh
Look
my
at your
God.
golf game.
China is warning companies against using NVIDIA and AMD chips. They're telling companies to avoid using the chips
not fair. I never had a
specifically
golf
designed for China
Nice. I could've
because
said
they're
something else.
okay.
Sorry, go ahead. Hey.
Tired. NVIDIA and AMD.
AMD up $5.
Thank you very much.
You're welcome.
Hey.
New Hive would stay up here. New
Hey,
clothing.
all right, great. Hey, quantum computing could be commercial real estate's next big tailwind as we are on the quest for qubits. They're saying like data centers for AI, more commercial real estate
Would not
needs
agree
could
more.
be used to house quantum computing. So that's
Could not agree more. That's why right now we are buying as much commercial real estate as we can to house quantum computing.
okay. You've lost the plot today, and but are you doing anything in like QS or IonQ or any of the quantum computing stocks? Oh, okay, I'm gonna
Negatory.
Negatory. Hey, Meta's Threads now has more than 400 million monthly active users. Congratulations
Oh, that's
to
such bullshit.
Threads.
I don't even know a single person that uses Threads.
We post to Threads, so when we post to
you use
Instagram,
Threads?
when we post,
No, but sometimes somebody will send a
you use
picture that I
Threads?
want
I
to
do
see.
use
It's on
Threads.
Really?
That's
I've
do
never
use-
seen one person use Threads.
How are you seeing people use Threads if you're not on Threads? So how do you know we're not all
If
on
a tree
Threads
falls in the
talking about
forest.
you? Right? How do you know we're not all on Threads talking
400
about you?
million people? No chance.
Why would they lie?
Another person just did it. 401.
They're a publicly traded company. Why would they lie about this?
And
They
why would
probably
lie?
do have more than 400 million people that signed up at one point, but they probably have like, I would be shocked if they had 40 million users.
It's integrated into the Instagram app. Here's why you're wrong. It's integrated in the Instagram app, and they'll put Threads content interspersed with your Instagram content. So sometimes I'll see something and then I'll tap on it and then
It's a
it'll
little
open
bit-
Threads.
It's a shaky logic.
Whoa.
Hey, what's Meta doing?
Meta 791 and change, up about $1.50.
Okay. Hey,
New.
Spirit Airlines issues going concern, and they warned that they're not going to be able to survive without more cash. The budget icon has tried to attract bookings by marketing more upscale products like premium economy, but they just months after emerging from bankruptcy, they could be right back there. Two of the best performing stocks in the S&P yesterday, though, were Delta and United. So do with
I
that
don't know
what
why
you will.
they didn't allow the Spirit merger to go through. They'd be on, I guess.
I guess the
I don't
bigger
know.
wigs are trying to steal all their slots. That would be
I don't know,
The
D.
bigger wigs are trying to steal all their slots. Would be my
I don't know.
my
But UAL, DAL, you're not trading.
UAL Ivy rank of 11. But you're right, did have a
AAL.
wonderful day yesterday. If you were a bull, it's up again today, but only about 20 cents. But it was up $7, $8 yesterday. Big
All we care about is Aero Mexico.
Okay,
and,
Aero
and
Mexico.
love because my sister works there.
Hey, well, Blue Origin is letting space tourists pay for trips on Jeff Bezos' space penis using cryptocurrency. The payment feature is available immediately for future bookings. Customers can use wallets like Coinbase with instant settlement in the U.S. at any time.
How much is that?
You have to click on it to see how much. It's added to cart, and then when you check out, then it tells you how much.
I
don't
hate
know.
that, by the way.
What?
Yeah, like when they don't give you the price. Well, you don't know because you don't shop on Amazon or
Right,
any
yeah.
other place, allegedly. And I can
thought they
tell
give you
by
the
the
price.
year of your clothing.
On Amazon, they give you the price, but there are some websites that they don't give you
like,
the price.
and then if you're like looking
until
at
you
certain-
add it to your cart.
Yeah, you add it to your cart. and
They
then
don't tell you how much it costs to go to space until you add it to your cart?
Maybe it's dynamic pricing.
Well, I'm not going to check
It
that.
depends.
But yes, other
If-
things I'm
yeah,
talking about.
maybe if you look like Lauren Sanchez, there's a discount.
Would you go if I sent you?
I'd go to
No.
space because I don't want to be here anymore. I'll leave right now. Let me get an iced coffee.
Who's
I'll
the
be
other
on
guy
my
in
way.
the background there.
I don't know. It's just an AI photo. What is wrong with you today?
just asking.
He
You got a
likes
picture.
to see the little
I don't
things.
know.
And
I
that's
don't
a Bitcoin in the background, too. In case
Yeah.
I got that.
Hey, this is pretty funny. Police in Southern California were able to locate $30,000 worth of stolen Labubus that were stolen from a warehouse. The collectible items have surged in popularity, and the Labubus were purloined in a series of trips that spanned multiple days. I like how they have them stacked up here like they are bricks of cocaine.
Yeah. Yeah, like in a drug bust.
Right, like it's a drug. Like,
Yeah.
and I was like, but they put this on their police.
$30,000 worth of Labubus.
Labubus. So congratulations, everybody that's out there. Hey, this is
Gave
fun.
away 2 Labubus.
What?
I gave away 2 Labubus to a
Oh.
young girl. She was ecstatic. Like, it made her the
that's
queen
nice.
of her school.
Oh, that's very nice of you. That's very cool.
And he couldn't
Hey,
get it on his own?
No, they couldn't get him. I got him when I was in Europe.
yeah, Taco Bell has just unveiled its first new Baja Blast flavor in 20 years. They launched the new Baja Midnight. It will be a permanent menu item. It is a citrus base with passion fruit flavor. Will also be available in a frozen variation called a Baja Midnight Freeze. The drink officially launches nationwide tomorrow. Taco Bell Rewards members can get a free Baja Midnight with a $5 in-app order on August 15th.
I never had a Baja Blast.
Oh, they're good.
What is it? Just
Vinny
It's
gets
like a
them-
Mountain Dew.
Vinny
It's
gets
Mountain
them all
Dew.
the time.
Oh, it's
yeah.
Mountain Dew?
Yeah, it's that bright blue
You're
Mountain
not gonna
Dew.
like it. It's very sugary.
Oh.
I mean, even when it's diet, it's very sweet. Kind
The
of.
frozen one though is good.
Never had the
That
frozen.
slaps. Put
Give
some
you that.
vodka in there. Oh, you have a good time.
Yeah, nah. Nah.
I haven't been to Taco Bell in a long time.
Yeah.
Probably still gross.
Yeah.
Hey, skipping a story here, John. So the initial details around Inside the NBA on ESPN are out, and it sounds like a disaster. It looks like the once hour-long show is going to be confined to around like 30 minutes. It's not going to happen every day like it used to. And from the start of the season until like Christmas, they're going to take like a break. I don't know. It seems like a big old mess. What are your thoughts on the NBA? Because it used to be on TNT. Can they revamp the magic of the show on ESPN? I feel like I'm talking to myself. You weren't listening to a word that I said. That's fine. Here's a video.
They're gonna be fine.
Yeah, they're going to be fine.
Well, it's going to be shorter and it's not going to be as regular, is what I was trying to explain to you.
They're going to be
Like going through menopause or something like that.
Okay.
Yeah, they're going to be fine.
Don't you joke about menopause.
I'm trying not to make.
Here's the thing, dude. You couldn't handle a menstrual cramp. You would crumple like a cheap folding table.
100%. You're not saying anything I don't know already. 100%. Kidding me? I get a pimple. I'm down
It
for
would
count.
put you on your ass, dude.
100%. Yep.
This is pretty great. I love this video. I like to do extreme things. I've been skydiving twice. I jump off of cliffs. Been kayaking, whitewater rafting.
Are we talking about
whatever.
Tom or you right now?
Like, no, me. I like adrenaline
Tom- I
junkies.
thought
But
Tom
here's the
was jumping
thing.
off cliffs.
Here's the thing. I desperately want to visit Australia, but everything in that country can kill you, and I'm scared of that. Check out what happens to this skydiver in Australia when he makes a landing. G'day, mate. Watch this. Nar.
There's a reason why they put the prisoners there back in the
Nar. So he's coming in for a landing.
What's up, Skip? Hey, go away.
Just throwing hands with the kangaroo.
Ah, kangaroos.
Yeah, I like how he's like, "What's up, Skip?"
See, Americans wouldn't know how to deal with a kangaroo, but if you're an Australian and you're skydiving...
everyday occurrence.
Yeah, they're real men. They're real men.
Yeah, I mean, they're used to dealing with kangaroos. They've
It's the
been...
reason why it was populated by prisoners back in the day. I'm not going.
If you're a guy in Australia, you've dealt with kangaroos your whole life.
Yeah, they're tough guys.
Everything is venomous. Everything can kill you. Everything will fight you. Like
You
Australia.
have spiders walking around their bathrooms that can kill you.
Australia is not for me. Hey, this has been something. Bat, what's coming up next?
You had the best time of your. This is the greatest way for you to start your day. You know it.
I'm Vanetta. You can find me on LinkedIn. Bat, what's coming up next?
Take a quick 90-second break. Come back. We got more Tasty Live after this with Confirm and Send. Goodbye for now.
Bye for now.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Well, he's more public in his mentality. I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Tomas, we are back, my friend. And you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P's up 18.5 handles out of. This will be a new high if we close up here. 64.87 is the high. Well, 64.87.5 right now is the high. NASDAQ up 89. Russell, the leader in the clubhouse, again up 17 by a 2-to-1 margin to even the S&P's and NASDAQ. Dow up 149, not at all-time highs, but approaching them ever so slightly. Volatility down 20 cents. Bonds up 17, so I don't know if you had that one right. 115.06. Bitcoin up $700, back over $120,000. Oil down 8 cents, been a non-factor here. It's been sliding lower over the last couple of weeks. Gold up $9.80, trying to right itself after the last couple of days slide, but it's been in a tight range from around, let's call it 33.50 to around 34.50. It's sitting right at 3,400 right now. Silver up 62 cents. That's the big one on the metals front. And net gas up small. So I don't know if the only thing for earnings that we had was CRWV with a plus $20 expected move. It's down $14 right now inside the expected move at 134.50. That's all I got. Confirm and send.
All right.
I'm ready.
All right. I'm ready.
I'm ready too.
I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. And it's 7:52. And we take over from here for the next 2 hours.
We do.
Strap in.
I'm strapped.
Let's see what you got.
Strapped on. Ready to go.
It is Wednesday, August 13th. This is Tasty Live. We're in Chicago and broadcasting from our studios in the West Loop. And if you're new, thanks. And if you've been here around for forever,
thank you.
This is year 15. Thank you. We'd like to think we were the first financial streaming show ever, so that's kind of cool. But we didn't realize it when we started this network, so who the hell knows? Mm-hmm. Let's do it.
Questions you submitted.
Yeah, these are viewer questions, and we've been doing these for 15 years. And we do about, 5, 6, 7 questions a day. That's it. And just fun. People get a lot out of this segment, a lot. Let's go to the next slide, please. First one. How big a portion of my position, of my portfolio, should be allocated to zero DT trades? Should that allocation vary with different levels of VIX? For example, when there are less good trading opportunities on the board, would it make sense to do more zero DT trades?
I'll go to the backwards and start work my way up. I less opportunities subjective there, by the way, but I understand what you're saying. Volatility low, and you're not finding other opportunities. Should you ramp up in the 0 days? I don't think that's a good recipe for success. I know other people who have had good success in the 0 day and have ramped up, and it's become a major part of their trading. It's not something that I think I would do for the long haul. I think I think the biggest thing that we can emphasize on everything that we say here is, you never realize how big small really is, and you have to stay small, especially in the 0 day. It just the strategy just goes from beginning to end, obviously in a day. So it's feast or famine in there. So I don't think you should do that. Should you ramp up when VIX is a little bit higher as opposed to when it's lower? Yeah, I mean, going from 1 to 2 is a very big jump, especially in an SPX type product, because the SPX is so big. So that's a big jump from 1 to 2. But from going to 2 to 3, yeah, I could definitely see that. We have enough research to support that too. So I would go with that part of it, but not the opportunity part.
So this is a very fair question, but here's the problem with allocating by the VIX, because the VIX doesn't really matter for 0 DT trades. Yeah. I mean, it helps, I think, when the VIX 1 day may be a little higher, but the reality is longer term VIX trades have no bearing on what happens on a 0 DT trade. So we're going to rule out, there's no allocation variance with tied to the VIX. And when there are less good trading opportunities on the board in general, it does not make more sense, just like Tony said, to do more 0 DT trades. That's a recipe for disaster. So how big a portion of my portfolio should be allocated to 0 DT trades? Small. I mean, I don't think there's nearly as much edge in 0 DT trades, but I think they're really good engagement stuff. And if you keep them really short term, like, you're targeting between 10 and 20% of max profit, your win rate could be as high as in the low 90s. So it's a really good way to kick off the day. You risk a little to make a little type thing. I like it. I mean, I would say, 1 to 3%, 1 to 5% max. I mean, for us, it's less than 1%.
It all depends on
trade
your
a little bit bigger
size.
accounts, but if you're talking about some other size account, very small, 1 to 5%, 1 to 7%, maybe max. That's it. Let's go next slide. I've noticed on the follow page, you have people listed as either being novice, intermediate, or expert. How do you make that distinction? And how might I make that determination for whether I'm a novice, an intermediate, or an expert?
I guess subjective. You have to be anointed by Tom Sowell.
You have to be anointed.
That's how you get it. I mean, I think it just comes down to time and trading and amount of trades that you've made, and those are all subjective, just to give you kind of a view. Now, when we put a lot of these traders on the trader page started out as where do we start type traders and new traders on our network here, and over the years they've evolved. So that's how we've kind of determined it. I don't ever consider anybody an expert in the trading field. You have a lot of experience, yes. You're only an expert on your last trade. I mean, how good was your last trade? That makes you an expert in that, whether it's profitable or not.
Yeah, I mean, listen, it's very subjective, and we do it based on experience, not based on levels of success. I mean, Tony and I have been doing this for 40 years. Liz and Jenny for, getting close to 30 years each. Pete Momat for close to 40 years. I mean, if we're not a know-how expert at this point or an industry expert, I don't know who is. I mean, I don't think you could have any more experience than we have. So I think we have to label ourselves. I don't know if we would say we're expert traders as much as we'd say we're industry experts. Now, if you took a Scott Sheridan, for example, who runs the brokerage, I mean, I love Scott, but I think he's an intermediate trader.
You're horrible.
He's been doing it for 40 years. No, I was just kidding. Scott's an expert too. But there's some young people here that came up through the ranks. They're really good. They know a lot of stuff. I don't know what we rate them. We have our own little system in house. It's hard.
Yep.
Let's go next slide. You often say you buy the guts and sell the wings when managing strangles. I think of the wings as long options of an iron condor, and other defined risk trades. But what are wings? And what are the guts for a strangle? When you buy the guts, are you buying the short option that is being challenged? What are you selling? It's a very fair question.
It is. And I'll go from top to bottom here. It is an iron condor. It's a four-legged spread, meaning one short put spread, one short call spread, as wide as you go, is an iron condor. I mean, that's a four-legged strategy, is an iron condor. A lot of people that have less money to invest in their account, or just want to lower the amount of buying power, will sell a strangle and look to buy wings, cheap wings, meaning the further out of the money options, to reduce the buying power on the overall trade. So that's what they're looking to do. Creating an iron condor, I would do it as one spread, one four-legged spread. So you are correct on that. So the wings are the further out of the money, cheaper options that you buy, either to define the risk, reduce the buying power, whatever your reason is, that's what those are. And the guts, no matter where you are, if you're right at a straddle, which is the same strikes, or you're slightly out of the money on each side, is the bigger option. So the guts are the bigger options, the wings are the smaller options.
Yeah, I mean, when we say buy the guts and sell the wings, I mean, it's definitely a little bit of a change in our approach over the last, decade and a half, only because we kind of find that the resulting position is easier to manage. But the wings are the long options of an iron condor or other defined risk trades. Those are the wings. And the guts are the innards. Mm-hmm. They're the short at the money options, or the short options. So when we say we're buy the guts, we're not necessarily just buying the short option that's being challenged. We're buying both of the short options back. So we're short a strangle. One might be challenged, the other one might not be, but we're buying the guts. We're buying both of those. Mm-hmm. And then we're selling out, then what we're doing is we're buying those back and we're recentering and selling out new wing. Selling out, actually, in this case, new guts. Yep, that's what it is. So let's go to the next slide. I've been rolling my PLTR covered call multiple times. I bought it when PLTR was 90 back in April. But PLTR keeps going up and up. Now I'm short the 115 PLTR call. PLTR right now is 180, close. It's 189 pre-market. Now I have the 115 call that's expiring in 4 days. If you were in my position, would you keep rolling it, or would you just let it get assigned? You are $75 in the money.
I mean, I think you're late on this, right? I mean,
you're a little late.
I mean, you did a covered call. You wanted the stock.
Nice trade.
It's a great trade, but I think you're late in holding it. I mean, you have all risk, no reward. And I get it, $75. You think nothing can ever happen to it, blah, blah, blah. But you're tying up the buying power that could be used somewhere else, whether it's in PLTR or any other stock. So, yeah, I think it's time to close this, pat yourself on the back. In the future, I might think about when my call is tested or goes in the money, which is a great thing to do. It's a profitable strategy. I would say, how much extrinsic value is left in that trade? Do I want to stay in this trade? Do I want to roll the call up more and stay more bullish on the product at that time, as opposed to, $75 in the money or something like that?
Yeah, I mean, at this point, this is not a good hold.
I wish I had the trade.
I mean, it's a great trade.
Right.
You obviously made a lot of money in this trade. It's all over.
Yep.
You've squeezed everything you can squeeze out of this trade. Just let it get called away.
Yep.
There's nothing left you have to do. It makes no sense to hold that trade. I'm guessing those puts are, a few pennies now. The 115 puts, I have no idea. Mm-hmm. But in the next month out, it makes no sense to roll that trade forward. It's just a waste of carry costs. If you really love PLTR still, and after this whole position is closed out, you want to turn around and on the next down move in there, sell an out of the money put, like the 140 or the 150 puts, just because you want to be long something, go ahead. Mm-hmm. But for this trade, in 4 days or 3 days from now, see you later. Sayonara. See you later.
Yep.
Hey, great trade. Let's move on. Let's hope everything you do forever works out this good. You never took any heat. Let's go next slide. Does the 21 DTE rule also apply to debit trades or debit spreads?
Yeah, it applies to everything. I'm looking at all my positions when there's 21 days to expiration for them. 22, 23, 24, 18, 19, 20, 21, all of those. In that area, I'm looking at every position I have on, whether I want to keep it or not. Now, for me, 9 times out of 10, I'm looking to roll it. So I'm looking to take that position and take it from 1 month and go into the back month. But yes, doesn't matter, debit spread or otherwise.
That's right. You know what? It just keeps everything consistent. It keeps us all in this, it keeps all our positions consistent so we don't have to worry about everything. I mean, can you let a debit spread go longer? Of course. Do whatever you want. Can you do it with till it's 7 days, till it's no time? Of course. You can do whatever you want. It doesn't make a huge bit of difference. Right. But if you want to optimize everything and you want to keep your positions relatively clean and you want to keep what you're doing like kind of all organized, yeah, sure, we roll.
Absolutely. Absolutely.
Let's go to the next slide. And the last one. Aren't you worried, Mr. Batista, that AI is an inevitability to take over the trading industry?
No. It doesn't keep me up at night. It doesn't do anything to me. I think it can only enhance your trading if you find it's like technical analysis.
Keep you up at night?
What's that?
What would keep you
up? You know
what?
What? Not a lot. I got to be honest with you. I sleep with pretty much of a clear head. I think I take care of business all freaking day long, and then I'm done. And my wife can't sleep. Like, I don't know, like, what she's thinking about. You know what I mean? Like, I don't know. You wake up at 4 o'clock in the morning. I don't know what you're thinking about. I can sleep on a picket fence. I'm good. Maybe I don't have a conscience, or maybe I have a clear conscience.
I wake up at 4 in the morning because I like
to pee.
What?
You got to pee.
I got to pee at 12 to 4, whatever, But I wake up at 4 because my mind works better early in the morning. So I like to work from like 4 to 6. Mm-hmm. Mm-hmm. Been doing it for so long. I feel like that's the time of the day that I shine. Mm-hmm. That has nothing to do with my question to you. No,
I don't think it's gonna take over trading industry or anything else like that. I think it's gonna enhance or help or get people more confident. Trading is a lot of confidence, and if you have some sort of confidence on this, and that's what makes you put on the trade, then you'll be successful. I have no problem with it.
I just I'm in the process of writing a white paper and a talk that I'm giving next week at a risk conference in Mexico City, and the topic is basically the future of AI and risk-taking in the trading world. Mm-hmm. And so we've been researching this topic in like a gazillion different ways. And not only am I not worried that AI is, AI is here to stay. So AI is an inevitability. But is it going to take over the trading industry? It's going to make the trading industry so much better. After all the research I've done recently on AI, and I'm not able to share this piece of research with everybody yet, but when we're done after this risk conference, I'm doing 2 different cities in Mexico. When we're done with Mexico City and Guadalajara, I'll come back and we'll talk about the findings of this study we did, because I think it's going to be an industry, an eye-opener for the trading industry, because we've really been working on this topic exactly. And I feel like the upside to AI in the trading world is ginormous. The downside, minuscule. And it's not going to take over the industry. It's going to enhance everything we do, including the stuff we do on Tasty. Mm-hmm. So not only are we not worried, we're excited about it. It's going to be a boom.
Boom.
Boom, boom, boom,
and
boom.
Boom, boom, boom. We are out because we're going to take a quick 90-second break and come back. We got more Tasty Live with an option jive right after this.
Boom, 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 boom.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest. instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap. Yeah, that's gonna go. There's a spider on my desk. No, kill it. Oh my god.
Where is it?
It's on my microphone.
I don't see it.
Not from there, you won't.
Oh no, oh god.
Spiders don't bother me at all. Just the big ones.
No, it didn't bother you at all. From where you were sitting, you had no problem with it. Man, let me tell you something.
Thank you,
I don't want you to throw me a life preserver. That's never going to happen.
Thank you, Bat, for coming to my aid.
You're welcome. You're welcome.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's option. Jive. Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with an option jive. Even the S&P is holding steady at their highs, up 18.75. Volatility, didn't mention it this morning, down 18 cents, 18.32. You might notice that volatility number on the futures has changed from the 16 handle to the 18 handle because they rolled. They have not gone up to 18. As you can see here on the graph, they're still at the low end of its range, down another 20 cents. Down goes Frazier.
Well, 6,500 is a lock.
6,500. What's 65 on the E-mini S&Ps?
Yeah.
I was talking about volatility. Yeah, 6,500 is
no, 6,500 is a lock.
And a lock. Sorry, I thought you said a lot.
A lock.
Yeah.
And
what, did you get a memo?
2,400 on the NASDAQ's a lock because we're 30 points above it already.
What happened to the seasonality? What happened to the volatility?
It's starting today. So right now,
starting today, got it.
Yeah, right now you can sell the NASDAQ futures.
Because I thought it was starting yesterday. You told me. I thought it started the day before that. You told me. I thought it was starting the day before that. You told me. Never getting through 6,400. You told me.
Right.
Because you got the memo.
Because I got the memo. So today you can sell NASDAQ. Should be able to take a quick Should be able to take a quick.
Like I said, until you see volatility uptick when the market is higher, you got to be careful out there.
You should be able to take a quick 100 points out of the NASDAQ this morning.
Option jive. Not gonna.
I'm kidding with him. Okay.
Not gonna say that.
I'm kidding with him, but you should be able to take a quick 100 points out of the NASDAQ.
Option jive.
Yeah, just do we whack him in
how?
I'm selling them here. I mean, this is just a gift from the gods. You can sell everything, especially you can sell NVIDIA today. You can sell all the chip stocks today except for AMD.
Except for that one.
I'm going to put some offers in above. Come on, reach for them, boys. Come on. Just go out there and reach. They're going to snooker everybody in here. Plus, I want them to continue to go all the way up until Friday. We do our live show.
Then you can do we whack them and how.
Then I want them to crash and burn so we have some fun.
I would like to see volatility for our live show so we can really have some fun. So let's see if we go there.
I'm Tom Sosnoff.
Option jive.
We have a fun little piece for you today. No Jacob Perlman. I know you're going to miss Jacob's math, but Tony and I need a break. And Jacob's not away, so Jacob's away this week, so we're going to do something else.
Oh my God, what did he get caught doing? Oh, not like the Italian he went away. Oh, you mean like he's really on like a vacation or a holiday? I thought you went away doing something.
I don't know where Jacob would actually go on a holiday. I'm trying to think like he doesn't.
He probably goes visit his family in the East Coast. That's what I would guess. He's a good boy.
No, he is an East Coast boy, but he's not in the East Coast. He's somewhere on the West Coast.
Oh.
Yeah.
So maybe he's really learned how to enjoy himself. Good on him.
Yeah. No, Jacob Perlman has been with us different capacities since we started Tasty.
Mm-hmm.
He was the first geek/genius that we hired. And we got some funny stories and some great original pictures of Jacob in our production of Sneak and the Geek, which was one of our original game shows that we did. Gave away $5,000. And
it was cool.
It was cool. It was a good game.
He was the geek, not the sneak.
Yeah, Jacob was the geek. Mm-hmm. You could ask the geek one question, and the geek never messed up, especially on math.
Like phone a friend.
Yeah. Jacob is a genius. There's no other way to. You can slice it up any other way you want.
Yep.
He's a genius. So lucky to have him. I tried to hire him for 5 years, and he kept turning me down. And finally, maybe he needed a job. Who knows?
I mean, he lasted 5 years. I lasted 3 years. Most of us geniuses last 3+ years before we realized or hit the bid on a Sosnoff
You and JJ
offer.
kept turning me down, but honestly, you and JJ were not in the genius category. You were in a different category.
Just slightly below?
Just slightly below.
Almost there?
Yeah. Anyway, let's do it. Let's see what we got, John. A little volatility discussion this morning. Short versus long-term VIX products, a comparative analysis. Let's go next slide. With the popularization of shorter-term trading, 0DTs, weeklies, we are curious if shorter-term volatility products, this person asked this just in confirm and send, like the VIX 1-day and the VIX 9-day, provide any advantages over the standard 30-day VIX. Everything we do on Tasty is defined by the 30 days out. That's how I shouldn't say every platform, but that's how we've written all our technology over the years, is to use the 30-day out. That's kind of pretty normal, common, 360-day year. Nobody uses just trading days. 360-day year, 30 days out for volatility.
Yep.
To figure out expected move. Mm-hmm. So to evaluate this, we compare the CBOE's volatility indices across different timeframes, 1, 9, 30, 3-month, and 6-month, to see if there's any meaningful differences. Let's go to the next slide. So the shorter-term VIX tend to have a wider range because they're more sensitive to market movements. That's why you see some of these really huge spikes in the 1-day and the 9-day, as opposed to the VIX itself, because obviously the shorter term, there's going to be more, immediate next day uncertainty. So that's kind of a pretty clear picture of that. Next slide. So these VIXs all have a high correlation with each other, of course, but the correlations between the VIX 1-day and the longer term ones, the 3-month and 6 months, are slightly weaker. This suggests the VIX 1-day can tell us some unique information that other VIX indexes don't show. We do track the VIX one day, but just kind of for fun more than anything else. The correlation of the VIX one day, to some of the other VIX indices is pretty low. It could be 0.52, to the regular VIX. Mm-hmm. So 0.54 to the 3-month, 0.54 to the 6-month. That's pretty low. Everything else is really highly correlated. I love these correlation graphs. I
know you do.
They tell us a lot. Let's go next slide.
It's a great visual.
So the IV-HV, which is the implied versus the realized, which is what may happen or that what did happen, is how you describe that, decreases as the duration of the VIX gets longer. This means short-term VIXs are more likely to mirror realized volatilities in shorter duration trades. Of course, because everything's going to be more accurate in the shorter time frame. So you can see right here, we kind of the 9-day versus the VIX versus the 3-month versus the 6-month. And the correlation, obviously goes down the longer you go out in time.
Sure.
It has to.
Sure.
But there's less edge, just so we're clear, in the shorter term. That's why the overstatement's actually less. Let's go next slide, because it could be priced better. So IV tends to be affected by investor sentiment, which could explain why short-term VIXs are more mirroring realized volatilities. Shorter duration VIX indexes are another tool you can add for your 0DT and short weekly option trades. Despite this, the amount they overstate is consistent no matter the time period, meaning selling options overall still presents strategic opportunity, regardless of the time frame. Next slide. So finally, some other volatility products to look out for are the indices for different markets. So we decided to put up, so you guys can write this down, but the core volatility indexes, so EVZ, which is the euro, GVZ, which is gold, OVX, which is crude oil, VXN, which is the NASDAQ, FVX, which is the Treasury. I didn't even know that.
I didn't know that one either.
And the 20-year Treasury is VXTLT. I did not know that either. You write these down?
Sure.
We need these.
Actually, you know what, John? Could you give me a screenshot of this? I'd like to post it on my refrigerator and here on my desk.
Well, I didn't know that
Please.
I didn't know that we had a volatility index for the 20-year for 20-year TLT. That's kind of cool.
Yep.
VXTLT. Okay, now we know. The other ones I knew. Let's go next slide.
So you knew about, what, 15% of them? Is that what you're telling me?
I
needed to know that
80%. Some of the most commonly traded underlyings also have their own volatility indices. Using these along with the regular VIX can give you more information when placing a trade. So I didn't know about all these. I knew Apple had VXAPL. I knew Amazon had VXAZN. Google VXGOG, and IBM VXIBM. I did not know there was an emerging markets VXEEM, or the EFA, which is the European index VXEFA, or lastly VXEWZ. These are not tradable, but they're just they're indicators that show you how what the volatility is of these different ETFs and stocks. Apple, Amazon, Google, IBM are all stocks. Let's go to the last slide. So as part of the takeaways, the short-term VIX, meaning the 1-day and the 9-day, react more to market moves and to show slightly weaker links to long-term VIX, giving unique signals for short duration trades. They track the realized volatility more closely, making them useful for 0DT and weekly options. And all VIXs tend to overstate volatility, so selling premium remains viable regardless of the duration. Adding other market volatility indices along with the regular VIX can give you more context for trades. And I think that's really fair. You can, you could default if you wanted to certain VIX indices if you started to follow them. But just knowing they're out there is kind of good, no? It's good to know.
Yeah, I think it's great to know. I mean, something's,
good to know.
Money, so definitely good to know. Totally agree with you. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell next. Back in 90 seconds, it's Tasty Live.
world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
do that.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. The opening bell is imminent. E-mini S&Ps making new highs, starting off up 20 and a half handles. High is 64.90, trading 64.89 without a downtick. NASDAQ up 103, Russell up 17, and Dow up 160.
Perfect. It's the perfect storm.
You got them right where they want them. Ilya has them right where they want them. Everybody's got them right where they want them.
Ilya covered.
You've already sold some, though. I mean, you've been putting your money where your mouth is.
Ilya covered. I have them right where I want them.
That's right, because they broke out. I forgot.
They broke out.
Yes, I got it.
I am going to...
Bonds up 21 ticks. You could have been a hero.
I am a hero in there.
I know. But
I haven't sold any yet.
Bigger hero.
Could have been a bigger hero. I haven't sold it yet.
You could have been somebody. You could have been Sosnoff of old.
I'm having
You could have been Sosnoff 1990.
I have an offer in to sell NVIDIA over 183.10. We're closed last night. I'm bearish in NVIDIA today. And
NVIDIA looks like it's set to open down small, but you never know with the market being up so much. I would not be putting my offers in below the closing prices.
No, I put it in above the I put it in above the close.
I'm telling those who might not know.
And I want to sell more NASDAQ futures. I'm going to put an offer in right here. I think it's time, but I'm going to put it in slightly above the market and see if I get filled.
My Taiwanese sources just told me the top 10 stocks in the S&P make up 40% of the S&P right now.
Okay.
We talked about
It's okay.
frothy. That would be frothy.
Concentration of wealth, froth, whatever. But the reality is,
doesn't matter.
It doesn't make a bit of freaking difference.
You're right, Sadnov. It doesn't make a freaking difference. You're 100% correct. I totally agree with you. Well, there you go. Spinning out of the turn, Sadnov. The only thing you're going to be looking at is CRWV. You probably have something working if I know you, because you're a crafty little beaver that way.
Crafty. We sold it at 91 cents.
CRWV had a $20-some-odd expected move. It is down 11%, $16.80 with some wide markets. You're in the 3-day options. You should be doing okay in there. Let's see what's being a bucker here. Kava down another $18. So
oof.
7% move. 7% move on.
Please, Hammer, don't hurt him.
21% move on the overall stock. The C stocks. I don't know if you have to stay away from those. Those are bad today. Kava down 18. CRWV down 17. CRCL down 8. Target down 2. Goldman Sachs, the evil empire, down $1.60. Followed by Walmart down $1.30. That's it on the high option volume list. Sadnov. Everything else is to the upside. Let's go to Coin, up $12.
Oh.
Lilly, up $10. Netflix, up $9. AMD, up $6. Hurt Me, your beloved Baba, up $4. Palo Alto Networks, up $4. CVNA, Carvana, up $4. MSTR, up $3. IBM, Sadnov, been in the doldrums. It's up almost $3.
Yeah,
it's
IBM.
A coin roll. Nothing happening in Carvana.
IBM.
I mean, in your CRWV yet?
CRWV, I am bidding below the market.
Below the market. Got it.
I mean, I sold this spread at
around $1, 92 cents, 98 cents.
Yeah, and I'm trying to buy it back at. Well, I thought I could get it back.
I mean, really, you could just be looking at the puts, right? Ooh, you.
I don't like that trade.
Oh, you sold your NASDAQ futures higher.
Yeah, I never like to
roll ups. We never like when you put it above the market and you get filled after you're already short, right? You love it when you put it in above the market and get filled if that's an opening trade, first one that you've ever done, right?
Yes.
Understood.
I'm trying to get filled in CRWV, but nothing done yet.
Markets a little wide in there. Why don't you
markets are wide. I don't think they come for the. Yeah.
Well, your 220 calls are at 2 cents, so why don't you just concentrate on the puts?
Where are they?
Your puts are. You're looking at which ones are you looking at there? You're looking at the 100 puts. Did you just get filled on the whole thing? No. Your 100 puts are 17.20. You gonna be all right with that? I mean,
I'm gonna be all right.
You know. You got a 70-cent profit or something like that? You okay? Sorry, you want.
I have other.
What did you want? 89 cents? Is that what you want? I mean, you sold it for 92 or 3 cents. Let's just call it. I mean, what did you want? You gonif.
I'm done.
Oh, you paid 21.
70 cents.
Squoze you for the 3 cents.
Yeah, I just got to get out. Move on.
I understand. Sold your Nvidia stock too, 83.5.
Oh, I did sell Nvidia.
Yes, you did, my friend. Yes, you did.
Well, I said I was going to sell Nvidia above the market, and I did. So. There are so many stocks to me that seem so redunculous right now.
Mm-hmm.
There are so many. I can't even, I don't even know where to start.
But okay.
I don't know where to start.
Alphabetically. I would start alphabetically.
Yeah, I'm thinking about which one.
It's usually how you roll something, so just start alphabetically.
RBLX, I want to short that. I mean, I don't even know where to start. Meta.
So if I told you about volatility rolling last week when you asked me what's the market going to do, I said the market's going to stay bid until volatility rolls on Wednesday, and then, that's today, all bets are off after that. You might get a little bit of a down move. You got volatility down 20 cents right now, Sadnov. Key on /VX. You get a little bit of a bid in there. Everything might come to fruition that the bat spoke about as represented by Gronk, because that's what I like to call it.
I got some meta off. That was easy, but I missed RBLX. Selling a little stock this morning. I don't usually sell stock, but that's how much conviction I have.
Well, that is a 1-to-1, no gray area there, right? I mean,
Yeah.
It is all delta.
So far, no bueno.
No, you have to get filled to be in there.
Missed the RBLX, though. It's too bad. Let's see what else do we got here to see if there's something else I want to. So problem children this morning, other than the indexes, man, I got to tell you this ETH ETF, it's been dark.
Yes, it has been.
Yeah, this ETH is like insane. It's up to almost 36, that ETHA. Yeah, Coinbase is out of control. Let's see what else.
I mean, look at this move you just mentioned at ETHA. Ivy rank at 84, up another $1.50, another almost 5%, 4.5%, new highs in there. But Ethereum has had a big move up, mirroring that. So,
ETH is just insane.
Yep.
I mean, where's it trading now? Is it 4,500 yet?
Ethereum?
Yeah.
47.5.
Oh my God. 47.5. Okay, I got to get out of some. It's time. Let's go.
It's time. Then we
Trade.
got some. You're talking about longs now here.
Right? Yeah. Crypto.
Bitcoin 121 and change.
Yeah, time to get out of a little ETH here. All right, a little bit. I just nibble at getting out, and then if it drops down, we'll buy more. S&P's 90. I mean, I think they're going to trade 6,500, so I'm going to hold off on the S&Ps.
Beautiful.
I don't know if that's the right move or not, sir.
Well, time will tell. Time will tell.
Time will tell.
Are you completely out of your Ethereum now?
No, not at all.
Gotcha. Just trying to figure it out.
Trying to adjust some live cattle now to show you how
multi-faceted and
multi-talented I am. Rolling up some puts in live cattle.
Sadnov, you just went from the CBOE floor to the CME floor in a nanosecond.
Yeah, that's one of the coolest things about today's technology.
Back in the day, that would take hours. Legit.
Let's take a look here. So we did short some Meta. I just want to go on record as saying we are about to take almost $2.50.
Meta down $1.40 and change. You sold it at $7.90.
Took $2 out of it.
Took $2.20. Don't sell yourself short.
It's a pretty good trade for me. On a scalp.
Great trade for you.
On a scalp.
In 3 minutes.
Yeah. I want to sell more.
The best thing you've done in your wife just texted me. She says the best thing you've ever done in 3 minutes. She has a lot of experience with 3 minutes. So it's great. Good on you.
You wouldn't be lying.
Omaha.
John.
Very possible she made that call.
Good job out of you.
Hell do I got going?
Sadnov, absence of sellers again?
Oh my God. The opening today is an absence of sellers. Spoo's 94. Haven't touched any of the
Spoo's 94. You're talking about 64.94, just flirting with
64.94. Haven't touched any ES, up 26.
Sold a little bit of NASDAQ. NASDAQ was the best two-sided action, if you want to say that. I mean, it went red on the day there for a second. You had no opportunity if you sold even the S&P.
I mean, some stocks are just Reddit, Coin, PLTR. I mean, everything. Just
every day is a new dollar.
It's crazy, but okay.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. Sadnov, what's your assumption coming up next? Our viewers came up with trades for you. This is going to be interesting. We'll be back in 90 seconds. Tasty Live.
In the world of investing, investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means. We got more Tasty Live with, what's your assumption? And sad enough, I just looked at the volatility futures. And the VIX to see when they roll. And I don't think they roll until next week, sad enough, August 20th that I have up here. Those would be the monthly VIX options. So you may have another week of this misery.
Oh, I'm looking to see what is happening here. That's crazy. Stuff moves around, man. Stuff is moving around today. Anyway, it's 8:44 in the morning. Let's see. S&P's up 25. NASDAQ kind of in crash mode, only up 107. Dow's up 250. Russell's up 15. Yeah. Unbelievable, as they say. The game continues.
Unbelievable.
Yeah. Vol's down 30 cents. Bonds up 21. There is no hurdles on the horizon. Go get them. Trying to catch up on everything. Let's see what we got here from our customers. Let's have some fun today. I'm ready. Down, 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 down. Let's see what we got. I want to say I need some new trades, but I need good trades.
Let's do it.
Sin. SCYN. Sin, right? Think?
You're asking me? I only went to high school. You went to college.
Columbus, Ohio. GMed. I got to tell you, I do not know, Tony. GMed.
Never heard of it.
Me neither.
Let's take a look at it. IV rank of 28. Global medical. Doesn't really matter to me. Does not have weekly options. That's kind of a telling me that's not as liquid as I would want. And then I go to the option chain and you see option markets that are $1 wide with no volume. I would abstain.
Dollar wide options, no volume. Unprofitable company with a market cap of $91 billion?
Yes, it was on its tookus, as you would say, $52 back on August 6th, as of just about a week ago. It's now $62, just under $62.
$91 billion in market cap seems way too rich. In addition, the CEO...
You would be selling it on a huge uptick the last couple of days.
A gaming platform expanding into dating seems unnecessarily risky. Well, here's the whole issue with this, Sin, is that I do see how this stock has rallied, and this is the kind of trade where, like, this is called what's your assumption, because we got to find stuff to do. And when I go to the option page, and let's say I wanted to get bearish, let's say I wanted to get short this stock, which is what you want to do, and I'm cool with that. Let's say I wanted to buy a put spread, like the 62.5 puts, which seem awfully cheap in here, given how volatile the stock is. Do the 62.5 60 put spread. On my screen, this shows it trading for $1, which to me would be, I mean, it's a very wide market, but it would be acceptable. Just do a little price discovery here. It feels like that would be an okay trade to, I mean, it doesn't feel like the craziest price. We start a little lower. But I kind of feel like in this stock, if you want to do something in here, you're probably better off just getting short the stock. What do you think, Tony?
Sure. Now, it's not a hard to borrow stock, so that would be the only thing that would stop me from doing that. So sure.
Yeah, I mean, I'm looking at this thing like, okay, maybe this is just I'm going to try one more little price. I kind of feel like this is the kind of stock where, like, it's only traded 41,000 shares. The option markets are wide. There's a little tiny bit of volume in the in-the-money calls. I kind of feel like this is one of those stocks where you close your eyes and you take a little bit of a shot, and you sell some stock. I'm going to do that just because I have no idea what this stock is, and I'm going to put it in between the markets, and let's just see. Let's see if we get filled.
That's good.
Let's do it.
Even the S&P's up 30.
Even the S&Ps are very close to 2,500.
64.99.
I'm sorry, 6,500. Oh, GMed, I just got filled.
You did at 61.87.
Yep. Okay. Well, we're going to see what happens here. The S&Ps, I said I'm going to sell them if they get to 6,500 because I got to have that print in my scrapbook. Let's see what happens.
I'm ready.
Oh, Coinbase, you're going to be the one that takes me down today. After all the hard work, After everything I've done for you lately.
Bad things happen to good people. Coinbase up $20. Bitcoin back up to 121.4. That's a...
Let's go to the next slide, John.
Flirting with highs.
99.64.
Roof balloons.
64.99 and change.
64.99 a quarter. The high is 50.
All right, let's go.
You can't even hit a couple of stops like the old days. You
I
know,
know.
like, you know, if 6,500 is around
From
number.
Shreveport, Louisiana, which I've never been there.
I'm sorry, the middle of my sentence got the beginning.
Well, we're trying to move forward on a show. We have Austin, and he's doing JD. JD.com.
That's right. And I know why you're trying to do that, because today's Wednesday when we have my man Nick Batista coming in. That's right. Johnny Trades. Got to save time for him. Don't want to squeeze his segment. He's one of the most popular segments on this show. I agree. So
according to the Batista family. But statistically, no. But the Batista family, yes. JD, S&P is filled at 6,500.
I got a screen. I didn't want to slow down the show.
Got it. JD.com. Let's see what does he want to do here. He's bullish. Stock has been in the, I guess, the crapper would be a nice way to say it. And Austin wants to do an earnings play. When are earnings in here? The 14th. Is that tonight?
Well, today's the 13th, but the 14th would be tomorrow. And JD has earnings tomorrow before the close. So yes, Sosnoff, this would be an earnings trade.
IVR is a little low. We're actually
17, I would say, is a lot low.
Yeah, we're actually long this stock already. We're short the SEP 31 puts and the SEP. We're basically short the SEP 31 puts.
Basically, you're correct.
We're long the November 30 calls, short the SEP 33 calls. So we have a long diagonal and some naked short puts in there. You want to do an earnings play. What's the play for earnings? Low IV. You know, I mean, I'm going to be bullish in here just like you are. There's not a lot of juice. Stock's 32 and change.
Mm-hmm.
The expected move is 160. I mean, if you go down to the 31 puts, you're only collecting 35 cents. This is a tough one. I think you got to go out to SEP in this case. Normally, I would say no, but now I think you got to go to SEP and you got to sell some SEP 30 puts and just hope. I mean, that's my only play.
That's my only play. If that's your only play.
I'm working them at 61 cents. There's just not a lot else in there. Not a lot in there. Let's just see RBLX because I'm working some orders in there. Ooh, no, it's down 250. All right. Right call. Didn't miss it. Let's go to the next slide. Adobe from Altair from Cyprus.
Adobe.
He's bullish in Adobe for September. Good IV rank. Stocks at its lows. Good time to get long. Sell the 290 puts. ADBE. This could be an expensive stock to sell some puts. It's up $2 and it's up almost $3 today, which I guess is not huge. This stock is a stock that is just off its butt. He wants to go out to September and he wants to sell. The expected move is $35. The stock's trading at 340. Let's say you went to the 300 puts. JD.com, we got filled.
JD.com got filled.
Let's say we sold the 300, 295 put spread. And
let's say we did that.
I mean, you're going to get about 90 cents. You're going to get about, well, yeah, I don't know what you're going to get. Probably somewhere close to 90 cents, maybe 85 to 90 cents. Let's try. Do a little price discovery in here.
Price discovery we're doing.
Yeah, I'm just going to see like.
I'll tell you, only down in nickel stocks.
I know. It's going to be the highs will be in place today.
Interesting.
I'm working this Adobe Altair just to try to get something on here. Sell the put spread, the 85.90. I think it's going to trade around 85 cents, 86 cents. I just did a little price discovery. We're going to do a little more of the spread in a little bit. Mm-hmm. Stock's up a lot today, though, so I'm just waiting to see. Let's go to the next slide.
Adobe.
Jack from Philly. Hold on one second. We're going to just cover.
Jack from Philly.
We're scalping a little meta today. That's all.
Look at you scalping from the short side at all-time highs.
Great.
Talk about a man born to die.
Jack from Philly, SPX neutral, another 0 DT trade. We did yours the other day, Jack. It didn't work out. It's a little early. I will tell you that. SPX, we tried the other day, but it did not help us. Let's do 0.
Tried but failed.
Well, I tried as hard as I could. And I did everything he said. 40 Delta Iron Condor. So 40 Delta put, 40 Delta call. And we're going to go a little bit wider. We'll do 30. $20 wide, 65, 45, and we're going to go 85, 05. All right, Jack, give me 1 second here. We're working it. We're working it, boss. They're taking more juice out of it faster than I can change the prices.
Faster than you can shake a chicken at it.
I know. I don't like this. Since I put it up on the screen, Jack, they already took a lot out of it. I'm trying.
Yeah, you're in the 17 handle, $7 and change.
Yeah, this is not.
It's going under 7.
This is not good.
Down goes Frazier.
Yeah. I mean, I really did try. It was 7 1/4. I'm at 7 now. Nothing done. Let me work it for a second, Jack.
Holding it.
I feel like the spoos are going our way a little bit, so it's good.
I mean, the S&P's up 26.
I can cover for 6 points, Batista.
You certainly can. You certainly can.
Certainly can. Certainly should.
9 cents.
Well, I'm more interested in being short the other one, so we'll see. Hold on, let's see. Yeah, we don't have a lot of profits to work with here.
No, we don't.
Oh, hold on. Wrong thing. Of course, as I always do. Oh, filled.
Oh, look at you.
All right, taking a little profits in the ES.
Taking a little profits in ES?
Yeah. Took almost 5 points out of him and also got the SPX trade on for...
Beautiful.
For $7.
Beautiful.
And the NASDAQ futures that we sold earlier just came down about 50 handles. So that's good.
Beautiful.
Good feeling about this, Batista. Good feeling today.
Do you now?
Let's go to the next slide. All right, Jack, we're filled. Mark B from California is looking at CRM. Salesforce is a PIG pig. Not sure what's going on with my stock. You can sell the 200 puts.
Try to sell the 200 puts.
Glad Mark is so confident.
Bonds up 24, Sosnoff. New highs there, 115.14.
No surprise.
Bitcoin up 2,400, 2% move to the upside.
No surprise in bonds. And let's just take a quick look before I put this up here, because we sold a bunch of NVIDIA stock earlier. We're going to take some profits right now, or try to. Missed it. Oh, there you go.
Oh, that was easy.
Took a little profits in NVIDIA.
Man.
Let's go back to this CRM. Sorry, we're just scalping around everything this morning.
You finally got some movement here.
Yeah, a little bit. A little bit here and there. CRM bullish.
Yes, also, right? About
Stock's up 49 cents, and Mark wants to sell the SEP. And CRM he's right, it is PIG pig. It's gone from 280 to 231. It hasn't had an uptick. And this is one of those stocks that's kind of, what does he want to sell, the 200 puts? Yeah, not a monster fan of CRM, but I completely understand.
CRM up 11 cents, earning September 3rd, IV rank of 64.
251. We'll roll with you here, Mark.
You sold the 200 puts.
Let's go next slide. Matt from Spokane, Washington has got DOW. Man, we don't trade Dow Chemical very much.
Spokane or Spokane?
I don't know. What do you say?
I don't know. Tomato, I guess.
Spokane or Spokane? I don't know. I've been there.
I've been there too.
22.44. Dude's bullish in there. Going to sell those 20 puts.
Dude's bullish.
Going to sell those 20 puts. Going to sell those 20 puts for 72 cents. I wish I sold those 20 puts for 72 cents. They're 50.56 right now.
Mm-hmm.
That's a tough pull for me. I mean, we can do really small in here. I don't even know if you get filled at 53. I don't know. Just to see if there's something. We'll throw an order out there just to see if we get filled.
Chum the water a little bit?
Yeah, exactly. Chum the water. Let's go next slide. It's a tough one. Filled, Matt.
Chum in the water gets filled and down.
We sold it, but it was just small. We'll do some more. Jackie W. from San Juan del Sur, Nicaragua. You are the first person to write in, Jackie W. from Nicaragua. What do you think, Bat? First person?
It has to be. BR, and first person to ever recommend or look for BMNR bullish. I hope you did this trade yesterday. It's up 7% or over $4 today. So good job out of you, man. It's a bit mining company.
Oh, yeah, this is the stock that was BMNR. Yeah, no, this is Vanetta was talking about this. It's already traded 27 million shares. This has been all over the place, bullish. Oh, Jackie, this is a tough one. They had no out-of-the-money options yesterday. Let's see what they got today.
They got up to the 105s, but you got wide markets in here.
Yeah, but they finally added more contracts today. What do you want to do? ETH to 8,000. I guess I know what you want to do.
I mean, it's up $4 today, so good on him.
Yeah.
Hope you did this trade yesterday.
I sold some ETH actually this morning.
You sold some closing positions.
Yeah, closing.
When you say I sold some.
I mean, dude, I'll do some. I don't know if Jackie's a guy or girl. I don't know.
Does it matter?
I'll sell some premium in here with you. This is a crazy R stock. Boy, what do you think? I think this is a ratio spread candidate.
All right, I'm with you.
Are you?
Yeah.
I think you buy the 80 calls. And
you're going to do this in September? I mean, this is the type of stock I love to do ratio spreads on. I mean,
I think you buy the 80 calls and you sell
105s.
Can you not?
$1.50 credit brings your break even $25 higher than 105. So you're up around 130. You got expected move of $22. The stock's $67. Your break even's 130. Kind of like it. Now you could have done anything like this any other time and it wouldn't have worked, right? I mean, as the stock continues to go higher quickly, that's the worst for you.
All right, I'm trying to get this filled. I haven't been able to fill this.
What are you looking at? 8105, like I said?
Yeah, 8105. I'm working the ratio spread in there, 8105.
I mean, the 80 calls are 90 cents wide. That's your problem.
I know. Let me just keep working it, Jackie. We're going to try to do a call ratio spread in here. Give ourselves a little bit of a little tiny bit of upside. Let's take a quick look for a second at NVIDIA. We're going to buy back the rest of our...
It's funny. Now that you look at it, they make the mid-price.
Buying back the rest of our NVIDIA short
spread now. It was $1.50 before. Now it's $1.20.
I know.
I mean, it's because the market's down. The 105 calls are $1.70 wide. You got to forget about it. Good cover in NVIDIA.
Yeah. We're also going to buy back just a tiny little bit of the NASDAQ futures we sold this.
Oh, my God. I can't wait till you say, Bat, I had them, and I wussed out. I can't.
No. Just a tiny
bit. Mark my words.
Just a tiny bit. BMNR. We're going to go to the next one and we'll come back to this, Jackie. I'm not filled yet. Sorry, we're doing a lot of stuff here this morning. Let's go to the next slide.
A lot of stuff besides just what's on. What's your assumption? So good job out of you.
PLTR Kevin from Stockton.
Oh, guy, you're a good multitasker when it comes to trading. Everything else.
You should take a lesson because this is what we're going to be doing on Friday, and I just need you to be able to multitask like that. Boom, 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 like all these different things. You know.
You know what? Maybe I'll sit back and watch somebody else do it, see who you got there, be a little bit better than me, so I can learn from them, so that when we go out on the road, I can be even better.
I just want to try one more thing. I like this trade in BMNR, and I want to fill it.
I know, but markets are way too wide in there. Those 105 calls, now they're 20 cents wide. The 80s are, now they're 30 cents wide. Now you can get a fairly accurate. There you go, $1.30.
Better than I thought.
Good job out of you.
Better than I thought. $1.30
on a downtick, which is really
on
a short
downtick.
melter trade here.
Yeah, I kind of
again, now, better than he thought, only because he had watched the pricing before this, right? I mean, like, that came a little bit of...
better than I thought. PLTR Kevin from Stockton. I don't know. What do you think about buying a calendar or a...
You picked these guys off, sounds
diagonal spread. I think I picked them off.
Just teasing.
Ivy rank is 10. I'll do a put diagonal in here. No problem, Kevin.
You picked these guys off, Southern. They're saying $1.27 bid right now.
Yeah. Let's see. I'm going to do a put diagonal. I'm going to buy in October. I'm going to buy in October.
Going to attempt.
Ooh, this is an interesting one. How do I want to do this? The stock was up $4 this morning. Now it's back to unchanged. I'm going to buy the OC 175 puts.
Attempt.
And I'm going to sell the... Ooh, the question is, do I sell the SEP 180 puts? Or do I'm going to do the calendar. I'm going to do the 175 calendar. And it's going to be $3.50. I kind of like it.
Mm-hmm.
I debated Kevin back and forth, but I went with the calendar spread. Filled it at 347. Let's go to the next slide. Oh, Mike from Akron is trying to trade Cisco in the weeklies. I think you're doing it. It's tonight, right?
That is correct. Correctamundo.
They have earnings tonight, Mike.
After the close, you are correct.
$71 stock. Nobody's ever made money in here on an earnings trade in the history of the world. It's a $4 expected move. What are you, bullish, bearish? He's bearish. All right. Earnings trade. Mike's bearish. Stock, $4 expected move. This stock it's kind of at its highs. What do you want to do, Mike? Stock 71. Tony?
Yes.
Stock 71. Want to sell some 75 calls?
CSCO has been going up just like the market. It has a correlation of 0.51. Sound enough. Ivy rank of 52 is pretty good. What are you doing?
Sold some 75 calls. I'm bearish in there
why
too.
Why not?
Why not?
Danger.
Live dangerously.
Danger, Will Robinson. Danger. What show?
I don't know.
Lost in Space. Come on, the robot.
Yeah.
Danger. I mean, when your dad allotted you 30 minutes to watch, that was one of the shows.
I didn't watch Lost.
You watched it. You had a T-shirt with it. I remember seeing a picture with your mom showed me.
I never watched
the T-shirt of Danger Will.
Let's go to the next. I never watched Lost in Space.
Yeah, you did. It
was really for losers.
Simpleton.
Jeff from Miami. Q's, Sepok, call calendar, Ivy rank lower. I'm really bearish in the Q's. And you want me to do a call calendar at the 581. I'll do a calendar in here. Ivy rank is 9. I'll do a Sepok. I'm going to do the put instead, just because I want to get a little bit, something a little bit bearish in here. I'll buy the OC 570s, sell the SEP 570s. Kind of like this trade.
Yeah.
Wanted to do it anyway. Let's see, SEP 570s. It's expensive. 405 sounds really expensive.
Yes.
Yeah, I'm not loving that trade. I'm not loving these prices for this calendar spread because the volatility is so low. $4 for a Q calendar spread. What's the front month trading for right now?
Q.
What's the August SEP?
August 15th, 2 days to go? No, you don't want that. You want
I want the August 15th, 2 days to go.
17 versus September 18, basically.
Yes, and I want the 570.
And you want what?
The 570. What's it trading for?
570 put. You want to sell? I mean,
the August SEP 570 put.
Yeah, those puts are less than 40 cents.
I know. What's it trading for?
SEP 570s are trading $5.90.
Oh. Okay, then it makes sense. I was
You
going to
thought
say.
the pricing was off for some reason there? La Commandante?
I felt like the pricing was. I felt like it was too expensive at 405. And
per K?
I don't know.
Oh, okay.
Now it's going to trade about 407, 406. All right, 406, Jeff. I took a shot because the front month pricing was fair.
So you weren't going to trade that front month. You were just looking at it to see how it correlates to a positive trade in the back month that you did. You did SEPAC, to be clear.
NVIDIA down $1, Meta down $2. We had that right. And Roblox, the stocks all looked weak this morning. Roblox down, almost $4.
RBLX was just up a moment ago. You quoted it.
No, it never got up, I don't think. It's gotten close to unchanged.
I was thinking Reddit. I'm so sorry.
All right, Jeff. Thanks. Perfect. We did every single trade.
It is still up $1.90.
Yeah, we did every single trade on the board. GMed, we sold naked stock. I don't know what that is. JD, we sold a put for earnings. Adobe, we sold a put spread. SPX, let's take a look and see how we're doing. 15 minutes later, SPX trade. It's up not quite 10% yet. It's up 5%.
Beautiful.
We will wait.
More importantly, Sadnov, 10 for 10.
SPX trade up 5%.
Talk about a shining star. You're going to go someplace.
The Dow trade, we did every one. BMNR, we did a ratio spread. PLTR, we did a calendar. Cisco, we just sold a naked call for earnings. And QQQ, we did a put calendar spread, not a call one.
Beautiful.
We are going to cover some more NASDAQ futures. They've dropped almost.
NASDAQ up 45. They dropped about 180 handles? 80 some odd handles?
Yeah, we saw them at 50 and 40. Yeah, 60, 80 handles.
Yep.
It's a good trade.
I just went from the highs.
Yep. Okay, cool.
Awesome. Let's take a quick 90-second break, Saad. If you want to know why, we've got a skinny on options map next without Jacob. This is going to be disastrous. We'll be back in 90 seconds. Watch this train wreck. After this, we'll be back in 90 seconds. BSP's up 22.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I started trading around 2018, soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets is the biggest takeaway. And that's kind of just the overarching principle I follow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tomas, we're back, my friend. You know what that means. Time for a little bit more Tasty Live with a, what do we have coming up here, John?
A market measure.
A market measure. That's right, Sosnoff. A market measure. Even the S&Ps. Can we talk a little bit about the market here? Even the S&Ps off of their highs. Highs were 65.02, as foretold by the great one, Tom Sosnoff. They're 64.90, up 21 handles. NASDAQ up 52, Russell up 21, Dow up 395. Everything off of their highs. Volatility unchanged, Sosnoff. Somebody here said wait for volatility to be higher while the market is up. You're kind of getting that right now, Sosnoff. Volatility staying bid. I'm not seeing the whites of their eyes yet, but bonds up 26.
Yeah, I'm definitely not selling any bonds yet. Coinbase.
Bitcoin up $2,400. That's a big move there. Ethereum actually down $8. Ethereum's been the leader of the clubhouse to the upside. Bitcoin up 2% right now. Starting to see a little bit of cracks. Sosnoff starting to be a
little tiny.
I know.
Coinbase dicked me around today.
Yeah, well, that's because Bitcoin is up. But yeah,
No. It was up like 20. Now
it's up 11 and change. Yeah. Coinbase traded all the way up to 322. Sorry, Coinbase closed at 322. It closed. I'll do this from the beginning. Got as high as 345. Sosnoff. It's 333 right now.
Okay. It's 9:17 already. Sorry, we're running a little bit late. A lot of stuff going on this morning. Only because I can't watch.
What did you do here in SPX? Is that the?
We had to I had messed around with the position a little bit, so just took a little profit.
You know you're imbalanced there by a large margin, right? Did you look at your fill?
Yeah, it's fine. Flat, right?
I didn't look at your over position. I just assumed that you wouldn't be. Yes, you are flat. You did the right thing. I missed the mistake that you made numerous times. There
was no mistake. It was an adjustment. I rolled down calls on the sell-off. Give it the program. Okay, listen. Let me just say, Tony and I are doing a live show on Friday. This is part of what we're trying to work out some of the kinks now. See, I move like lightning fast. And it's just like, what's that Roadrunner? And, I'm the Roadrunner. You're the Wile E. Coyote.
Okay, I'm going to push this through the way it is. And it's basically a 1/12 ratio. And 12 is on the put side, not on the call side.
1/12, you're talking about SPX?
Yeah. Yeah, that's why I asked you, are you sure you did what you did? And yes, you are flat. And yes, you did make a little bit of money. But you didn't do anything that you thought you did.
That's exactly what I thought I did. Thank you so much for your help.
Okay,
Anyway.
I'm going to push it through exactly the way it is because I'm tired of saving your ass all the time, okay? I'm tired of it. I'm not going to take it anymore, Sadnov. What movie was that from? I'm sick and tired. I'm not going to take it anymore.
I don't know what.
Anchorman, wasn't it? Or maybe I'm wrong.
Anchorman.
I could be having a Yogi
Network.
Berra moment here.
Network.
People don't even know who Yogi Berra is.
Network.
Was I right?
No, network.
What was it?
Network.
Networks. Same thing. That's what I thought.
Anchorman and Network. You missed it by 2 generations.
Couple decades.
But it's the same thing.
Network
It
in
was
like
a guy on TV.
Wasn't it Network in like the 80s or 90s?
70s, like 75, I believe.
75.
It was the same. It was two.
It's official, 76.
Was it? But it was 2 people on TV.
76 and Anchorman was when? Like 2015 or something? I don't know.
Whatever.
I mean, I'm just saying.
You can just say whatever you like. I'm going to push it through one by one
John?
by one. I'm going to push it through one by one by one by one because I don't want everybody to have a problem with it.
What did you say, John?
Let's talk about the open house tomorrow.
Are you excited about the open house, John?
John, will you be doing tours?
Are you going to be doing?
I'm going to bring people over to production so they can see what you do all day, John. Then they're going to report back to me like little spies.
Thank you.
This is a picture on the screen of our studio. That's our main studio. At Tasty, we have a handful of studios. We have a green screen studio. We have a podcast studio. We have an interview studio. And then we have our
casting couch studio.
Casting couch. I'm not going on the casting couch anymore. I'm telling you that right now. And then
I've carried you as far as I can. You don't have to go to the casting couch anymore. You're fine.
Yeah, these are our new studios that are in our office. And if you're coming by the open house tomorrow, there's a small group of people. We're looking forward to it. We have we've stocked the fridge for you guys.
I like it.
Open house tomorrow. You have to sign up in advance. tastylive.com/events. But that's to go to the live show. And then if you want to come to the office, it's support at tastylive.com. Just an hour. Just an hour so we don't disrupt the office too much. And then the show on Friday, that's the fun one. Tony and I are going to be there probably by no later than 7 in the morning. Doors open at 8. We have to set up, test the mics, do everything, get the screens all set up. Tony's got to clean up from the night before.
I was going to say, if you're by O'Hare and you see a GMC truck going across there and you need a lift, just get me right there. I'll be able to pick you up.
Traffic in Chicago is brutal at 8 o'clock in the morning.
Because we're doing construction. I mean, it's usually tight because of rush hour, but it is.
So leave yourself plenty of time. This is just on the south side in an area called Pilsen. It's right next to Chinatown. And it's a really cool venue. Talia Hall is one of the nicest music venues in Chicago. It's in a up-and-coming neighborhood, and we can't wait to see everybody there. Just leave yourself plenty of time. Doors open at 8. There's street parking. There's also some parking lots around there, too. And show starts at 9 a.m. sharp. We do not wait on this one. It'll be over by around 10:30, maybe a couple of minutes after that. And we have a couple of giveaways and a bunch of other stuff. Can't wait to see everybody at the event. tastylive.com/events to sign up. The event is full, which is great. There is a wait list, but there's a few people that are canceling, so for whatever reason can't make it here. So, you'll be able to, I'm sure, be able to get in. It shouldn't be a problem. It's a big weekend in Chicago, so if you're coming to Chicago, make sure you have a hotel. Every place is crazy, but they're booked. The Cubs are in town. They're playing the Pirates, giving away tickets. But if you want to go to the Cubs game, you should go because Wrigley Field's amazing. There's the Air and Water Show on the lakefront, and it is going to be up for grabs in this city this weekend. So hope to see everybody there. Can't wait for tomorrow and then Friday.
Beautiful.
All right. And S&P's right now up 21 handles. This is kind of where we were early this morning. NASDAQ's up 57. It's lower than they were early this morning.
Volatility's unchanged at 1850, higher than where it was this morning.
Yep, and I think we're still kind of in the midst of trying to figure out what's
We're in a
next.
little bit of tug of war here, Sadnov, but your absence of sellers are coming in a little bit.
Looks like the few sellers coming in. They're not selling the bonds today, so you don't want to sell any of those. They buy bonds and sell everything else.
Yesterday was the day to buy bonds, obviously, because they were
Yesterday was the
point
day, yeah.
lower, but yeah. Even S&P's up 18, Southnoff. Close on watertight doors, Val.
I know.
2 cents.
We're gonna continue to buy back our some of the NASDAQ futures. It's rare that we have a winning trade on an up day. Very rare, Tony, because usually that doesn't happen. Usually it's the other way around.
Of course.
All right.
Of course.
Let's do it. A little market measure.
Let's do it.
Take it. Phil. We've made 41 trades already today, so we've been a little active this morning with earnings and everything else. And exploring the SPX and the VIX at market tops. Now, I'm not suggesting that we're at a market top, but we're closer to a top than a bottom. That's fair.
Much like Tom and Tony.
Yes, we're closer to a market top than a bottom. We can't say
And we're at all-time highs. I mean, it's not a bold statement.
Nope, agreed. Let's go next slide. So as the market continues to climb, reaching all-time highs multiple times since the 2024 election, which makes our decade-long bull run look even stronger. Let's go next slide. The VIX is trading near 15, lower than the long-term average and the median, which are 20 and 18 respectively since 1990. Okay, so low VIX, high implied volatility. Let's go next slide. I'm sorry, low VIX, high market. We're curious about the relationship between the broad market and implied volatility at market tops. So we analyzed the SPX and the VIX data for the past 35 years, starting in 1990, this is before there was even a VIX. We had to go back basically and figure out, the S&P volatility. Let's go to the next slide. So we found two distinct decades with significant number of occurrences of market highs, 1990 to 2000 and 2014 to now. It's a lot of, look at all this. All the VIX occurrences and then the VIX at all-time highs. And we have the SPX price, so you can see it.
Yep.
Oof. Amazing run. Incredible run.
An incredible run.
It really is. Let's go to the...
America.
Let's go to the next slide.
Volatility up 7 cents. Even the S&P's up 14.
So we've known that the past decade has been one of the strongest bull markets ever, except for the 21-22 period and the beginning of COVID and the 16 presidential election. But the market's consistently reached new highs. I mean, of course you're going to have times, 2010, the flash crash, 2012, the economic defaults, 2016, the election, 2018, the short-term meltdown, 2020 pandemic. I mean, of course, you're going to have these little things. But the reality is, buy the dips because we've gone higher on every dip. Let's go to the next slide. There's two generations that have never seen a down move. Over the past 30 years, 8% of all the days have seen the SPX trading at all-time highs. Is that an incredible statistic?
Huge.
Over the past 30 years, 8% of the days have seen the SPX trading at all-time highs. The median VIX during those periods was 13.4, which is very close to where the low was in the 2024 election. Additionally, the VIX trading range during these periods is much tighter, about 4 points lower than on typical trading days. So when we reach all-time highs, the VIX trades very cheap. Not totally the case now. It's close, but not totally the case. You can see here we have number of random days, all-time highs, crazy number. And then you can see the median VIX, the high and the low. It's pretty wild just to look at the numbers. I just can't, I get blown away by that 8% number.
Yeah.
Let's go to the next slide. So as the recent market environment becomes more relevant, let's dive deeper into the SPX and the VIX relationship since 2014. Okay? And still, the percentage of days hitting all-time highs remains stable at 8%. But the median VIX difference is about 4 points lower. One interesting change in the past decade is the median VIX has dropped to 12.8, despite market volatility being elevated since COVID, which makes the time right now even a little bit stranger because, we're not really, it's a little bit stranger because the VIX is higher right now than in all these other times.
Yep.
So I'm not sure what that means. It's just a little stranger.
Mm-hmm.
Let's go to the last slide. So over the long term, 8% of the trading days have seen the market hit a new high. The median VIX at these highs is about 4 points lower on average than regular days, although we're not seeing it right now. The super strong market over the past decade has led to more frequent days with new highs. And since 2014, the median VIX during the market highs is 12.8, lower than the 30-year median, which is surprising to me because we are not there right now.
No siree, Bob.
Anyway, just an interesting piece with a lot of data, what happens at market highs. Not suggesting that this is a high, just it's all we know about.
Well, you could suggest that it is the high because we just made the highs. I mean, none of it's going to hold. Is that what you
right?
For sure.
Okay,
yeah.
fine.
Even the S&P's up 14, volatility up 5 cents, NASDAQ up 18, Russell up 20, and the Dow up 300 and change. NASDAQ's about to go red, Sosnoff. We'll be back in 90 seconds. We got more Tasty Live after this with Oh Joy, your friend and mine, Mr. Scott Sheridan, followed by what you've all been waiting for, Johnny Trades, immediately following these messages from our sponsors.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time, and I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk, I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, well, how much did I pay for it originally? As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the 4 little things as a
4 things.
One big...
The 4 little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
Be nice? Be nice.
The best part.
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field most likely before the game.
You're going on the field most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof.
You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live after
We're already
this.
out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. What comes up next? That's right, this man. Tasty Trade World Headquarters, your friend of mine, the very popular, very handsome, that's right, world traveler, Mr. Scott Sheridan from the Scott Sheridan Studios.
Thank you for the introduction.
You're so welcome.
Do you have to say as we were
I love the blue shirt.
As we were just coming in, and I was talking to Six about the segment yesterday where I talked about hunting housewives, the whole thing we're going through, and you're just looking at me like this, and then like 2 minutes in, you're like, oh yeah, I binged the whole thing last night. And she looked at me, she's like, how do you not remember that? I said, that's what I said.
You know, I'm not doing just one thing here, you know.
Multitasking while you're watching that?
I tried to multitask and play mound ball, but it didn't go over so well until after it was over. I tried to put it on pause. Didn't work.
She wasn't having that?
It was a lot of...
Do you have to cover your ears?
It's just...
Like, do you go throw up when you hear this?
I got to sit on the...
earmuffs.
Go on. No. Finish your story. There's
a lot of inspiration on that show. What's the name of the show?
New ideas.
Hunting Housewives.
Hunting Housewives, yes.
But I'm only...
Better than hunting wabbits. That's
I'm on the 3rd episode. I got to see. Right?
The deeper you get into it, the deeper you get into it.
Tom, this is where you come in and say, don't you guys have lives? Like, don't you do anything else?
I really don't listen to them anymore.
He covered his NASDAQ.
I'm not manly like that.
He's happy.
Or self-love or something like that. I have no idea what it is. I don't know what.
It's actually better. I'm actually happy that you don't watch shows because you would...
Because then you'd be an expert in that too.
Yeah,
he's already an expert
and then you
in
start
everything else.
binging, and then we'd lose you because then you get no sleep, because then you'd be up going, I didn't sleep last night because I had a binge. I was on season 5 and I had to get through the end.
Oh, thank God I'm not watching like seasons and seasons of this crap.
Right. Much better to watch TikTok.
I didn't watch any TikTok.
Chinese are rotting your brain, son.
Can we see your phone?
Last night?
Well, when was the last time you looked at TikTok?
Oh, you know what happened?
Oh boy.
My TikTok got corrupted because somebody hijacked my
account.
Yes. So I had to.
Seriously?
Yeah. No, I had to.
No, it happened to my daughter.
I had to uninstall.
No, it happened to my daughter. Somebody got her account. Go ahead.
I had to uninstall.
Your daughter and Sosnoff are going to the same sites.
I had to uninstall and open a new TikTok account.
Under a new name?
No.
So you mean you just had to change your password?
Yeah. No, I didn't. I had to uninstall the app and reinstall.
And then open a new TikTok, which means it's under a new username.
Yeah, I had a whole brand new username, new password.
Tony, can I have your glasses?
And you forgot the password. At least I stay on topic. At least I'm listening to you.
Can I have your glasses? I got to take them off and do this too. He just said to you.
I've taken you as far as I can.
He said change your password.
I have to get rid of it.
No, he said so you needed a new username. And you're like, no, new name.
I don't think I did, but I guess I did. Yeah.
I don't think I did, but I guess
do you have followers?
I seriously, I have committed a crime. I want you to be the witness.
Yeah,
but not many.
Okay, but they're going to take it, and now people are going to think it's you.
Of course, I mean, we don't have enough scammers that.
Yeah, but there are because somebody was sending. Somebody was.
I don't know. I'm not on TikTok. Was your username your name?
I don't remember. But somebody was sending around asking.
Seriously?
Would you rather hear what I did last night, Nick?
The mafia.
Your story's bad.
I was trying to. I guess I was ended up. I guess whoever the fake me was soliciting people to sell them, trading advice or something.
And you're not worried about this? You don't want to report it?
I did report it.
Oh, you did?
To who?
Yeah, to who?
I gave it to our team. They reported it.
Brittany?
What team?
No, Lindsay and the rest of the team.
And they're on it?
Yeah, they do it.
You must have the concierge service. I have to do it all myself.
Yeah.
How about you, Nick? You got to do it yourself. You have any problems
all day.
I've had it on
You signed up for the bougie service.
Problem on every app. If anybody ever sees anything from anybody tasty,
I got
something.
So the scam for me, is I get DocuSigns.
Oh, everybody does.
Yeah.
No. Like crazy things.
No, but don't ever open them.
Not opening them. It's
or
not,
else you'll lose your TikTok account.
I just got a DocuSign because I'm not naming names, but I know who they're supposed to come from.
Yeah.
I just got one from myself.
Oh yeah, yeah, they do that.
You shouldn't sell it to yourself.
But that's all it's like a pseudo.
There was one. It was so good. There was actually an email attached to it. It was an email with the DocuSign from me to, I'm not naming the name, but our finance department, saying I approve this charge. And I'm reading this going, and it was a firm. It was a law firm that we used in the past or we went up against in the past, but I'm not saying what it is. And I'm like, we don't use them. So I reached out. I'm like, what is this? I said, please do not approve this. He's like, they were going to approve it.
I get the ones from the Geek Squad, and they are really upset that they're not getting their $562 for the work they did on my computer.
And it's nice when they...
Or for the renewal.
Or for the renewal. That's right. If you don't call in right now, and then I get the phone
the
call.
old scams of just trying to sell you extended warranties,
Yeah.
those are done.
Those are
The
done.
new scams now are way better.
The phone calls, if you don't call in immediately right now, it's the last time we're going to reach you.
I keep getting the one I've been approved for $50,000 line. Call
Oh,
now.
nice.
Yeah, call now.
Look at you.
My Caesar's
bougie.
Palace.
No, I would that would be good actually. This is just I think just in general just a $50,000. I finally blocked the number, but I whatever. They just come up with new numbers. By the way, did you ever watch the? Oh, never mind. I sensed you didn't watch it. The comedy.
What's it?
Alex, whatever I sent you the comedy. It's great.
Alex, whatever his name, comedy? No, Sosnoff. I didn't watch that Alex.
I sent it to you on your when you were on the plane. Alex, I'll think of his last name.
When I was on the plane, I had him yapping in my ear.
That's why you watch
You had
comedy.
me yapping in your
Yapping in my
you
ear.
were
I mean,
fast
first you
asleep.
sat next to me. First he sat next to me, okay? And then I'm going to sit in my seat. He goes,
move seats.
no, wait. First I'm going to sit in my seat. He goes, that's my seat. I always...
You're on a plane. Excuse me, I'm moving. Go ahead. What?
First I get on the plane first. I'm in front of him. I go to sit in the seat. He goes, that's my
excuse
seat.
me, you don't get on the
I always sit... Yes, because I went in with you at the same time because
Wait
you're
a minute. I want
embarrassed
to hear. You
crap
always
out of me.
sit what?
So I wanted to sit in the aisle where I always sit. And he goes, no, I always sit in the aisle. So I figured, okay, I'm in the seat next to him. So I sit next to him. People come in, people come on. A person comes in and goes, to me, who I'm now in not my seat because I knew I was in the aisle seat because I read my seat thing. But I just figured Brittany got it.
sure.
First of all,
the guy goes, "You're in my seat." And I go, "Well, if I'm in your seat, then he's in my seat." Then we check. He was in my seat. He was in the aisle across from me. But he was so desperate to sit next to me and talk to me, he had to take my seat. It was disgusting. And then he would talk to me through the aisle. I got my headphones on. All I want to do is be left alone.
Oh, yeah.
I'm doing work. He just yap.
Doing work?
You got that?
Okay, that was good.
It's true.
All I'm doing is doing
Alex Edelman. I sent it to you. I sent you the link. It's good.
Okay.
You're gonna like it.
All right.
It's got some good Brooklyn stuff in it.
I'll watch. I mean, you have a lot of history with me, so you have a lot of.
Yeah, but you haven't liked my suggestions.
No. Your suggestions suck. But you have a
Hunting
lot of history-
Housewives?
What's that? Why aren't you playing golf with us? That's more importantly in Mexico.
Okay, I've gone through this. I'm bringing
me.
Well, I've explained to him.
I'm asking you.
I'm bringing the six. Six and I are going. So we're gonna go on day trips. Like we're gonna go tour.
Day trips?
We're gonna go. We have a driver taking us around.
Around where?
Can we come with you?
You're going to get kidnapped. You better have $25,000 cash with you at all times.
And that's just for you. we figure you get rid of the other thing.
The going rate
You know
is
what I mean?
25 grand.
It's not.
I asked Tony the going rate. He says 25 grand, basically.
If you get kidnapped?
Well, if you're a tourist and get kidnapped, 25 grand. 25 grand.
I didn't think Mexico City was bad. I thought like other parts.
Guadalajara, but it's only 15 grand. It's cheaper.
Okay, there we go. So do you need 40 in case you get picked off in both places?
Hopefully, I'm not going to get picked up in both places. But you need 25 grand cash.
Yes, anyway,
We're all going
if you
straight to
change
hell,
your
just
mind
so
and,
you know.
and you don't want to play golf, no, you need to play golf because you need to meet the new daddy who's going to bring you down the field, and then we'll be looking at you going,
He's not going to the field. He's not going to the game.
What happened? You're out already?
No, I haven't even worked it yet. Don't worry. I'm going to be standing arm in arm with you. Don't worry about it.
See? We're going to be walking down. Tony's going to go, guys, over here, right this way.
I say, no, you guys are going to be walking down. I'm going, hey, guys.
Tom's not going to be happy about this.
No, not at all.
You're gonna show him up.
I'm already in. It's already done.
You know what? By the time I'm done with this gentleman, he's going to like me so much more than he likes you. Everybody always does. I will be taking your spot, and I will be going with Scott. So if you piss me off, that's what's going to happen. Otherwise, I'll just go with you guys.
You should just tag along. Because I want to see you get rejected at the gate. Ken bait at the gate.
You speak Spanish?
What's that?
Do you speak Spanish?
Sí, un poco. That's Italian. I don't know how to speak Spanish. I don't even know how to speak Italian. Who am I kidding?
Because you could sit in the booth, but you wouldn't understand it.
They got translators now. I mean, you don't need to do anything.
It's true.
No. I speak the universal language of love. We'll be fine.
Oh my God. You might not want to go there. I mean, you might have never met him, but I'm guessing you don't want to go there.
I'm not.
All right, let's do some business.
Talking about me.
Because you have real business waiting in the wings.
We sure do. We sure do. And Tom said we've been running late. So I know he's been waiting for your segment, Nick.
No, he hasn't.
No, definitely.
He did. He said, move along. We're running late. And I said, well, usually he doesn't push me. And then I realized why he's pushed me because we got Johnny trades coming up after this. It wasn't because of you.
No, for sure. All right, top 20 symbols going through the system first 40 minutes. The day, no broad-based indices or futures. We like the ding. Thank you.
That's the whole trade.
What are supposed?
I'm sorry. Did the middle of your sentence get in the way of the beginning of
Futures down on the day.
Like I said, close all watertight doors. Wait for the first day with volatility futures to be up with the market
Traded
higher. You had it already.
We traded 6,500 today, and now they've dropped 25 handles off the high.
Suppose
it literally.
Now
traded.
the other 752 handles that we missed.
We missed all of that.
So what are SPOOs up?
Don't you speak up,
They're up
son.
9.
Let me take the bullet.
They were
Nasdaq's down.
Nasdaq's unchanged.
It's about to. It's up 4.
But they did trade 6,500. They're 64.77 right now. So they dropped 23 handles off that.
Wow. Did you catch the move?
25 handles at 50
He also caught $2 on Meta.
Nasdaq down $1.
Big one.
It's all over but the crying.
Finally got him.
Finally got him.
Please bring us your list so I can get to Johnny Trades and get the hell
Oh my
out of
God.
here.
Number 20 for Tom, GLD at an 18. For everybody else, AMD at a 19, Tesla at a 5, Apple at a 7, Apple at a 17, Nvidia at an 18, 29, CRWV at an 8, Coin at a 17, PLTR at a 10. Kava at a 22, Amazon at a 2, ETHA at an 88. Hood at a 20, iBit at a 26, Meta at a 3, SoFi at a 6, RGT out of 3, TQQQ at a 13, Bob at a 28, Google with an L at a 23, and number 20 for Tom GLD at an 18. And now, let's play some music. And
play some music, Johnny Trades! That's right. Hello, son.
Good morning.
Good morning. Nick Batista, Johnny Trades. Good to see you, son. Like fresh air, sunshine.
Thank
you. A morning.
Thank you.
Beautiful morning. Doesn't he?
Do you feel the same, Tom?
I do feel the same. I feel good.
Really?
Yeah.
Oh, wow.
Yeah. It's
Not
gonna
the
be a special
responsible
day.
It's a special day?
Yeah.
Why? Because we have hubs?
Oh, I forgot about that. That's
Yeah.
makes it even more special.
What do we have?
Hubs. Get a little ribs.
Ribs. Yes.
Yeah, a little Greek chicken. It's good.
Greek chicken.
Great. I think Hubs is awesome.
Their Greek chicken is good. Yeah.
Johnny Trades, you want a couple?
Sure.
Let's do it. What do you got?
I mean, it's slim pickings out there, so you probably have positions on in all of these, but I'm looking at 3 trade ideas. The first one I got, Palantir. What do you got in there? Right now. What you got?
Palantir, nothing really. Just like a
No strangle, no nothing?
no, because the IV rank was like 9.
Yeah, it's very low.
Yeah, I mean, we don't sell premium when the IV rank's that low. I have a calendar spread on in there. That's it.
Okay. I'm in that same boat. I'm looking at a broken wing butterfly on the upside. So I'm doing the 190, 195 call spread. I'm doing this in September, and then I'm selling the 200, 210. It's a 5x10 skip strike broken wing butterfly. I did a 45-cent credit. I mean, you got to play for this thing to go to 200, right? I mean, it goes up $4 or $5 every day. It should be there in the next week or two.
What do you think?
No risk to the downside. You could do it wider too. You want to do this 1x3 as a ratio. You could do that. Might be a little interesting trade for you.
Yeah, I mean, when PLTR was up at 189 this morning when you did this,
yeah,
I agree. It's time to get short. It's dropped about $5. A little less interesting.
Stocks up.
Dropped about $5.
Stocks up $100.
It's up about $120 for the year.
The stock is going straight down.
It's up $30
So let's
for
play
the month.
it. So put that position on. What do you mean? You think?
I love when you guys tell me that.
Don't you do?
I
Isn't
love
that
when
what
the
the whole
Batista-
show is?
We're trying to make you into something that you're not. A little bit.
You know, you
better
give us these
than you
prophecies.
are.
Oh, it's going straight down. So why don't you trade it? Aren't you a trader? Isn't it a trader network?
I do trade it. I made 45 trades already today. What do you want from me? I just don't like that trade.
Oh, he's tired. Sorry, he's getting older.
I
Go
don't
ahead,
like
son.
that
Next
trade.
one.
It's already
He's
dropped.
just getting
$5.
older, son. That's all it comes
If it
down to.
rallies up later today, I'll do we whack it and how.
All right. All right. 0 for 1.
Okay.
Rough day. Rough
It's
day.
going to be a rough day. I have that
Gonna be
feeling.
a tough one. Gonna be a tough one.
do you got?
Apple.
Okay.
It's one of the higher vols on the board. Ivy rank at 17, 18-ish.
Yeah, what are you doing in there?
I did an Iron Condor, September.
Too low
$10
for
one.
us. Anything that can't be under 30.
So how many stocks do you have
a
you
lot.
seen?
That's why we
that
don't
are
have a lot of
under?
iron condors
Don't
on
use
right now.
logic to win an
Don't.
argument,
It's
son.
not logic. These are tasty mechanics. Don't fade the mechanics.
All right. Well, Iron Condor, you're buying the wings.
Don't open.
Kind of mitigating.
How much vol
mitigating.
exposure you think you got on this
Don't
trade?
open the trades less than 30. Your Iron Condor results when IVR is under 30, not very good. Under 20, disastrous.
Yeah.
What else you got?
All right. 0 for 2. This is a tough day, Dad. This is
be a tough
tough.
day.
Might have to go home after this one. Amazon. Ivy rank a 1.
Yeah.
Crab trade. Ooh, he's thinking. He's thinking.
I mean, are you bullish in there?
It's a neutral to bullish.
Yeah, no, I'm bearish. I think the whole Nasdaq's getting ready to roll over.
Wow.
So no,
We got an 0 for 3 here. For the Johnnies out there that enjoy making money, we will buy the 225 call. We're doing that in October. Vol very, very cheap there. We're selling 2 of the 235s in September. And we're buying 1 of the 250s. You're doing this a little bit more risk. Oh God, he's making faces. Ooh. We're doing this with a little bit more risk on the upside. So you got about $1,000 of total risk on the trade, an extra little $500 in risk on the upside. But it does have a little bit of short volatility, a little positive gamma, some positive delta, just a little something.
I can validate everything you said there, son.
Thank
Not
you.
just because we share the same bloodline, because it's true.
Thank you.
You're welcome.
Thank you. 0 for 3. I haven't had an 0 for 3 Johnny Trades session in quite some time. It's truly a turning point.
This might be the last.
Should I give him his
Johnny.
pink slip?
You might as well.
Show me the door.
No, they're not. It's not. I liked the first trade, the PLTR trade. It's just dropped too much.
This is not called Tom Trades. This is called Johnny Trades, and I think you did an excellent
I understand,
job.
but I don't put your trades on. I mean, honestly, I put all 10 of the customer trades on today. I'm just saying.
What are you trying to say?
I'm just saying.
What do you?
He's got 10 people who can replace you.
Yeah.
I have 10 random strangers who gave me better ideas than you did.
Wow.
I'm just saying.
Hey, on that note, let's take a quick 90-second break before it gets ugly in here. We got more taste.
Just saying.
No, I hear you. I hear you. Heard.
We did 10 out of 10.
Chef. Yes, chef.
Yes,
Heard.
Yes,
Heard.
chef.
Heard. Yeah, you be cooking over there.
We got more Tasty Live after this with Liz and Johnny next. Peace. CBDSP's up 9. Uh-oh.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. As you should be, by the way. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews, and we are live from the happiest place on earth.
Yes, live from the happiest place on earth. I don't know. After the obscenities I just heard coming from the back of the crowd, I'm not sure that's the happiest place on earth.
I was saying it was sarcasm. That's sarcasm, ladies and gentlemen. They're a little angry back there today, but that's okay. That's okay. We like the action. We like the moving. We like the the trades.
They are a little angry today. They are. Today, we've heard a handful of people say they're not happy today, and I don't know why. Smooths are up 9. I've seen them as high as up 33. They're only up 9 now.
Yeah, they're angry. They're angry. They're loud. They're moving around. We were supposed to have a guest today, and he canceled on us, which is fine. We appreciate that because we'd rather than be busy than not busy. I like the movement. Things, Candace.
Yeah, it's strange. I'm not sure why we're so busy today or why the pit's so busy today compared to yesterday. But our guest did come and say that he's just too busy.
Yeah.
And I get it. Sometimes if he comes out here and stands here for 10 minutes, that's 10 minutes of money he could be making.
Yeah, 10 minutes of money. That's correct.
Yeah.
And if you miss the most monetarily beneficial trade of the day for the Liz and Jenny show,
a big 10,000 lot comes in and you're standing here talking to us and that comes in, not a good day.
So my question is, and I'm going to ask this, is if you heard it out of the corner of your ear and he was standing here and he's on a badge, could he still participate if he turned around and was like, sold?
I guess so.
Yeah, if you're right here.
If he's here and he heard it and he's on the ticket, if the broker's nice enough to put him on the ticket.
Yeah.
But I believe Alo's actually a broker.
True.
So he would be the one getting the order.
Have you ever been a broker?
No.
I was a broker for a hot second.
No, so basically, the broker is the one. So brokers work for firms like Schwab, or they work for big firms, and they get the orders. They get the orders, and they announce the order, and the market makers in the pit are the ones filling the order.
So I will tell you, which I found fascinating. Now, this was back in the day. Keep in mind, and I'm going to be an old person when I go like this. So when I was the broker, I would pick up the phone, and they would give me the order, and then I would give the order to the crowd. And the things that were said to me through this phone, I was the first person. I was like, okay, come out here and say that to my face. Because no one would say these things to my face. No one would. But everybody's got like beer muscles when they're on the phone.
Yeah, when they're on the phone.
Yeah.
When they're on the phone.
Yeah.
That's crazy.
That was my big line. I'd be like, all right, buddy, get out here and say it to my face.
Oh my gosh. You know what's funny, and I don't think I told you this, when someone asked, they said, for you and Liz to have, for the two of us to have survived out here with the guys on the floor, they asked if we had real mean, rough fathers.
My dad's like the nicest human in the world.
That's what I said.
But I'm real sarcastic and sharp-tongued. So that's how I survived. I'm very sarcastic and very sharp-tongued. Jenny doesn't get things that are being said to her sometimes. I think that's how you survive.
One ear and out the other, and it's like I never heard it.
Yes.
But you are good with the comeback.
That's how I survived pretty easily.
But yeah, our dads are like the two nicest people, and and so no, we weren't beat growing up. Yeah. That's not how we survived.
My mom always says it's because I watch too many sitcoms. I usually can have a pretty witty comeback when given the.
Always, 100% of the time, she has a witty comeback. I just stand there and look. Like, people say things to us, and Liz has her witty comeback. It comes out so fast. And I just go, she did it again.
Oh my God, I forgot to tell you. This is, we will get to the markets. My son caught a ball at Sox Stadium last night.
Nice.
Yes.
I'm shocked the ball was hit into the crowds. Who was it? The other team?
I don't know. I didn't get any details because I was in bed when he got home. But he is 6'5", so he's like, Mom, I caught a ball. So he said he had to jump to grab it, and then he gave it to a 4-year-old in front of him.
Oh, how nice!
I know. I was so excited. I was so happy. I was like, you didn't give me that ball, because he's so tall he can catch it, but this 4-year-old can't.
Yeah. Oh, that's really nice.
Yeah.
It's nice that you gave it away.
Yeah.
Very sweet. Oh, that's a good story. Heartwarming story for the start of the show.
Heartwarming story. Yeah.
Speaking of the start of the show, today is Wednesday. We have a busy show. Jacob's out of town, so we don't have a new study, but we had questions. There were lots of questions, so we have a couple old studies that we just want to do a little refresher. We're not going to dive deep into the whole study, but we're just going to give you a couple of the takeaways to answer some of the questions that people have gotten.
And you know, I'm glad we're talking about this, because I do know our network is very good, and I like all the action behind us. Our network is very good, but there are lots of shows on lots of different networks, and I believe our base of watchers are very, 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 very good, and they watch all of us, right? So a lot of times we'll get some of the similar questions that Tom and Tony get, and I'm pretty sure we got a very similar one today about zero DTE trading in implied volatility in VIX realms.
Yes, so and maybe on the heels of yesterday. So yesterday the SPX trades, a CPI number came out. We saw some people saying they weren't doing the SPX trades yesterday. I did the Iron Condor yesterday morning, and it was a full loss.
But you didn't follow the rules.
I didn't follow the rules because I put it on at 8:30.
I was like, you can't do that.
It was a high vol day, and maybe I shouldn't have done it, but I did it. Full loss at the end of the day. Learned my lesson, right?
Yeah.
I didn't follow the rules. So let's have a little discussion about these SPX trades and the rules. And if you put it on once, you put it on twice, and you hit a loss two times in a row.
Well, I also think you can look at it like a lottery ticket, right? So, and I think if you're going to do it once or twice, that's having fun. If you're consistent with it, that's following. Then those numbers will play out, because you could have a streak of 5 losers in a row.
And yesterday, I bet anyone who put that on, it was almost a full loss. And I know we have some people who are big by big who put it on bigger size, but we were up 66 by the end of the day, I think.
And the interesting thing about this is there's zero DT SPX. You can do anything you want. We're saying the trade as if there's one single trade. You can sell a put spread. You can sell a call spread. You can buy a put spread. You can buy single options. You can sell single options. You can do the Iron Condor. You can do anything you want. We're not saying the trade.
No, but I think the key is pick your trade and stay consistent. And questions we had were, why weren't people doing it yesterday? Why did some people, we had Jackie, I believe, on Twitter say, I didn't do it today because of the number. I don't do it on days where we have a CPI number or some kind of big number come out, or when vol is too high. So, why were people not doing it yesterday? So we're going to talk about those trades and vol, and if you should do them. And it's not like yesterday was high vol because the VIX was low, but the IVR might have been high.
The IVR in the VIX was high, but the IVR in SPX was not.
Right.
So we're going back to 2 studies that Jacob did, and they were separate from each other. They were weeks apart from each other. Yeah. One is VIX IVR, one's SPX IVR, and surprisingly, they kind of came back with similar results.
And so looking at today, now SPUs are only up 6. Anyone who did this at 9 a.m., we're pretty far from where SPUs were up 30 at 9 a.m. Now we're only up 6.
Yeah.
So, but we have been having a little bit of wild action in these markets, even though VIX is low. We've been having some movement. So. I don't know if...
Where is the VIX? Can we take a look at it? Let's take a look at the VIX. Let's take a look at the market. Is there anything to clean up? We did a good job yesterday of getting our buying power back.
Okay, VIX is back in the 14 handle. It's 1469. It's low. It's low. So someone might look at this and say, the VIX is so low, I'm not getting that far. I don't know if I want to do these. But you would think when VIX is so low, the market's not really moving. But we are moving.
The VIX, yes. But we hit all-time highs yesterday, and I think we hit a new all-time high today again.
Yeah.
In the general market. So that's why the VIX is lower. But I mean, it's not down much. It's only down 4 cents right now. Can I see the chart? How high or low what was the range of the VIX today?
Let me check my chart.
Look how little that is.
Look how little what is?
The move in the VIX today, that little green bar.
I know. Just down a little more than it was down yesterday.
The little teeny little green bar. Yeah.
Now, some people might say when VIX is this low, they want to put on a trade, like get long vol or get short the market. And that's okay. I did put on a downside diagonal in Qs today.
I still have mine on.
What?
I continue continue to like keep reestablishing it.
I did put one of those on today, just thinking, VIX is low, market's at all-time highs. I put one on. I did two things: downside diagonal in Qs, and then upside broken wing butterfly in SPX. So a couple bearish trades since we're at all-time highs and VIX is low. Kind of things that I'll put on in this low vol.
Frank Walsh comes in. I love this. Frank the Great, on the man on our YouTube. He says VIX calls over puts 3-1.
Okay, let's take a look at that.
Let's take a look at volume.
I'm going to go VIX.
Go to 6-day.
6-day, sure. And I'm going to go open interest and volume. So when he's saying calls over puts...
Yeah, you can see the volume. Wow!
All these big numbers in the calls. There are big numbers in the puts.
There's some big numbers in the puts, too. No, you're just looking at volume today, not the open interest.
This is today's volume versus open interest. And you do, I don't know, what's going on here? These are just people buying them. Volume today and these options, I would say people closing, people buying them back.
Yeah, because you have open interest versus volume. That's true.
Now, if I go out a little further in time and just go to the monthly, the September monthly, 3,000, over 3,000 of the 16 calls traded. And what else?
Yeah.
Any other big volume?
9,000 of the 20s. That's crazy.
9,000 of the 20s.
Am I reading that correctly?
Yeah.
I was like, my one eye might be deceiving me. 9,000 of the 20s.
Okay. Interesting. And then you puts nothing.
Not a zip zilch. None of the odd the monies.
Right. So 9,000 of the 20s. If you had to pick $1.50, would you buy it or sell it?
Well, I don't sell calls in the VIX, so I'd have to buy it.
You'd buy it, right?
I'd have to buy it. But that being said, so let's talk about this. Just we conceptually understand this. So whoever sold it, if they were selling it, they think the market's going to continue to go higher, right? If they're selling the 20 calls, whoever bought it thinks the market's going to go lower.
Yes,
and significantly.
Whoever sold it thinks that we're not going to have some major down move and the VIX is going to pop. No,
I mean we're saying if the customer bought or sold it, obviously the market maker has to take the other side. We're just saying whoever initiated the trade, because there is a buyer and a seller for both. I just need to be clear about that. Back here, there's always a buyer and always a seller.
Right. So let's say a customer came in and wanted to buy 5,000 calls, and let's say the guys in the VIX pit way over there didn't want to sell 9,000 calls. They don't have a choice. They have to. That's their job as market maker.
Sorry, you just sold 9,000 calls.
But they would have hedged it somehow. They would have hedged it. And I don't want to get straight.
I would be shaking if I was short 9,000 calls in the VIX.
Well, you have to hedge it.
You have to take the other side. Yes, I know they're very versed in what to do.
Right, and I mean, in this day and age, it's got to be easier. Because back on the floor, if we had a big order and we were hedging our position, sometimes I'd be trying to go to other exchanges. Other exchanges, like I got to hurry up and beat the other guys in my pit and go to this exchange to get these, hedged off somehow. And you're racing the other people in your crowd going to other exchanges. Now everything's electronic. It's much easier.
Yeah, and that's why what she's saying when you're hedging something off. That's why we talk about synthetics are important, because you're actually creating almost a triangle and creating another vehicle.
You're creating like a box. You're actually creating an art box where you're locking in money.
Yeah, that's the goal.
If you can.
That's the goal. Ooh, the back of the pit is heating up. You can't see. It's so funny. They're kind of like that way behind Jenny's.
Yeah, you couldn't really see the movement, but
you can't see the movement.
Too bad. I know we've got a lot of visitors on the floor today.
I'm going to put a formal request into Matthew and Steve. We want to go into the middle.
Can you just film right from the middle?
Can we film from the middle? Would that be possible? I would love it.
It'd be noisy. I think it'd be noisy.
Yeah, it's noisy now.
So, Okay, so we talked about, we're going to talk about some of our SPX 0GT studies and Vol. We're going to talk about that. That's on the docket. Another thing on the docket is Twitter. If you have any questions, comments, photos, whatever, we love to see it on Twitter. Include the hashtag LIZJNY. That's what we're going to look
Or
at.
if you're our age, the pound sign.
Oh my gosh. To get into my condo building, to get into it, you have to put in a code, and the code has
a pound sign in it?
A pound sign or hashtag or whatever. And I text people. I say pound and the number. And everyone is calling me. I can't get in the gate because everyone just puts in the number. And I have, for all the young people, I have to say hashtag. You have to put on the, push the hashtag. And for all the old people, I have to say pound sign. You gotta hit the pound sign.
Who switched it?
I don't know.
And when did that happen?
I don't know. Okay, so that is Twitter, and here we can go back to the screen. So we've got Twitter pulled up here. We see Ajit does it. We see Jim Bob. Jim Bob, welcome. He's got the hashtag long BE to the moon.
What is BE?
I'd love to know. Let's take a look. Long BE to the moon.
Bloom Energy.
Bloom Energy to the moon. Look at this. Whoa. What is someone to do if they're not in already?
Congratulations on your wealth.
Yeah.
Hopefully they were long it at 8.
Yeah. Yeah. Hopefully.
To the moon. Okay. So
I've got something to show you.
Oh. Are we not going to talk about Bloom Energy first?
Oh yeah, sure. Go ahead.
So if somebody's saying they want to get long energy and they think it's going to the moon, let's take a look at a zebra.
Right, because that would.
We're not going to put this in because I think it's going to be too expensive. But that's
I'm going back to Delta.
Yeah.
So you sell a 50 Delta. Buy 270 Deltas. It's not going to be that expensive. $9. So for
you can actually bring it up to the 40 because if you're trying to wash extrinsic value, you've got 460, 470 in extrinsic value. You can bring it to the. There you go.
Well, you don't have 460. You have 380.
Oh, I'm sorry. I thought it was just out of the monies.
Yeah, but
you only have 380. You're right. You only have 380.
How much?
I wasn't looking at the line.
I mean, that you can give up a little, then you're giving up a little. It doesn't matter if you want to give up a little or not. But,
yeah, same thing.
But for about $800, $900, you can replicate 100 shares of Bloom Energy. If you want to just buy 100 shares of Bloom Energy, it would use probably about 2,000. Let me double check. 100 shares of Bloom Energy using 2,000. And if you want to just...
The combo is 1,300. Just because we talked about it yesterday, I just popped in the combo.
Buy a call, sell a put. There's the combo. But you have... Now, this gives you the risk. Buying the stock, you have the risk to the downside. Doing the zebra, you have defined risk of that $900. If you want to just get in the game just in case. And
I got my question answered. Somebody from across the pit just traded with somebody from over there.
Oh yeah, can.
Yeah.
They can trade from here to
anywhere.
There. Here to there to here. You can trade from anywhere.
She's a poet. She doesn't even know it.
I thought you were going to call me Dr. Seuss. Okay, now you could just put in a simple call spread. Like here, $160 call, $1.60 on a call spread.
Yeah.
What do you think of that? Can you believe we're only paying $1.70 max profit $2.30?
I mean,
there's some call skew here.
Yeah, you think?
Yeah, I think there's some call skew.
Yeah.
All right, $1.60. We're gonna put in a very small amount.
You're new to Twitter. We're with you, Jim Bob.
Yes.
I mean, we're not going to make to the moon like you will, but we're going to make 270.
Jim Bob, I'm going to tell you, one of our favorite traders from the floor, his name was Joe Bob.
That wasn't his real name. That was his nickname.
His name was Joe. Everyone called him Joe Bob.
His middle name wasn't Bob.
I'm going to guess that Jim
Although
Bob...
it might have been, because his dad's name was Robert.
Yeah. I don't know why you're just assuming it wasn't.
Because I thought it was such a funny name to call him Joe Bob.
All right, we're in on Bloom Energy. But we're risking very little. I'm gonna ship this. Okay, Liz, you ready to push this out?
I'm just born ready.
We have had. Sometimes we'll run into a string of bad luck, but luck was on our side yesterday, Liz.
Talk to me. What do you got?
Luck was on our side when we closed our CRWV.
I know.
I'm gonna go to it. Look at this.
Did we close it yesterday?
We closed it yesterday. We closed our short puts in CRWV yesterday. I'm going to take a look at those.
I'd rather be lucky than smart. I think we did it a couple days ago.
Let's see.
No, it was like 2 weeks ago.
It was on the 11th. Today's the 13th. 2 days ago.
2 days ago.
2 days ago. So we closed the September 85 puts for $250. We bought them back for $250.
This is what happens when you need capital.
September 85 puts. Look, they're the same price.
As we closed them?
Yeah.
Well, then we weren't that lucky.
Well, I guess I thought it'd be a lot worse. I thought they'd be a lot worse.
Yeah. Well, wow.
CoreWeave down $28. I guess, is this earnings?
They had earnings, yes.
Okay.
I bet that was more than expected.
Well, and I guess we closed it 2 days ago. So we closed it here, and it's right back to where, I guess it's just back to where it was 2 days ago.
It's back to where it was 2 days ago, yeah.
So I saw down $28, 20%. I was ready to hop back in. But I might, now that earnings are over. And maybe that was it, where we didn't think it was worth riding it through earnings.
I didn't think we thought it was worth riding through earnings.
But I might hop back in CoreWeave.
Do you know what is taking it off the chin today? Hood.
Robinhood?
Robinhood, and I don't think they had earnings.
Ooh, down $6.
Yeah, it's big.
Huh. But it's still, again, back to where it was 4 days ago.
No, I get it. And look how low it got.
Yeah.
Yeah, that's
it. We're at the low.
Oh, that's where we're trading right now?
Yeah.
Oh. Yeah, that's a lot.
That's a lot. I don't know. But I don't know what to think about Robinhood. Again,
I feel like it just happened because my account was looking really good, and then all of a sudden I was like,
oh, because you have a lot of Robinhood.
I have a lot of Robinhood. I've just ratcheted it up. I'm okay. Like when it falls back down. This is one of those, and I loved what Dylan Radigan was saying yesterday. He's like, I'm bullish until they give me a reason not to be bullish because I've ratcheted it up. I was like, okay, I'm going to tap out with whatever it is here because I think it's too high. I think everything's too high.
What the heck is going on today?
There's a lot of stuff going on. So there's got to be a lot of volume. Want to go to the Cboe?
There?
You don't have Cboe's most active, do you?
Did you hear the order over there and the way over your right shoulder?
No.
Way back.
A box.
That's just a box.
Yeah.
Well, it's busy today on the floor, and it's unusual. We haven't seen this kind of noise in the weeks.
I was laughing, and I shouldn't be laughing because I hope they're not watching, but people are very angry. Like I said, the guy that just walked by, he goes, I just want to put a stick in my eye. And I was like, oh my God. And all I can do is laugh.
So the guy who just walked by said
He walked by like 10 minutes ago. He's a nice guy, so I didn't want to embarrass him, but I was going to say it at the time.
One guy who said he wants to put a stick in his eye. Another guy, what did he say when he came over? That he was very angry. Very angry.
Mm-hmm.
Do you remember exactly what he said?
They're angry elves today.
Today, but why? They're busy, right? What's the volume?
Do you know what? Do you remember how everybody's probably pretending like they're not making money when they are?
Oh yeah, that's back in the day in the trading floor. But that's for I don't know if that's.
That's when you wanted to keep people out of the pit.
Oh, in the pit. Yeah, if you were in a pit that was making money, you pretended you couldn't make. You were like, this pit stinks.
They can't make ends meet.
Yeah,
I'm homeless.
I'm barely paying my monthly bills. Don't come to this pit. That's because you wanted to keep people out of your pit.
Yeah.
So because every person that came in, they were just taking a piece of the pie.
They took a little piece of the pie.
Right. Okay. Should we jump into the SPX studies?
Yes.
And.
Yes.
What else are you thinking, Liz?
No, I was just looking down. I was going to see DocuSign we put on yesterday. So
no, but that's
it's a longer. No. It's a longer term position. It's okay. We're making back a little bit of money. We replicated the exact same position, so we would have been making back exactly what we would have been making.
We had the short 70 put. And all we did was turn this into a zebra with short 70 call.
Yes.
So this will be making the same thing that put was making.
So let's pop in the platform so everybody can kind of see what we're talking about.
We had the short 70 put. So whatever, it was $5 yesterday, it's $4 today.
And we're up $106. So it's exactly 1 for 1. So I just wanted to kind of adjust that.
DocuSign and I will, just to see where we are in DocuSign, I'm going to go with the order chains.
We're down $272.
$272
I have it up on mine.
On our original DocuSign trade.
Yes.
So this is something that I think this is one of those we made our bet. That's through earnings.
Well, that's also, we have a short put in there. That's all we have. We have the same short put that we did. We just used less capital.
Right.
And if we wouldn't take it off then, we wouldn't take it off now. It's just something that I wanted to address.
Yeah. Okay. I did look at that, but I think that's just stuck with us. That's stuck with us for a while, unless DocuSign has some like crazy run.
Correct.
Crazy run. right, are you ready for these SPX studies? Just to answer the questions on vol.
I am very excited for these SPX studies. We've done them before. Okay, so I want to say we've done them before. The slides are in there. Look at if you want to see the meat and potatoes of these, go back in. The archives are in there. It's been done twice. This will be the third time.
We're not going through every single detail.
No.
But we want to focus just on the question of, should I be putting these trades on when vol is high or when IVR is high, or when, what should I be looking for?
And so the meat and potatoes is in there. You want to go back and look at it, go back and look at it. That's absolutely fine if you want to go back and look at the meat and potatoes of these slides.
So this presentation and this profit targets for 0 DTE by IVR, you can search for this. You can find it on the tastylive platform.
We did it. The boys did it. You might get 2 different takeaways, but I really think it's a good piece.
So what we want to... With so many questions on vol, so I'm going to go right to the takeaways.
So, and can I give a question? One of the questions that we got is, and this was a legit question. So we figured we'd go take it to the actual evidence of somebody smarter than us, Jacob, right?
Yeah.
And so the question was, how much of your portfolio do you allocate to 0 DTE SPX positions? Now mine is very small. And do you allocate?
Mine's very small.
Mine's very small. And do you allocate more when in different VIX levels? Do you allocate more of the 0 DTE SPX in different volatility levels? That was the question.
And in my mind, I'd be doing it more in, I think, low vol.
Correct.
Because I don't have other things on. Because when vol is high, and I remember, don't you remember this study where when vol is high, you're better off using the individual equity products.
Yes.
Versus when vol is low, you're better off using
the index products.
Yes.
Yes. Now, once again, it depends on how you're using these, right? So if you're selling premium, if you're buying premium, if you're getting directional, it depends on how you're doing it. But what we're looking at is, I don't consider this I need to have 2% of my portfolio in 0 DTE SPX. I don't. Maybe I should, maybe I shouldn't, but we're doing it directly by implied volatility. Mine's very small. Very small.
I was going to say, if I think of the size of my portfolio and when I put these trades on,
it's not even a percentage.
No.
No.
It's not even a percentage.
You're not even in a full handle.
No, it's not. No, it's not at all.
No.
So it's very small. Very small. But we're not Jack Tucker.
Yeah.
Maybe one day we will be.
I mean, I aspire to be Jack Tucker one day.
Maybe one day we will be.
Yeah.
But right now, most of my portfolio is various equity positions.
But I'm going to argue Jack Tucker doesn't have this many positions in his account.
I don't know. Maybe he does.
Maybe he does.
Maybe he does. But it could, and maybe his is still a small percent of his account, but ours is very small.
Very small. Okay.
Okay, so the novelty of active liquid 0 DT option markets is giving us all a chance to learn how best to trade them together.
Volatility is incredibly central to options trading and a neutral metric to look to for determining what to trade and how to trade it.
When credits are higher, should we be satisfied with keeping smaller portions of them?
Okay, let's look at the data to see how best refine our profit taking.
Okay, so here's the study. Considered selling 0 DT premium at 9 a.m. Using $20 white iron condors with short 40 delta, 20 delta, or $10 white iron flies.
So then we examine closing the winners at 10, 20, and 25% of max profit. Losers were allowed to expire. Every 10 minutes is just the profits. I just want to say that because you can collect more than 10% or more than 20% if you're doing it every 10 minutes.
And then here we filtered results by SPX IVR. So this is important. Here they're using SPX IVR.
And there's a reason we're putting these two studies together because one's SPX IVR and one is a different IVR.
So here when you look at, VIX at 14. Well, VIX at 14, that's going to tell you that SPX IVR is low. It's very different than VIX IVR.
Yes. So right now, SPX IVR is 10.3.
It's low. VIX is low. When VIX is low, SPX IVR is low. When VIX is high, SPX IVR is high.
So if it's 10.3 SPX IVR, so low is 0 to 10. 10 to 15 is medium. We're 10.3.
At like a 14. At a 14.
With a 14 VIX.
I would say we're
medium.
SPX IVR is low. Oh, medium.
Medium. It's barely into the medium. It's grazing the low area.
Okay. All right. So
this is the meat and potatoes. We don't need to look at it. Let's go to the takeaways.
Let's go to the takeaways. I'm going to go to the takeaways. And so as we look to refine our 0 GT profit taking, we're leaving no stone unturned.
Yes.
Jacob leaves no stone unturned.
He does. Examine trade performance by IVR. So this is SPX IVR at open. Revealed a few things.
SPX IVR. All of the strategies and mechanics were considered did best in moderate IVR regimes.
That's remember I just said we're barely
on the cusp of
we're
it. We're on
barely into the moderate IVR regimes. Okay, in contrast to our longer-term studies, on longer-term options, they seemed like very high IVR was a bad sign for zero DTE profits.
Yeah, so when VIX is very high, but not too good for profits in zero
So it's
DTEs.
kind of which came first, the chicken or the egg, leans into what you have been saying. When there's low IVR everywhere else, a lot of times I'm looking at these because it's something
because
to
nothing
do.
Else to do.
Yes.
Something to do.
Yes.
Something to do. When there's high IVR, high VIX, there's something to do everywhere. There's something to do everywhere.
But it's kind of like these are instant gratification trades. In high VIX, volatility, it's the fear index. It means it's going to whip around. So when you've got a higher VIX, you do get some whippy moves, and you're going to get them whippy intraday.
You do get whippy moves, so that's where when the high VIX you're getting these whippy moves, and it's trickier to do those zero DTs. And in high VIX, every equity that you've got in your wheelhouse, you can be selling puts in.
Yeah.
Or jade lizards or whatever you want to do.
Yes.
Or put spreads, whatever.
Because when you have a high volatility, that means the market is at its lowest point. So we've kind of just leaned towards it but didn't know why, and Jacob's giving us the why.
So right now, the SPX, we'll see what happens today. We're still, 20 points away from where we were at 9 a.m.
Yeah, but that's nothing in SPX.
It's nothing.
It's nothing enough.
It's nothing.
It's an SPX is 64.54. So 20 points and a $6,454 product is nothing.
Yesterday was a different day. Yesterday we had that really wild move, but again, it was the CPI number, and what we've talked about is maybe on the day that the number comes out, we're not going to do them.
So what was crazy about yesterday's move was we went to only up 12, and then we ended up ridiculous.
66.
I thought for sure we're gonna very similar to this.
We were up very little after the number.
Yeah.
But then we got a lot of movement. Okay, so that was that study. And again, I didn't get into the each individual slide just because we don't have time. We just wanted to talk about and show you the takeaway of when VIX is very high, maybe you don't want to do those.
That's kind of where we're leaning too. Okay, so then this does go into picking a profit target, means balancing win rates and the size of winners with their relative merits, mostly consistent regardless of opening IV. So this does go into picking a profit target too, because we've asked about that.
Now here's another study: zero DT iron flies, in depth part 2. This was another study that focused on vol. This one a little bit different. Let's talk about this study.
Okay, so this is. Wait, are you just at the?
This is slide 1.
We don't want to give the setup. Oh, okay.
The setup here. Here's the study. Here's the study.
2 years of data, SPX collected every 10 minutes. This is very, very similar.
Okay, using VIX-derived IVR. So this is looking at IVR VIX instead of IVR SPX. IVR VIX. And for those of you who don't know what IVR is, IVR just looks at a volatility of each particular product compared to where it's been for that product. So, if it's IVR of SPX, that's looking where vol's been in SPX. If it's IVR VIX, that's looking at where vol's been in VIX.
The IVR of the VIX right now is 30.2.
High. That would be in the high category. So we see IVR, high volatility, IVR over 25. We're in the high category. Moderate vol, 15 to 25. Okay, so we're looking at these SPX trades and talking about VIX IVR,
which is different than SPX IVR.
And so when we look at these, and I remember going over this not that long ago, when you look at the win rate and you look at the P&L, this one is an any VIX IVR. When you go into a low VIX IVR and you just kind of glance across the board of the average P&L and the win percent, everything looks pretty good.
Yeah.
And it looks good in the moderate IVR as well. It does.
It was the high IVR that was the problem, right?
When you hit the high IVR,
your win rates go down.
Your win percentages go way down.
Your P&Ls go down.
And your P&Ls go way down.
Yeah.
So this tells me when VIX IVR is high,
and it is,
maybe we shy away from these as well.
So that's what I'm saying. I want Jacob back. I need him back. Which do we listen to? Which is better to listen to, the VIX IVR or the SPX IVR?
or a combination of both. I know we had someone write in saying like VIX IVR is high
always,
most of the time. So that's where I kind of want Jacob to dive a little bit deeper into this, or maybe tweak it, like focus more. I don't know, because these numbers are drastically different. If you look at the high VIX IVR, where let's just say take a look at that. $30 wide, 10% profit target, your average P&L is only 6%. Or the
$6.
Or
that's 6%, $6.
$6. $10 wide, 20% profit target, win rate 41%. These win rates are low. The win rates are low. The P&Ls are low. It's a big difference compared to low and moderate IVR.
It is.
So,
I'm looking at the VIX one day.
Let's talk to Jacob about that. And I sent him the message from the viewer about how
but he's on vacation.
IVR is higher most of the time.
Yeah, so we'll get to the bottom of that. But let's look at the conclusion just to kind of...
Picking your strikes and mechanics gives you a great deal of control over your degree of risk and likelihood of profits.
In every volatility regime, those who are willing to take on the risk and buying power of a synthetic straddle, 10% profit targets were both the most winning and the most profitable. So the crux of it is manage early in these 0
Manage early. And you know what I did today on the train, because I couldn't help myself? Sold a put spread in SPX, and I set a 20% profit target, and it hit the 10% mark, and I didn't close it. It never hit the 20% mark, and now it's a loser.
Shame on you.
Shame.
Shame. Shame. Shame. What's that from? Game of Thrones?
Oh, yeah. Oddly, in moderate IVR, very low profit targets perform best. But in both low and high, large net profits were found by being slightly more patient.
Yes. In contrast to our experience with longer dated trades, high volatility at market open was a sign that 0 DTE short premium trades might be challenging. So that's what I'm thinking. So I do kind of like this, meaning, hey, when there's high volatility, look at other things.
Look at other things. And today I did just the put spread instead of both sides.
Yeah.
But I 10% profit target. I think my takeaway from these...
You're always trying to get more.
Well, okay, here's the thing. If you're doing an iron fly and collecting $8, 10%, fine. If you're doing...
a $20 wide.
A $20 wide and you're only collecting $4, I don't want $40. Why even bother with that risk?
Yeah, because it's a lot of risk for $40.
It's a lot of risk for $40.
It's a lot of risk for $40.
So then you have to take 20%.
And you get $80.
Yeah. Then you might as well just do the $10 wide with very little risk.
Yeah.
So
I do like that. I mean, usually I'm probably a bigger trader than that, but because where I am at with the level of the trader that my son is, I like doing the little risk.
Because he's doing it.
And
it makes sense. It makes sense. So hopefully that helped some people who had some of our volatility questions. I'm going to get into Twitter. Let's take a look at trying to see what we had, if we had anything that we didn't get to yesterday. Ash Finn, thank you very much, watching us in the evening because he missed us during the day.
My favorite is the pound sign, no days off.
No days off. No days off.
You gotta retweet that.
No days off.
Hashtag he's gonna watch every day.
All right. But you know what? It's going to take me into pop-up and I may not, right?
If you retweet it?
Well,
just repost.
Oh, okay. I guess if I quoted it.
Yes.
All right, here we go. I don't see anything on the economic calendar.
No, today's supposed to be pretty slow, which you wouldn't know it because I feel like today's more active than it's been in a long time.
It is. It really is. And is that a tell? Is this a tell of something? The fact that the pit is really buzzing, is that a tell of like people are getting nervous, people are maybe buying puts, people are getting long volatility?
Let's go to the SPX 0 DTE and take a look.
And see.
Yeah, let's go to the volume.
We did look at the we looked at the VIX volume.
We looked at the VIX volume. We didn't look at SPX.
Calls.
We don't know if they were buying calls. They could have been selling calls.
9,020 VIX calls traded.
It could have been sold.
No customers selling those. No customers selling those.
You never know what they got. Okay, let's jump into SPX though. I would just want to see what the volume is in there. Okay. Frank usually tells us.
SPX today. And I don't know if I need to look at 0 day or the further out.
Well, let's start with 0 day.
0 day, you always see this volume, right?
So yeah, it was crazy. Yesterday they were in the hundreds when I was looking at it. What is the end of the day? I mean, today our show's on between 10 and 11. At the end of the day, there should be more volume.
Yeah, these are.
And keep in mind, in and outs are double in the volume column.
In and out.
Yeah.
Okay. So these are busy.
So I don't see anything crazy in the volume department today, but I would say more calls than puts. Maybe.
But I'm more concerned with, the monthly. What are people doing out in the monthly? which would be the September 19th end of day.
Nothing.
I don't see anything in the calls. What about the puts?
Nothing.
No. I don't see anything.
Look at how much more volume there is in the 0 DTs.
I know. Now what about the AMs?
Try the AM.
Oh, here, the AMs.
Yeah, the AMs got
AMs seem to have more of the volume. Volume in the calls, not in the puts.
the AM actually makes a little bit of sense because it's
11,061.50 puts.
That's crazy.
Yeah. That's a lot.
That's TP.
Selling them. Oh, fun. Okay. All right. I want to make sure I get to everyone's tweet. Ajit, names for the highest IVR: Adobe, Burke. Ooh, Burke. I don't have a Burke position anymore.
Oh, and On went down.
Did it?
On went down. Yeah.
DocuSign we're in. MongoDB we could take a look at. Snow. And Target we're usually in. Are we in Target right now?
No, we're not in Target right now.
We're usually in Target. I want to look at On for Liz. On went down on earnings, but not crazy.
Yeah, nothing crazy.
Nothing crazy.
I think earnings were the other day, but it's down today.
Down again today.
Yeah.
Let's see. The rank is only at 12. If I went to SEP and looked at selling puts here, you're only getting $1 and using.
We looked at this. It's cash secured.
Yeah, it's cash secured. No way. No way, Anon.
I don't like the name. I do not like the name Anon.
Oh, they have earnings. Yeah.
And did they go X today?
I think the shoes are. I don't care for the way they look.
The Anons? Oh, I love them. I love them.
They're not my cup of tea.
You like the Burke gym shoes?
No, I'm trying to find a new pair. I'm trying to find something new.
I got some cool new black New Balance that are size 11. Women's.
Liz ordered New Balance shoes 6 months ago.
When I was going to Germany, I wanted cool black gym shoes.
Yeah, she ordered these cool gym shoes to come for Germany, and now they came maybe 3 months after you got back. And 3 sizes too big.
3 sizes too big. I am a 9 in women's. I ordered a 9 in men's, and I was like, "Who's gonna wear these? They're boats, so they're size 11." Women's.
That's why they took so long. They had to custom make them because no man would have ordered those shoes. So Target has earnings, so I think we'll probably wait on Target. Target at 105 with earnings. I'm going to wait.
Yeah, we should wait on that. We appreciate the list, though, G.
List. Adobe, Burke. So I, you know me, I always had a Burke position. I don't anymore because, I don't know. The markets were just not liquid enough. They were too wide. I was giving up too much rolling, and
they have earnings today. Yeah. That's why. So let's go back to Ajit's list. I'm going to guess a lot of the things on his list have earnings. So you let me know and I'll type it in. So Burke,
Adobe.
Snow, ADBE. They have earnings in September 11th. Snow earnings August 27th.
Oracle.
Hold on, I just typed in Snow Oracle.
I'm going to take a look at Snow.
Oracle September 8th.
Okay, so let's take a look at Snow. $197. It really had quite a run. And they have earnings. I'm not going to touch this with a 10-foot pole.
No, $200? No, thank you.
Yeah. So, but Ajit's list is nice. It gives you products with high IVR. I like high IVR in products at the low end of the range. A lot of these are high IVR in products at the high end of the range.
Well, they're high because of earnings.
And you see earnings today. Cisco,
ooh, JD,
John Deere, and AAP. Liz is usually in JD.
What should I do with my JD position? Let me see what I've got. Just long shares waiting for earnings and would have missed it had you not gone to Bob's list.
Oh.
I'm going to sell strangles around it.
Yeah, JD hasn't really had the pop that the market has, but this is a Chinese company. I don't know. Yeah. I am not in any Chinese stocks.
We have not traded Chinese stocks in quite a while.
I'm not in any of them right now. Let's take a look. JD, Baba. Do they all look the same? Baba.
Tencent. What is that Chinese stock? They were in the news today.
Tencent Media or whatever?
Yeah, isn't that a Chinese stock? I just sold strangles around my stock in JD.
TME? Was that in the news?
Mm-hmm.
Oh yeah, look at the jump yesterday. And PDD, Pinduoduo, I haven't been in that in a while. So
that kind of looks like JD.
So a lot of these Chinese stacks don't really look like they're not making up new highs like many of our products here.
What else had earnings? That Pinduoduo looks a little
Well, what are
bit
you
like
going to do in JD? Do we
I'm long stock and I sold Strangle around it. I don't know that we need to get into it because it's got an 18 rank. I mean,
there's just not enough premium.
No,
here. What Strangle did you sell?
I sold the 34 and a half. I got 30 cents and 30 cents. 34 and a half and 30 and a half. I'm long stock, so I don't care. I just want some premium.
Right, 30 and a half and 34 and a half.
I got 57 cents.
Yeah.
Around it. For every 100 shares, I did one of those.
If I were to do something, I think we'd have to go out to September and maybe do.
But I don't take this the wrong way. I don't want this to take us down. It's just it's my son's name, so I keep it in there.
I get it. All right. So I don't know that there's anything on Bob's earnings list. Cisco, JD. Cisco? What does Cisco look like? Cisco, $70. Doesn't looks like everything else.
Yeah, it looks like everything else.
Looks like everything else. I feel like we kind of need some kind of correction. We need some kind of down move to bring some of these stocks back to make them a little bit easier to trade.
This is the exact time in history when we invented the Jade Lizard because we were so sick of being burned to the upside.
Yes, we still wanted to sell puts. We didn't want to lose to the upside.
Yeah, because we wanted to be in, but we were getting burned to the upside, burned to the upside, burned to the upside. What did Blue Wackadoo say?
Hold on, this kind of blew right by. Okay, happy Wednesday. IV rank in the shitter at 10.9. I threw on an
Iron Fly,
6480. Then decided to put on one lot reverse Iron Fly. So he needs it above 6480, and we're at 6482.
Congratulations.
Well, ES is 6482.
Oh, let's see where
SPX is 6480. Wait.
6459.
6459. It's tricky because I've got the ES and the SPX right next to each other.
Yeah, they're right above each other.
You need it higher. We're cross our fingers. I need it higher too.
Don't you think it's crazy that we're in the SPX, but the ES is above the SPX in the charts?
Like I don't like when I look up there and then the top is ES.
Yeah.
What can you do? Okay, so good luck. Fingers crossed. I hope we go up too.
We're with Jim Bob.
Here, Ashvin, overnight iron condor was a roller coaster.
So Ashvin, I like this. He's doing it overnight. So he'll does it the day before and then closes it the next day.
Yeah.
Which is great. You're going to get a little bit extra premium from that.
Yeah. Nice. Check out FSLR, 16 Delta Short, Iron Condor, Synthetic Strangle, post earnings for $9.19. All right, Ajit, let's take a look at that.
So FSLR still has a 33 rank. Wow, there's lots of activity back there.
Well, a lot of those solar companies.
No, back there.
Oh, back there.
Yeah.
I thought you were talking about in First Solar.
No, they're all talking about something they watched last night.
Everyone's busy.
Everybody's busy.
Yeah, everyone's busy. All right, First Solar, I don't mind it. Let's take a look. September.
So 16 Delta Synthetic Strangle. Switch it back to Delta if you don't mind.
Absolutely. All right, the 162.30, you get pretty far. I get very far. And you're getting 650. I don't mind this at all. If we turned it into an Iron Condor, we're getting only $1.88.
That's not bad.
It's a $10 ride on top. So to make it $10 ride, you're getting $2.60.
I don't like the $10 on top, but sure.
Sure. Yeah, I'll do it.
Sure.
I kind of would have rather had, you know what? I'm going to adjust it. I want at least $3. I want at least $3.
Can we take a look at the strikes again? Because I don't think it had to be that way.
Yeah, it had to.
It's all. I was thinking it went to 10 as soon as you were there at the 16 Delta.
So 220, 230, 165, 155.
Sure.
160, 150. I want $3 at least. We were only getting two something.
Okay.
All right, so we're getting $306 on this Iron Condor. I just wanted it, at least close enough to a third of the width.
Well, especially if you've got a 33 IV rank.
Cupcake, new Adobe Iron Condor today, IVR 86, and they were on the list for earnings, right? They have earnings.
They were on the high. They have earnings September 11th. So what cycle is he in? They're in the 38 day, which is 37 day, which is through earnings.
So you're through earnings. it's kind of your earnings trade, right? This will be your earnings trade.
Yeah. That's through earnings. So what's interesting about this, if you go to Adobe real quick. Now, and I'm glad you put Tony on here too, because Tony and Tom trade a little bit differently than us. So this is your earnings trade. So you can see where earnings are. They're in the September 11th, but Cupcake was in the September 19th regular monthly. Yeah. So I know people are like, oh, earnings are not till September 11th. I'm going to put this on and hope to get some implied volatility kind of collapse before then. Cupcake, I trade if I'm going to have a directional stance, I'm fine with it, but not necessarily if I'm going to be neutral.
Right. I hate to be stuck in this for so long, just waiting and waiting and waiting for earnings, and I don't think I'll ever get out of it before earnings.
Well, and we've seen the boys do it so many times. They're like, it's not for a while, we'll put it on. And then when earnings come up, you're like, well, we have to adjust it because now we're directional. You're directional by chance, not by choice.
90% of the time, they're still in their, if they sell an Iron Condor or Strangle and earnings are coming in a few weeks, 90% of the time when earnings are coming, they're still in that trade.
They're
and I just threw that number out there. I made that up, but I'm pretty sure that's probably close.
Research has proven that 90% of the time.
All right, you know what I want to get to, because we haven't, and I know our research team, Kai's out of town. He usually sends this to us. I had a handful of people working on getting this to us today. What's your assumption?
She did, and they've done a wonderful job, but I have to do a public service announcement before we are done.
Yes?
Hold on, it is 10:48. Tomorrow.
Yes.
You and I are going to be in the office.
Tomorrow we're going to be in the office. Just a quick announcement before we get into what's your assumption. We're going to be in the office. Everyone can come noon to 1. Is that what you're talking about?
Yes, but you have to sign up. Everyone, the security is different in there. You have to be on the list or you will not be able to enter. Vanetta's been very clear about this, and I think she's our security guard.
If anybody shows up to 1330 West Fulton tomorrow to come to the noon to 1
you can't just sign up then. You have to be on a list in advance.
Yes, you have to email support@tastylive.com. You have to be on the list. They won't let you in the building if you're not on the list.
No. So we wanted to just put that out there. It's different than our old studios used to be. Security's a lot tougher. There's a lot of other people in that building, so keep that in mind.
Right. Okay.
But we will be there tomorrow.
We will be there.
We will not be at the Work by 11 because Jenny and I are tasked with working.
We do a show from 10 to 11.
Yes.
What would they do?
You're at Work by 11 every day after our show.
All right, what's your assumption? We may not get to all of these, but I do like what's your assumption. Sometimes it gives us an idea of something we haven't looked at before.
GMed.
Like GMed, never heard of it.
Never heard of it.
This is from CYN. It's in from Columbus, Ohio. My son was just there visiting, so it's a lovely town.
Oh, yeah, he was.
He did like it.
Yeah,
he liked fun. Okay, unprofitable company with a market cap of $91 billion. That seems way too rich. Okay.
GMed, hold on. It is Global Medical.
GMed. Let's put on a bear's trade.
Global Medical. Now, I'm going to give you a little bit of a. You've got 394K, which means it's not exactly liquid. You got markets that are 45 at 110.
So I see
some problems.
No, but if I want to be bearish GMed, the options are wide. There's not a ton of open interest. There's not a lot of volume. So if I want to be short this, do you know what I'm doing, Liz?
You're buying a put.
I'm just buying a put. I'm buying whether I buy. They're not that liquid. They're not that liquid. That's all I'm doing. Or maybe a put spread. Yeah, if I could get this $5 weight spread for $1.60.
Look at the bottom, and my one eye might be deceiving me, but I think the market is.
That's why I said if I could get this for $1.60, I'm in.
Right, if you're in, right. So then you'd have to leave it because it's hard to get out. If my one eye isn't deceiving me, the market is 25 cents at 305 or 295.
I mean, I would have guessed this $5 weight spread for trade for around 250. So if I can get filled at 165, oh.
Okay, GMed.
Set to closing only. That happens when the markets are so wide on something. If you really want to trade this, you can call Tasty Support and see if you can. But what they're saying is that these markets are way too wide, and it's kind of a caution of maybe we shouldn't be trading this.
It's a cautionary tale, correct. Okay.
I don't know.
Let's go to the next one.
But if you really want to trade it, call Support. Okay. Oh, JD bullish. Look at this. I'm bullish on JD, but the IVR is pretty low. What's the play for earnings? You know what? Why don't we just throw in?
So it's hard. There's not a lot of premium if you're going to be bullish, JD, for just puts.
I'm just going to throw in this. Cover my. I'm going to pay 67 cents for a $1.50 wide call spread.
There you go. We'll make 67 cents if it goes up.
We'll make 83.
We'll make 83 if it goes up.
Yeah, we're only risking 67.
Great.
In. very baby call spread. It's in. When it gets
So I'm bullish JD. Now we are all bullish JD.
Hey, you know what? We'd risk 67 cents on a calendar. So why not?
Yeah.
Why not jump
Thank
in
you,
with
Austin. I'm bullish as well. I have the stock and I sold a strangle around it, so I'm bullish.
Yeah.
Bullish.
Yeah. All right. Adobe bullish. Isn't this what we just took a look at when
Yes.
they have earnings?
Yes.
If you're bullish, I don't mind going through earnings, selling a put. I don't mind that, but I don't like the neutral through earnings.
I don't like neutral through earnings either.
SPX neutral 0 DTE. Jack from Philly. Jack, I
This
got in
isn't
at
Tucker
9 a.m.
because Jack is from Chicago.
Yeah, this isn't Jack from Philly. I mean,
So-
this is Jack from Philly, not Jack from Chicago.
A 40 Delta Iron Condor, $40 wide. Close at 25% of the max profit. Everything's already priced in after those good CPI numbers anyway. So this is very Jack Tucker-esque.
Sure.
A 40 Delta is going to be pretty tight, though.
40 Delta's tight. Yeah. I mean, again,
40 Delta's tight.
SPX is up 9 right now. At 9 a.m., we're up 30.
Yes.
We need a little run. We need a rally. If people put this on, we need a little rally.
Yes.
Little rally. CRM, bullish.
Salesforce?
This from Mark from California. Salesforce is a PIG pig. But
It's
they're
pig-
bullish.
But it's pig PIG.
But they're bullish. Not sure what's going on with my stock. You can sell 200 puts. So let's take a look at Salesforce. So they must say the stock is down, and that's what
It's got to be down.
High VR with a stock down. Yes.
Yes, it's a PIG pig.
All right, well, thanks for the show. This is exactly what I'm looking for. They have earnings, but if I went all the way here, when you look at 23-day expect to move $20, 37-day expect to move $21, I'm going with the 23-day.
Yes!
I'm going shorter term. I can get...
They were looking at the 200 put.
200 put, $1.50, uses $2,000.
That's not bad. That's not bad.
I'm probably going to put this into my own account when the show ends.
That's not bad.
But if we wanted a spread in here... I like the naked puts in here. I do. What do you think, Liz?
I don't mind it. $2,000 is too much for this. We just got $2,000 back yesterday.
I know. We'd have to do.
What kind of
spread, and
handcuffed?
Then we'd have to bring it up. But if I'm in, you know what I'm gonna do when I get home? Sell that 200 put.
Yeah.
Yeah.
I think it's a good idea.
I like it. Okay. After that, Dow bullish. Just gonna sell those September 20 puts for 72 cents.
I believe we already did.
We have it. Yeah, we're in Dow. We have it. And if we only have, so in Dow, we only have this 25 put in the money. I'm kind of interested in seeing if you add on the 22 and a half, it was only used 440. The 20 adds 200. That only adds 200.
You're getting an extra $50. Well, and then you can get out of there quicker.
Yeah.
I'm fine with that.
So here we're gonna get $50 and only use $200. Right?
Yeah.
It's just it'll help our cause, and it's a low buying power. $200 for 50 cents.
Yeah, that's pretty low. And so, I mean, this is.
To use $200 to make $50, that's a good return.
I would rather, this is going to sound crazy, so you can also, and I mean, you could also, but I wouldn't do this, but you could also, and get $50 by selling that 25 call, and it's going to cost you nothing.
Sure.
But no, I would rather defend it with the other side. I know that sounds crazy. I would rather put a little extra capital in there and get my $50 by an additional put
but you know
than selling that call.
Do you want to add on the call too? Then we got $1. Then we got 50 cents on the put, 50 cents on the call. We got another $1.
Then if it gaps up, we're screwed.
Let me take that down. I don't know what to say.
I know.
I get it. All right. Well, we're in with you, Matt from Spokane. We're in. BMNR bullish. Jackie W. from Nicaragua.
Did CoinDesk IPO?
CoinDesk?
CoinDesk, yes.
What's your breaking?
Shares of CoinDesk operator bullish, poised to double in post IPO session today.
I don't know.
Me neither. Desk.
I'm looking. I don't see a CoinDesk.
Maybe it's IPOing tomorrow. I don't know.
Not. Yeah.
Market Watch really wants me to trade it.
What is CoinDesk? I
have no idea.
I've never even heard of it.
No idea.
Okay, BMNR. BitMine.
Oh, yes! Was this?
She's very excited. This is from Jackie from Nicaragua. Bullish BMNR. ETH to 8,000. That was on the heels of yesterday's show.
I sort of feel like BMNR. This is, what was it called? BitMine. BitMine. This was in Motley Fool this morning.
Was it?
Yes.
Okay. Considering a Jade Lizard, so we'll look at that. But I want to take a look. I took a photo when we had Dan the Crypto Man on.
I took a photo.
So BMNR.
We're almost, it's 58. We're out of time.
Oh, geez. Well, BMNR was one of those, like, you talked
wasn't on there.
about. Yes, it was on his list. BMNR. It's
Okay.
on Dan the Crypto Man's.
So they're just buying Ethereum.
But when he looked at the different, I can't remember what number it was because it's not on my chart, but from his list of SBET game, BMNR, BTBT, in my mind the best one to buy was SBET because as far the number of, there was like an X times that the company's worth than the amount they're actually holding.
Oh yeah, he did do that.
So I bought SB. So after that, instead of BMNR, I actually bought SBET. But who knows?
But what do we know?
Who knows?
Yeah.
Yeah.
BMNR is all over the place. All right, Jenny, we are out of time for today.
Liz, sorry we didn't make it. I don't even know if we made it through half of what.
I don't think we made it through half of What's Your Assumption. But I gotta go become a blonde.
Oh, she's going to get her hair colored. Wait till you see her tomorrow. She's going to look amazing.
All right.
Thank you for watching. Everyone remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny Show. We'll see you tomorrow, everybody.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, our favorite, Glenn Freiberger, in the house with us today for Tasty FX. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come in with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Glenn. Glenn, good morning. How was the Cubs game yesterday?
Cubs game, very good. Got a last-minute invitation on the intern trip.
I was going to say,
that was fun.
Am I wrong in your employment status or something?
No,
or
no. I just asked.
You're a young man, but
on the way out, they said, "Oh, we got one extra ticket."
Nice.
Me. My girlfriend was actually also going to the game, so would have been up anyway.
Nice.
But yeah,
they spy on her or something.
Exactly.
Just kind of keep some
team
tabs.
outing.
Yeah, team outing. Just keep.
I did.
Keeping tabs.
I met her boss.
Ooh, nice.
Hello, sir.
Nice.
But I think I did.
Was it just the two of them?
No, there were a lot more dudes than just the two of them.
I was just gonna say,
a lot of dudes, but all nice dudes.
All right.
Interns, they accepted me as their own. I don't know if that's a good thing or not.
Yes, we've got a.
But your boy Thomas, he was.
Got him on the glizzy cam.
Got him on the glizzy cam. He was. It was a bad day to be a Polish sausage. I'll tell you that much.
Yeah, he was getting after that thing. I don't know.
But no, Cubs not so good.
Yeah, they lost.
Pretty badly. Yeah, busted it open in the 7th inning. But it was a great night. 75 degrees. Chicago, Wrigley Field. Does it get much better than that? I don't know. It's
perfect.
Saw Chris Grace walking his dog on the field.
Wow.
It's just the whole thing.
Yeah. What did you guys get up to midweek here Tuesday night? It's like trivia. You guys do trivia or something?
There are.
What was that? What was that? Like
what was that?
Excuse me. Get to bed early last night?
Oh yeah, just a couple Jeopardy episodes.
Yeah, a couple Jeopardy and just.
I watch Jeopardy, so no shame there.
Oh, okay.
Love it.
I meal prepped chicken. I did 2 loads of laundry. I watched Hard Knocks.
Yeah, Hard Knocks was nice. That was fun.
Is that good? Josh Allen throwing up everywhere? Is that?
Yeah.
That's
that. We didn't get to that part yet.
Oh, yeah. Okay.
But yeah, it was good. It was a nice hype train.
Yeah.
Deion Dawkins drifts cars. Well,
Okay.
like a good chunk of it was just watching him drift cars in
that was pretty
circles. It
fun.
was pretty sick.
That's really funny. Is he allowed to do that? I feel like most
Yeah.
professional athletes aren't allowed to like ski or do other dangerous activities, but they give him the Bills parking lot and they say go nuts.
Yeah.
Be safe.
Yep. But yes, it was not as an eventful day as you had, but
yes,
this weekend we're going to Seattle.
Yes.
Oh, big time.
Yeah, you want to come?
Big events.
You got an extra ticket or something? I'm all
Yeah.
for last minute
They're
tickets.
free on tastylive.com/events. They're
Yeah.
free. You can grab one.
All right. I've never been to Seattle. You guys went last year.
We did.
Okay.
We did.
Now you're running it
Seattle's-
back.
Running it back, Seattle.
Seattle's
This is a Saturday event?
Sunday.
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 Fun day.
Yes.
What do you guys, what's the curriculum? You're teaching? Preaching?
We're talking
edutainment, baby.
Edutainment. Yeah.
You know,
You guys
fun.
are the edutainment pros.
Yeah, it's a little fun.
And you're in the edutainment capital of the world.
Really? Why?
I don't know.
Just, yeah, I don't know
right.
that one.
Let's say you say one sentence and everything just plummets.
Damn.
Yeah.
It was a good run.
Yeah, it was great. Okay. But yes, join us.
Yes. Come hang out.
Sunday in Seattle at the Crocodile.
Yeah.
It'd be great.
And this is what number stop? You guys going through the fall?
This is just 2. We only have 4 total.
2 of 4.
So if you're not in Seattle, got a lot more coming up.
Yep.
You guys are going.
Dallas, San Diego. Those are our 2 other ones.
Oh, okay, nice.
Yeah. Come for the Dallas one. We go to the little rodeo. Get
Yeehaw.
We will be going right back to that rodeo.
Yeah.
It was
Good
great.
time last time?
Yeah.
Yeah.
It was it was a true Texas handshake.
Yeah.
Yeah.
We should look at staying in that area
Staying at the rodeo?
for one of the nights.
Yeah. Could do it. We might.
Yeah.
Is there like a rodeo district or?
Fort Worth.
Yeah, in Fort Worth.
Okay.
It's a grand old time. You would love
Yeah.
it.
Cool. Lots
Based
of
on
bars, lots
based
of
on the
walking.
partying pictures I've seen of you, you would love Fort Worth.
Yeah.
Yeah.
Uh-oh.
But yeah, got a couple more 2 tree stops, and then all of a sudden it'll be 2026. So
Yeah, we're flying here now.
Crazy.
Steadily in it, August.
it's quite nuts. But we are less than a month away from football, so it just really just gets me.
Get those best balls going. Get those fantasy drafts, you know?
Yep.
Yes.
Yep.
Very nice.
I just saw Ryan's message from the production team about the Tasty Live.
Ooh.
So that's coming back up.
Yeah. I might have to bow out. I win it basically every year. So
Oh, really?
I feel bad.
Thank you, because for me it's just money
Yeah.
down the Dwayne.
Yeah. Well, you do it for the vibes.
This is true.
For the team.
Because you guys, I don't think would talk to me if we weren't in like a league or something.
No, Glenn.
It's kind of like a friendship ticket.
You're one of my favorites. One of my favorites.
Friendship ticket.
Oh, $25 to have 10 friends
cheap.
for 12 weeks?
Pretty
I'm
cheap.
in.
It's pretty cheap for my friendship. You know, worth a lot.
What are we looking at today?
Everything up.
Yes, everything's up. It's a face ripper. E-minis up 46 and change, 63.71. We go down, we bounce right back up. We go down, we bounce right back up.
USA.
America. That's been the MO here. NASDAQ up 250. It's the strongest of the group, up over 1%. Biggest mover of the day. Apple up $12 and change here. Amazon had a nice little bounce back, up $5. Nvidia kind of flat, but it was down earlier this morning. You got Tesla catching a little bit of a bid, up $9. Meta continues to move higher. Microsoft as well has kind of been chopping around here, but it's certainly been a strong start to the session today for the NASDAQ stocks. Dow up 130, the Russell actually down 2. It's been the biggest mover over the last 2 days with the way rates have been moving. The bonds are down a full point today, but they've had a huge move to the upside over the last 2 weeks or so. A lot of rate cuts. The projection for rate cuts really moving and increasing through the end of the year. That was a total flip of the cards. They're coming in a little bit today with rates moving a little higher, bonds coming down. Oil selling off a bit, /CL down 32 cents. We're at 64.84. We've been chopping around the 65 to 70-ish handle for the last month or so. Volatility futures down 50 ticks. It's been a swift vol smash after the little bit of a pop we had in the middle of last week. The VIX itself below 17. Gold basically unchanged here, but it's had a nice rally up 2 points. You got silver up 13 cents. It's a stronger move of the two. Bitcoin also having a little bit of its risk-on moment with the rest of the market, up 1,800 on the futures. Spot up 1,500. We did get into the 113 handle yesterday, so a little bit of strength there in Ethereum as well, following suit to the upside. Risk on, baby.
Man, the oil move most surprising to me. I mean,
yes.
Pre-market, we were sitting up, almost 1%?
Yeah, we've had about a $2 range today
man.
in oil futures. Pretty crazy.
What happened?
I don't know. I know there was like some India tariff something. They're selling Russian oil behind the backs. I can't keep track of it.
It's a lot
more. I just look at the markets. I trade. That's it.
So what's most interesting to you? We got everything, a lot of things up. Still looking at, single name.
Yes, trying to find the diamonds in the rough. Volatility very low. You got to kind of be more selective with your trades. Closed out of a number of trades today. We had some earnings after the close yesterday. AMD down 11 and change, bouncing off the lows here. It was down about 15 or so just a moment ago. Uber as well opened basically unchanged, got down a couple dollars. Those were the two that we really traded. I also had a Butterfly and Shopify, a free Butterfly on the upside. Blew through that. It's up, $25. NVO was another one that people were looking at. Down another $1.78. That thing is down like 70-80% from the 52-week highs of 139. So a huge move there. But yeah, trying to find some diamonds in the rough. I had good timing on Apple. Close out of that diagonal spread. We put that on after earnings on August 1st. So it's been just a couple of days there. I got into a Target position and a Eli Lilly position, bought in some risk on Caterpillar, put on a gold position yesterday, just trying to find things that are, getting long some things that aren't moving to the upside and trying to, get out of some of the stuff that's working. It's tough, though. It's tough when vols is slow.
Yeah, Apple just announced a $100 billion investment in the U.S.
Yes.
So there you go.
Is that a lot?
Nah.
No. Not for us.
When, where, it's just everything's a headline now. 100 billion here, 50 billion there, half a trillion. Yeah, it's just.
Numbers are flying.
Numbers are flying.
Pretty big numbers.
Yes.
Nice to see, though. Apple, the laggard of late.
Yes, it's been a pig. Apple has been an absolute dog.
Until now.
Till today.
Yep.
See if it lasts.
You got
Speaking of numbers, what kind of Forex numbers you got for us today?
Forex overview.
I won't give you any credit, but you deserve some credit for the shekel trade that we closed the other day.
Fine.
Some of the other ones have been a pain in the arse.
What?
But you get some credit for the shekel trade, so thank you. Even though it was my doing, compliance, it was my doing.
All you're doing.
Yes.
But yeah, nice that turned around for you. You were in that one perhaps a little longer than you would have thought, but you sized it appropriately where you weren't capitally constrained.
That's how we do.
In the meantime. So good job out of you.
Thank you.
U.S. dollar, softer on the day, softer on the week across all major currencies. We've got pretty big move of about a little over 0.5% higher in this euro dollar. Now spot market's back above 116. Similar price action in British pound. We've got U.S. dollar, Japanese yen. U.S. dollar tried to rally early this morning, nearing 148. Now that's back down near 147. Not seeing as much, when you gave your market overview. risk on sentiment coming back. What does surprise me is a little bit of a lag here in this Australian dollar, US dollar. Usually that is one of the currencies that is on the risk scale. Risk on sentiment favors that Australian dollar combined with widespread US dollar weakness. I would have expected perhaps a little stronger run up there, hovering around 65 cents. Canadian dollar not doing too much. Dollar Swiss franc also down, moving with those other European currencies, but hanging in there. Not as much of a flight to quality bid going on, so that Swiss franc not getting as much demand. But yeah, it looked like last week we were on the full dollar comeback train.
It's finally going to play out.
Now here we are back with rate cuts back on the table. No more trustworthy employment numbers. Who knows how that'll shake out? We've got Fed chair selection.
Is that today? Is that going to happen today?
He can announce it whenever.
Yeah.
I don't know. Most recent news was both Kevins are good options. So apparently Trump has two different Kevins.
Nice.
Little coin toss action there.
Why not?
May the best Kevin win.
Yeah.
But that's your U.S. dollar update here. You're getting some unique charts. If you're wanting to play the U.S. dollar, you can look throughout those popular U.S. dollar pairs to see kind of if you're more of a technician or just want to respect some of the tape action.
I'm a gunslinger.
You get you get
shorted some euro while you were
what?
Yapping.
All right, so
no, we're not up $1.
Your fade move. Now we're
take that, you pipe and smoke it.
So yeah, we've broken.
I think I'm losing
weird
it.
Day. It's a weird day.
It's a weird day.
What's up with you guys?
It's just
hungry boys.
That might be it. I think that's it.
Yeah, it's hunger. It's just.
I've got some slides if you want to.
Please, yes.
Through that real fast.
Yes.
Looking at FX power hours.
Ooh.
What time of day is most volatile?
Can I take a guess?
You can.
And what?
No, please go ahead. Take a guess.
I'm going to guess at about 1 p.m. Central Time because that's a lot of the economic news.
That's a good guess. Mike, any guesses?
I'm going to say 12:59 p.m. Central Time.
And above and earlier?
Yeah,
you're trying to undercut him?
Yeah.
How was that?
Or it could be as simple as
could be early morning
8:30
too, because
in the
that's
morning
like
when the market's open, things are flying.
Well, let's look into it. I've got some nice data visualizations. I think this is a nice, nothing too surprising here, but maybe a little surprising for you guys. Let's go to the next slide. Just what we looked at the past 3 years of price action using hourly data and just trying to identify some of these trading windows. If your strategy is works better under low volatility, you get your answers here. If you want high volatility, you want some of that movement, also analyze that as well. Looking at Central Standard Time and looking at some trading sessions. We've got some overlap here, but this kind of gets your gears turning as to how I think about FX markets that trade 24 hours a day. You can kind of break them up into the Asian session, London, the New York-London overlap, which will be very important to see. You might get some big answers there.
Okay.
The New York session, which I've kind of shifted to the morning a little bit, and specifically calling out our U.S. afternoon, and just measured in pips the high-low range for each hour. So let's go over to our first visualization here, looking at trading sessions. You've got your 7 major U.S. dollar pairs. Right away, you're seeing U.S. dollar, Japanese yen, the most volatile across the board. But you also factor in this is per pip, and that exchange rate, dollar yen, you tend to see more pip movement, whereas in something like the Australian dollar, US dollar, the exchange rate is so low there at 65 cents that looking at pips alone doesn't give you the full context for what a percentage move would be. And then you also, to get your gears turning, have to factor in, what the margin requirements are if you're looking at both ends of that spectrum, comparing Australian dollar and Japanese yen. With the same amount of capital, you're able to put on more leverage with that Australian dollar than that Japanese yen. So I've done some breakdowns on other Forex Focus episodes on how that kind of compares. But here, just looking at pips alone, pip ranges, what you're seeing is that New York-London overlap, the most volatile. So that 7 a.m. to 10 a.m. window here, Central Time. The answer there for your highest volatility range.
Reports and stuff that comes out like 7 to 7:30.
Exactly. So that is the majority of U.S. Economic data points come at 8:30 Eastern, 7:30 Central Time. So you're seeing a lot of this, and you're also seeing when U.S. participants come in around 6, 7, they're reacting to the European moves pre-market, and then you also get some either big continuations or reversals right on U.S. market open as well. So some intricacies there, but that 7 to 10 a.m. window coming out ahead. And looking at the least volatile, you're looking at that afternoon session, which is why we kind of I called that out specifically. Not tied to a specific region, perhaps, but you're getting U.S.-only participants. You're kind of everybody's reacting to everybody's day, and so it's really the laggard
time.
Exactly.
Damn, so I was wrong. We were both wrong.
But if you're thinking just he was right because he undercut you. Going to 12:59 and earlier. But you're right. We have some recency bias with the Fed announcement last week. That's one of the only major things that is in the afternoon.
Yeah.
And now with the current administration, we've gotten some pops in volatility. In the afternoon, kind of sporadically, less scheduled. And then kicking it over to a heat map I made that breaks this down more granularly. We're looking by hour, a lot of numbers here, but if you're just looking at colors, oh man, it got cut off. We've got, sorry that the pairs look a little weird there on the side.
It'll be okay.
All right.
Yeah, here looking, you can tell which hours the darkest shades hovering in that 7 a.m. to 10 a.m. And what is surprising is that kind of fall off even at 11 a.m. after, European participants pack it up for the day. That was surprising to me that we don't have as gradual volatility for, these are all U.S. dollar pairs. And the fact that doesn't continue as smoothly throughout the U.S. session, a bit surprising to me. But you're getting that dollar yen, you're getting some volatility
throughout
around the clock. And then, looking at that afternoon, 4 p.m., some pretty abysmal small numbers there. So if you have a low volatility strategy you like to employ, that's the time that maybe you look to it. But there's also the fact that there's low volatility because there is low liquidity, and so you can tend to see spreads widen there as well with the lack of participants. So kicking it over to the key takeaways, do you guys have anything stick out to you? I've talked through a lot of these that, the big answer is that early morning U.S. session where you have both European and U.S. participants. Afternoons, the least volatile and least liquid, and dollar yen on a per pip basis alone, the most volatile.
That was what stuck out to me.
Yeah.
Was that the dollar Japanese yen was the most volatile of the group.
Yeah, so if you're looking for pip movement, that's where you look. But again, it is an interesting exercise. Maybe I can hop back on here when we look at kind of product comparisons alone. of how you get more leverage. I mean, even going back to, I used the Australian dollar, US dollar as an example, but maybe even the euro dollar, the best example, because there you have higher per pip volatility than the Australian dollar and only 2% margin. So a lot of factors at play. That's what I got for our study today.
Very good.
Back into the platform.
Yeah. What are a couple currencies popping out at you today? Price extremes, anything fun?
Yeah.
Looking at here.
I mean, you're getting like I said, it's a little bit surprising to me that this Australian dollar hasn't broken out of its range. It's trading near the top of its range for the past week or so, but really lacking a lot of momentum that I would have expected.
Yeah.
You're getting
you'd expect with a risk-on sentiment that it would be moving higher.
Yeah. You're getting, if you thought, I know, Mike, you were in this long U.S. dollar, Japanese yen. You're hovering near the bottom of that recent range. So that, I mean, it's been a lot lower in recent months, but for anything long dollar, you're looking at a lot cheaper price point, a lot better entry than you were on Thursday. So, I mean, Swiss franc holding in there.
This is a positive carry as well. The long USD.
Yeah. So right now, long dollar will be a positive carry against a lot of these currencies. You also have on the economic calendar, we have overnight Thursday morning at I actually think it's around 7 a.m. Afternoon for the UK, but we've got a Bank of England rate decision. They're expected to cut rates tomorrow down to 4%. So some carry opening up there perhaps in this pound dollar. That one also now coming off of...
so if you're short that...
Correct.
Yeah, which would be a long U.S. dollar position as well.
Right. And so barely positive there.
Yep.
But still that
and
dynamic.
We've talked about this too. The carry for us is negligible because it's so small.
Right.
For our positions, but we just talking,
But if your time horizon's a lot longer, then that does add up. British pound.
You got a goofy one for me too, because we got like a shekel realm. That was fun. I like to use this as my intro into the space, so like.
Which is interesting.
Why?
The shekel being an intro, I think not a lot of people have that experience.
No, I know. That's why I want
shekel.
that.
He wants the spicy combos.
Yeah, you gotta kind of get in there and get into the weirder ones. Like that's how you broaden your horizon. You can't always can't sit and trade Apple all day long. You gotta do some other stuff.
Well, if you are looking at some kind of trade news, you can look at dollar peso. I think that's still there's still some talks in development. That one nearing the bottom of its range. Peso posting back-to-back days of gains, so now nearing back in. Let's see.
What about this Aussie dollar, Euro dollar? Because you're kind of saying Aussie dollar, you would expect to be kind of a risk-on appetite, as a long position. Euro obviously has had a big move against the dollar. Being long Aussie, short Euro is kind of a double down on long dollar, is it not?
I wouldn't say
some ways. Or long risk on and dollar.
Yeah, I would say if you're trying to put the kind of model the risk curve across currencies, I'd say Euro is even a little more, tends to be risk on than US dollar. Traditionally without all of this, these big US dollar swings, beforehand you would have said, a flight to quality is US dollar.
Yes.
Before all this US specific risk. So maybe you look to something like Australian dollar, Swiss franc, where you're talking something that is historically a flight to quality, a safe haven currency in that Swiss franc on one end of the risk curve, and then Australian dollar on the other end. That one's been more muted recently, but still a tradable product if that's your assumption. The other thing there would be Australian dollar, Japanese yen. That's kind of a similar dynamic, but then you get kind of some of that geographic risk, perhaps, where those are pretty similar geographically, a lot of dependencies economically, so perhaps more noise there. If you want to just focus on risk, then maybe you could look to that Australian dollar, Swiss franc.
Okay. I like the story. We're going to dabble a little bit.
So we're getting long the Aussie dollar franc.
Yes.
Good, because we're getting paid to be long, which I'm obsessed with it.
Even though it is literally pennies.
But over time, like the amount of positions I held, I got an extra $30 out of the positions I was holding.
Exactly. Like if you're long dollar Swiss franc with like $500 a margin, that's like $2 a night. And on Wednesdays, holding it overnight, 3 days a roll, you're boosting that 3x.
Wow. Hell yeah. You get your free cup of coffee on Monday.
That's what I'm talking about.
I'll be waiting.
Mr. Glenn, thank you so much for joining us. That was fantastic. As always, we love having you on. We're going to let you go and have lunch. I hope you enjoy it.
That's the plan.
And we're going to stick around.
All right.
Yeah.
All right.
Yeah,
Thanks for coming in.
I'm long the dollar Japanese yen, and I'm long the Aussie franc.
Yes.
Both paying me to hold the positions.
That's
my thing.
It's a nice little kicker.
Yeah. Yeah. Well, enjoy lunch.
Thank you, sirs.
We'll see you on the other side.
Yeah, we'll see you later.
Always a pleasure.
E-mini S&P 500 futures up 42 right now. We've got the NASDAQ up 230 and the Russell and the Dow up 100. The Russell really the only one moving to the downside here. If you've got some stuff to trade, please throw them our way here in the chat, and we'll get to it.
I closed some positions right when the show opened.
Ooh.
I closed that Apple call diagonal spread.
Yes.
That was from earnings, and then we just got bailed out because Apple go moon.
Yeah.
That was a small winner, but I got back like almost $500 today. So that was a 60-cent winner, and then I closed an 80-cent winner in the Target call diagonal spread at the 110-105.
Nice.
And then I bought the micro crude contract that I was trying to get filled in yesterday. I bought that at 64.67.
There you go. Even lower than your 65 because you were waiting for 65 yesterday. And now you got it today. That's a nice one.
A couple new positions here.
Yeah.
And then took some risk off. I'll be back for Target earnings, but anytime you can take profit off before earnings, I think it makes sense, especially if you're going to just restructure a new trade for earnings. We got a couple weeks until they announce.
I also, while we were talking with Glenn, I did a number of FX trades, but I also put on a 6E position, which is the Euro futures. I did a slightly short skewed iron condor here. IV rank at 44, so you're getting a little bit of a pop and vol here. And it's been a pretty good trade between 115 and 118. That's kind of been the range that the Euro has stayed in here for the last couple months. So playing for more of the same.
Sweet. Got some nicknames for Glenn. G Money. I like that. G Money. Sovereign of Swag.
Okay.
I like G Money.
G Money.
It's going to stick,
Yeah.
I think. Andrew, yes, Thomas is on Tuesdays, but you can always tweet at him at FX Westwater.
Yes.
If you have specific questions. Or
give him a follow, too.
Chat. Yeah. On higher VIX IV rank days, the credits on SPX 0-day flies seem higher than what we have been seeking, around $8. If the IV is above 25, but the credit is around $8, would you place the trade? Yeah, I mean, if you're doing 0-day flies or iron condors, I think you're doing them agnostic of the VIX, but if you're picking your spots and waiting for a VIX pop and then placing them, that works too. But yeah, you're going to be able to collect more or get wider spreads if the VIX is popping on the day that you place it. So it can be a nice entry point for sure. Speaking of entry, how do you handle trade entry paralysis? I feel like I find a trade and talk myself out of it. Second is, how do you overcome the fear of uncapped risk with naked calls? I don't really sell naked calls anymore, but
you do strangles.
I do strangles.
Yeah.
Strangles.
Yeah.
You just have to have it. You'd have to do it in a product where you can absorb any and all volatility.
But that's size.
That's size.
So it's
same with your trade entry paralysis. I think if you size down, you have less of that.
Yes.
Because you're not emotionally attached to the trade.
Yes.
Where if you're trading a big trade, you're overanalyzing everything, and then you click the button, and then you overthink it, and you close it.
Yes.
So I would say size down. It'll help you out. But for short calls, if you're uncomfortable with the upside risk, just do a call spread.
Yeah.
Do a Jade Lizard. Sell a put and then sell a call spread. If your credit is close to or exceeds the width of the call spread, you have no upside risk.
Yes.
But yeah, another thing is like for earnings strangles, for example, if people ask, can I sell the strangle in the earnings cycle? I like to say just get rid of the call and move your put up. If you're trying to collect some sort of premium, you can get the same premium if you get rid of your call side and just move the put up. So maybe that's your trade. Maybe you just do short puts a little closer, and then you alleviate all risk to the upside. Reddit still holding a 170, 180 call spread, way in the money. Max risk is 834. Close the put side.
Yeah, you're stuck. Do we know the expiration?
August 15th.
I would just hold it because it's a free shot. I mean, you got
same trade on.
You got pennies left to lose on it.
Yeah.
The markets are a little junky on the 170 strike, but you got nothing. The loss is already there. Who knows? If something happens in the market. I mean, this stock is having $10, $20 ranges, so it's not out of the realm of possibility that you can make some money back here. I mean, the expected move for the next 9 days, $17, puts you right back at the money.
And if you get that move to the downside, if it goes down to 190 or 195, this spread will all of a sudden be trading for $5 instead of $9.80. So, if we get an expected move to the downside in short order, this spread will come in a lot. So, yeah, unfortunately, it's a loser, but fortunately, it is defined risk, and still got some time left for it to work out. Is it a good idea to sell calls against SPX? Kind of the same thing. I would prefer to do a strangle versus just short calls. I think there's more efficient ways to place a bearish trade to the downside in SPX with the volatility in the 15% handle. So like diagonal spreads, butterflies. There's just more efficient ways to not take all the risk and not use all the buying power.
Yes.
I like to do defined risk diagonal spreads to the downside in something like SPX or SPY, but you could also do broken wing butterflies on the upside. Like, just for an example, in the September cycle, 6,400, 6,420, 6,460. That's trading for $800 with $1,100 in risk. So there's ways to play for downside moves without nearly as much risk.
Yeah, I agree.
Let's see. I hate end phase. Yes.
Yeah, that stock stinks.
Same. I don't know why I got back in after all the pain I
know, we got bailed out on that one.
Yeah.
I'm only out a couple bucks, but
yeah.
I sold this put at 270. I'm out like $250. 277 is what I sold this at. So continue to roll it, see what happens. I mean, this thing, it's death by paper cuts to the downside. I feel like it's just $1 a day every day.
Yeah. I have the 40 strike short put. I guess I could sell the 35 against it and go inverted, collect $1, but $1 for 44 days feels a little light for the stock that's just moves.
Can only go to 0.
Correct.
It's a pig. Yes.
Gonna start putting on diagonals and counters with this low vol.
Yeah.
Yeah, it's a way to play direction. Like I've got this calendar in live cattle that we put on yesterday. It's working out nicely. But yeah, calendars and diagonals, you're still taking advantage of near-term IV by selling the near-term short option. You're buying lower IV in the longer-term cycle. It's a very efficient use of capital, diagonals and calendars.
You know what I had as earnings after the close today?
What?
DraftKings.
Ah. Interesting.
You have interest there.
I would play it to the downside.
Whoa.
Yeah.
Why?
Because
Who are you?
they have so many of these like tax stories that come up, and now they have this big in the beautiful bill thing with the
big beautiful
with the inability to write off losses.
Oh yeah.
So if you're playing on different sites, you can only write off 90% of your losses on one site. Let's say you've made money on DraftKings, you lost money on whatever. You can only write off 90%. And if someone's doing it small, that's not really going to matter. If you're siloed to DraftKings, it's not going to matter.
Mm-hmm.
But if you're doing size, like let's say you make $100,000 a year doing this stuff, but your revenue is $2 million, that's a big problem because now you can only write off 1.8 million on your revenue if it was like let's say you made 100K, but the revenues were huge. So that's going to be a big problem. So I would say I don't see much of an upside in this stock right now. Other than
football season,
that's obviously going to be a big revenue boost for them. But I think there's a lot of issues in the space right now. So you know what? I'm going to do it.
Sell stock, sell put.
I think I'm just going to go diagonal.
Okay.
Oh my God. Yeah. The November 45 is $3, $4.
All right.
November 45.40.
See if I can get filled on this little Johnny.
There you go.
Okay. I'm gonna support you by not having risk to the downside, but I'm gonna do a little call ratio in the 2-day. So the end of this week, 67, 68, that's my spread. And then just going to the 49, doing this basically for 0, I did it for a 2-cent credit. Gives me a break even at 51 because I have that $2 wide call spread here. So gives me a little bit of a buffer to the downside. And if we open basically unchanged or maybe a little bit lower, I might be able to close this out for 20, 30, 40 cents, whatever the case may be. But no risk to the downside. So if Mikey is very, very right on his thinking here, he will profit and I will be fine. No loss. So we can
Love it.
Beautiful.
Yeah, I'm gonna buy the November 45.
Okay.
Because you get 107 days for $1 more.
Okay.
And then I'm gonna sell the 42.
What expiration?
In
One
the
day?
weekly.
The 42. Okay.
Just a small little $3 diagonal.
Okay. I like it.
Yeah. So let's let that thing simmer. Let's see. The GM. I just lost my spot.
No.
CELH. Celsius.
Oh yeah,
This thing
Celsius
still trades.
Yeah, it's back. I think they have earnings before the open tomorrow. Yes, before the open.
Wow.
They just had that little kerfuffle where there were Celsius that was like really White Claw or High Noons or something.
Oops.
Oopsie.
It's amazing.
Yeah. This one's still like.
This one scares me.
Yeah. I mean, I remember when it got down here and this was painful. Yeah, I'm going to pass on this, but I appreciate it.
With a stock that makes a big move and you're profitable on the position, do you wait for the 50% or do you lock in the gains? If it happens in a couple days and you're at like 30% or 20%, we usually just take it off.
I mean, Apple was a perfect example. We both had that position. Mike was holding on to his for a little while from earnings. I had a new position that I put on, a handful of days ago, 5 days ago, and it was a couple $100 profit. I like to just take the money and run, pat yourself on the back, free up that capital, take off that risk. You can always, get back in, do something new, take that risk off and sell it out of the money put spread, or, always trying to take a little bit of massage my risk a little bit. E-minis up 39. They're crashing. Down 10 from the highs.
Wow.
Shocking development.
Wow.
How will we survive?
Is there a USD Indian rupee pair? I'm searching.
That is a good question. I
not sure
don't believe so.
INR.
I don't know.
I don't see it.
You can email support at TastyFX, though.
Yeah.
And have them look into adding it.
For sure.
Yes.
Let's see. Palantir.
And the stock. Up only mode. I did a little trade for the cherry picks. You might like it. I did a call ratio. I widened it out. I'm in September. So you can actually do this further out of the money if you'd like to, with the stock up $4 or $5 today. I'm long the 75.80 call spread, $5 wide, and then I did the 185 200 short call spread. So it's, $5 wide. Long call spread, my short call spread is 15 points wide, so I have $1,000 in risk. I did this at $1.70. It's currently marked at $2, but it plays into the call skew. No risk to the downside. It's a pretty juicy premium. If I was setting one up now, you could do 180, 185, 190, 210, or do the 195, 210. And that trades at 90 cents. That gives you a break even at 200. Scares you.
Does a little bit.
Okay.
Stock is just mooning.
Yeah, I know. Well, I figured maybe someday it'll dip.
Maybe one day.
Maybe.
Hims strangle, but using a call ratio on the upside. 40 put. 60-65 in September.
40 put, 60-65. Yeah, this one's been a fun one to trade. If you look at this chart, it's a wild ride in this stock. Where's 40 at? I could probably be interested in something like this. You could do the 55-65 and basically do that at a scratch, give it a, same sort of break even. I would probably actually rather get the bigger credit. But this thing moves. I mean, this is a mover. $4 today. Do I step in front of this? A 60-65, $2.60. Yeah, why not? It gives you a little extra to the upside here. Let's see if I get 265. This.
There you go.
Break even on the upside is 72 and change. On the downside is 39 and change.
Pretty wide range.
Yeah.
Positive carry for the Swiss franc. So that was for the Aussie dollar. So long the Aussie dollar, short the Swiss franc. There is a positive carry with that pair if you are long that pair. If you're on the TastyFX platform on the trade or on the watch list tab, you can see the swap bid and swap ask. So the swap ask, if it's a positive number, it means if you are long that pair, it's a positive payment. If you are clicking the negative, whether it's a bid or ask, you are paying to hold that pair. What's your plan for Snap?
Me?
Me. So I have 100 shares and a call ratio, the 10, 11 and a half. So it's down $1.60. There is not much to do with the stock other than hold the shares. My basis on this is at 980.
This stock stinks, by the way.
Yeah.
It never goes up.
No, it does not. Yeah, so right now there's no premium to sell.
No.
We need this thing to get back up to 9, and then maybe you can sell premium, but I would just get out of it.
No.
But yeah, I'm going to be in this for the long haul now.
Yeah. I made a nickel.
There you go.
On my 1x3, I think this was a fast market trade that we did. I just bought back the 11s this morning. I got a nine strike long call that's penny bid that I'm leaving on for the rest of the week, see what happens.
It is recovering from the lows, which is nice, but yeah, we need it back at 9. It's been there many times this year. It's just a matter of patience. Couple more here. Got a sign on Chipotle during April's drop at 60. Should I keep going with covered calls or cut my losses and sell the stock?
You got 13 IV rank. I would ask yourself if you want to be long the stock, and if you do, if you don't mind the capital, and if you're bullish, there's just not enough volatility here to sell it. You know, I'm not selling a 45 strike call for 90 cents. I'd rather just play the upside, hope for move higher, and sell out for a couple dollar less loss or whatever your exit is. 30% implied volatility, just meh.
Yeah.
At lows, just not enticing.
What are we doing with crypto? I have shares of ETH A and IBIT, looking to sell a strangle around them to collect some premium with this range grinding. Yeah, that works. I have a strangle in IBIT. I got the 65.75 in September. It's been a great trade. And it will continue to be a great trade, I would assume. But yeah, I like the covered strangle.
I might do another little iron fly here. 25.30. $2 and change. Buying the wings just to cut buying power down by the 40 and the 15. So it'd be 10 points wide. I mean, this is, let's get in this.
I like it. Do you still have the pins Johnny trade from yesterday?
I didn't close anything. I do. Do we have this for earnings? Was this an earnings? Oh, it's after the close tomorrow. So we did this. What was this? We did this at $2.37. It's basically unchanged here. Oh, yeah. So we're going to hold this through the end of the week. 40.36. Put diagonal.
Yeah, pins. Pins is a crazy one.
Up
Stocks
only.
are nuts.
50%. I know, it's crazy. It's all crazy.
Was looking at a BABA covered call. Sorry, call vertical. Selling the weekly premium and buying September.
So a diagonal.
Yeah. Yeah, so buying the October 120 call and selling the September 130 or 135.
Mm-hmm. Yeah. I mean, I think these sort of trades are interesting right now. Direction is your choice, but just in general, these diagonal spreads, you have the volatility is not juicy across the board in equities. So I've been leaning towards these sort of setups over short put spreads, short call spreads, just because I feel like the vol is just too low. So I like it.
Yeah, you could even go to the August 22nd cycle. That's where earnings are priced in.
Mm-hmm.
The 130 is trading for $1.70, which is more than half of the value. Actually, about half of the value of the September one.
Mm-hmm.
But it's a third of the amount of time because you're getting the IV boost there. So, but yeah, I like it. Either one.
What about a little upside crab trade?
Could do that too.
120, 130, 140, and I'll use the weeklies. See if we get filled on this. There you go. We're in. I like it.
Andrew, that rule was for gambling. So, sports books, poker rooms. Does not apply to trading. Different tax categorization. It's for the W-2Gs as opposed to 1099s. What's the Apple announcement? They're announcing that they're investing $100 billion in the U.S. That's what I could find on the interwebs.
Yeah.
Enphase will come back. If first solar is so high, it will follow. Be patient. Keep leveling down to 30, 25. Yeah.
Yeah.
Wise words. Yeah, I have just one contract at 40, so
fine.
It doesn't matter. It is what it is.
Mm-hmm.
It's just more pain for the year.
Yes. One more?
Yeah, let's even get one more here. Better long after getting crushed, AMD or Upstart? I would go with AMD.
Yeah.
I like SoFi better than Upstart. SoFi is near highs, but it's when I think about the two products, and SoFi ripped after earnings versus Upstart selling off. And SoFi is smaller of a product, so it's easier to do whatever you want in there.
Yeah.
But AMD, I would say, for sure, just because it's in that AI chip stock categorization.
Yeah, what was the strangle we were looking at yesterday?
I don't
140, 180 maybe, or
I think so.
No,
Maybe something like that.
140, 190.
I think it was a 130, 190. I think it was 130, 200. It was something with a 200 strike. Maybe the 140, 200.
Yeah. Well, that strangle came in nicely today.
Yeah.
So good job out of whoever sent that in to us.
True.
Yes.
All right. We're out of time. Thanks for tuning in. If you got any further inquiries, you can always ping us on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Glenn is at Glenn Freibarger with an A. Go give him a follow. Go let him know we need the descriptions on the Tasty FX platform. But yeah, enjoy the rest of your trading day. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore.
What's the most financially irresponsible thing you've ever done in your life?
Oh, yes. Okay. So when I was like 16 or 17, I was working at Jewel Osco. I was pushing carts. I was making like $7 an hour, $8 an hour. But for whatever reason, I decided my car had to be painted from red to black. So I worked for like 6 months. I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore. So I worked for 6 months at Jewel pushing carts to paint my car for literally no reason. And that was the most irresponsible thing I've done. So don't let your kids do stupid shit like that.
What kind of car was it?
It was an Acura Integra.
Just buy a lot of near-term weekly options. If I had a $100,000 account, I was long like 20 grand's worth in the front month for sure. Don't do it, kids. Don't do it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I distinctly remember getting an email from Tasty that LookVac had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was. And basically instantaneously, like, I was hooked. I'd always seen all the stuff on tastylive with all the data and all the value I thought that bring. And then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore.
What's the most financially irresponsible thing you've ever done in your life?
Oh, yes. Okay. So when I was like 16 or 17, I was working at Jewel Osco. I was pushing carts. I was making like $7 an hour, $8 an hour. But for whatever reason, I decided my car had to be painted from red to black. So I worked for like 6 months. I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore. So I worked for 6 months at Jewel pushing carts to paint my car for literally no reason. And that was the most irresponsible thing I've done. So don't let your kids do stupid shit like that.
What kind of car was it?
It was an Acura Integra.
Just buy a lot of near-term weekly options. If I had a $100,000 account, I was long like 20 grand's worth in the front month for sure. Don't do it, kids. Don't do that.
We're back. It's Wednesday, August 13th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, after a bag of lactated ringers, some Toradol, Zofran, I feel like a new man. Unfortunately, the market's not giving me much excitement right now.
Yeah, you look good. I'm glad you made it through the hospital. So,
Huzzah. Nothing like a shot of vitamin B12 to kick your day into gear, Thomas.
They'll do it.
Yeah. I feel great. I want to run through a wall right now.
Yeah, you know, I do vitamin B12 shots for my dog. I have to do them every month. And sometimes I'm like, should I give myself a little stick? I don't know. But it's the same thing. I mean, but
I appreciate the comparison to your dog here to kick off the show. It's a good tone to set because we're going into a very, it's a sensitive kind of day around here. And not the sensitive in terms of my feelings about being compared to a canine, but sensitive in terms of how the market's responding to rates. Thomas, long and yields are coming down. I have to say, did not have that on my bingo card for today's session, but the Russell's loving it. The sector rotation within the stock market, very, very supportive. Small caps over mega cap tech. That is something that has been long gone. We're seeing it here yesterday and today post CPI.
Yeah, definitely. I mean, NVIDIA and Meta are weighing on the S&P 500, the larger cap sectors. The Russell is going 99% chance of a rate cut in September, according to the CME's FedWatch tool. It looks like we're locked in. We have Jackson Hole before, some PPI data tomorrow, but it looks like we're locked in for that September rate cut.
That's a good point, and that's exactly where I want to start today. When we go over to the slides, Thomas, we're looking at the CME FedWatch tool here. Over recent sessions, particularly post CPI, the market has pulled forward the idea that we're going to be getting a rate cut in September. 99.95% chance. Now, there's still a lot of time between now and then. The meeting is on September 17th. We're going to have another jobs report if they release it. We're going to have another CPI report. Things could change. That said, going back to the late 90s, if you look at any meeting in which there's been greater than a 55% chance of the Fed moving on that day, the Fed has followed through 100% of the time. So as far as I'm concerned, we definitely have a September cut coming. We very likely we're past that threshold here for October. And December's starting to creep up into there too, at a 53.79% chance. If you look at the inflation data, it's not exactly fantastic. Even the Atlanta Fed had to put out a whole statement yesterday about their inflation dashboard, how every single measure that they look at is above target still. The Fed officials who spoke yesterday after CPI were not exactly screaming that a rate cut is necessary. So there seems to be a growing divide here, Thomas. The Fed is not jumping in with 2 feet to pre-commit for September, and the market says you're not going to have a choice. Is the market too far over its skis with a 99.95% chance of a September cut?
I mean, I think that's the risk here. If the Fed pulls back, the market, is pricing in these cuts. Equity prices have, seemingly followed suit. And now it's like you talked about, there's still some time until September. So, say in the next week or two, these rate cut odds fall back, anywhere 80, 70, 60%. Are you likely going to see the market, reflect that, pull away from its exuberance with expecting this rate cut, and then prices drop? I mean, what could do that? Like you said, we have one more CPI, we have a jobs report, the PPI tomorrow, and then we also have Jackson Hole. So right now it's, if you've been long, and now that we're moving above these levels from July, new highs in the S&P 500, are you taking profit here? And that's what looks like it might be happening in some of the larger cap stocks. Maybe this is the turn for the Russell to do something. Maybe this is where, you take some profit from the S&P 500, you still bank on these rate cuts, and you go long the Russell. I think you're muted, Chris.
Sorry about that. One of the considerations that a lot of traders have, right? And I see this talk among people who look for new tech companies. Where can I get my next 5 bagger or 10 bagger? And so if you're going to be trading in a Facebook, right, to double your money in Facebook, that's a big lift. But if you go to one of these smaller, newer companies like a Circle or a CoreWeave, and if you're trading, there's a lot more action there and chances of seeing a doubling of the share price go up. That's not to say that that's an investor's mentality, but longer term, if you can allocate away from some of the biggest winners and buy some things that are relatively low value, rebalance your portfolio, that's kind of how the game is played. So I look at these rate cut odds rising, and I see a Russell today that is soaring. Yesterday, post CPI was up 0.7%. Then we have the end of the day close where it's north of 3. That continues here in today's session, up 1.41%, Thomas. We break through the yearly highs, most importantly. We bust through the levels that we had in here in July, right near 2,300. That is as clean can be. A false breakout, whatever it was a few days ago, gone, done. Where is the bear case right now for this on the charts? I have a very difficult time seeing it.
Yeah, me too. I am likely getting into a long call spread here on the Russell, just pretty much right at the money I'm looking at, a little outside of it, just there's more volume there in the 48-day out contract for September. I think I'm going to pull the trigger here to get some exposure to equities outside of NVIDIA.
Outside of NVIDIA. Well, the Russell right now, it's a 12.5 IVR. Volatility has been coming in over the course of this month. We've seen high IVRs north towards 30, now back at 12.5 here. Yesterday, Thomas, I was sitting in a short call spread. We had the breakout move, abandoning the position. There's no reason to be in a short call spread with how the Russell was performing yesterday. So obviously content with getting out of the way here today as well. The NASDAQ is, of course, the most interesting consideration because among the indexes, just thinking about the channel that we've been trading in from the Friday before we go into the US-China conference in Geneva weekend, the announcement is made on the 12th. That uptrend remains, but the NASDAQ sitting pretty darn close to channel resistance. Something like the S&P 500, on the other hand, using that same exact time frame, it hasn't been as strong as the tech-heavier counterpart. So if we're in a period of catch-up right now, maybe the NASDAQ, maybe the big tech heavyweights, they're going to be sluggish, but it makes room for this breadth expansion, a breadth expansion that began yesterday, has continued into today. And that was one of the biggest quips that I had of this market when looking at how we were performing here in the month of August so far. Sure, ES was pushing up, but where was the participation? The last 2 sessions, we've had significant strength in the equal weighted indexes. RSP outperforming the S&P 500 by 88 basis points today, 0.88%. We can go over to QQEW. That's up 0.58% compared to the headline NASDAQ's 0.15% loss. So yes, the indexes themselves, the top line ones are struggling, but that does not necessarily mean you should be bearish.
Yeah, I mean, this is a healthy thing to do for breadth to expand out. I mean, you got over 400 of the S&P 500 companies up on the day. You got the couple big ones pulling, like you said. I see it as a healthy readjustment at a time when, we've got some risk behind us. We still have some ahead of us, but we're nearly fully pricing in this cut. It's a good time to rebalance for this upcoming September rate cut.
It's a good time to rebalance. It's a good time to think about what longer term exposure looks like. If we trade in this channel, Mr. Westwater, I could foresee an S&P 500 that reaches channel resistance sometime by late August. In fact, August 22nd is not that far away. We're talking about 9 days from now. Pushing up into that area, it seems outrageous, looking for another 230 points or so, another 4% to the upside. But this is a market where the technicals have not let us down. My big regret and mistake in the month of August here was thinking too much about the seasonality, thinking too much about the positioning in the market, which I think are still important considerations. But the reality is that the trend, the channel, 1 to a third touch here after non-farm payrolls, that was an excellent buying point if it was in the NASDAQ or the S&P. So up here, what's the risk to reward? I mean, I think if you're going to play this long still in the short term, things don't go up in a straight line. But if we are indeed breaking out of a multi-week consolidation that's been very neatly carved out between 62.40 and we'll call it 64.60, one necessarily has to look higher just from a pure measurement standpoint into 6,700, presuming that you're giving yourself enough breathing room moving forward.
Yeah, and the PPI tomorrow, I see that as an event where risk is just going to come off. That's one less event where you have to worry about it impacting rate cuts. Of course, if the number is way outside of expectations, which I don't expect, then that's another story. But likely going to come in, be fine. The market will digest it, and then that's one thing out of the way that could mess up this narrative that's been driving us higher, which is, the rate cuts are coming. Corporate earnings were strong enough at least, and you have this trade situation that is seemingly calming down. And on the top side, you have a potential move towards a ceasefire with this meeting on Friday in Alaska. So it's one more thing that could kind of settle some fears.
The market today overall, Thomas, is just, it's almost incredible how resilient it's proving here. But we talk about the rate sensitivity at the top of the show. I have to draw our attention to some of these sectors that are just exploding to the upside right now. We have our home construction ETF, which is adding on another 3.89% right now. Home builders, another rate sensitive name, up 3.21% in today's session. Even biotech, which has not had a really good run this year, it basically just got back to break even for the year on Friday of last week, finally turns positive year to date. The past 2 sessions, that's up today. Wow. XLY, consumer discretionary, building further against a clear pivot area. Support in January, resistance throughout May, uptrend still intact, trading into a new cycle high.
Yeah, and I mean, home builders railing like this is good because it's the rates are going to come down. Home prices are still high. There's a lot of people that have been on the sidelines, so there's that backlogged supply of buyers you have there. So they're expecting a flood of new construction to come in. The materials for houses, they're not too impacted by tariffs right now. So. But even then, it's the buyers taking the risk, not the home builders with that scenario going on there. So home builders, I think the strength will continue there for a while. But it's interesting how strong just recently this push has been higher in the home builders.
And it says a lot because if we're just cutting rates, and I'm trying to reconcile this today, right? If we're cutting rates and it's a reflationary cycle, which I surmised as of yesterday, today is not providing me evidence to back up that point of view for what it's worth. But if I'm surmising that Fed rate cuts don't automatically translate into lower long end yields, then it would be unreasonable to expect that mortgage rates would plummet significantly following whatever Fed action transpires in September. Fed action, by the way, that Treasury Secretary Scott Bessent is alluding to could be 50 basis points worth of cuts. He said that if the Fed was really, they've been receiving accurate data, 150 to 175 basis points of rate cuts may have already been down the pipeline. Now, I don't agree with that, but if we use last year as at least a corollary, Thomas, the Fed cuts rates in September, cost for a HELOC, home equity line of credit, right? That goes up. 15, 20-year floating fixed, doesn't matter. Those go up. Jumbo mortgages, those are high. So the only way in which we actually get lower rates at the long end of the curve is if there's some significant compression in risk premia and growth expectations and inflation expectations. So I'm not exactly sure. Is this short covering? I'll need to take a look through some of the data for overtime later today. But it's really the sectors that have been unloved during the April rebound that are garnering all the attention these past few sessions. And if only to that point, we go over to technology, XLK down by 0.23%. I believe this would be the second highest close ever in history, so not exactly a bear signal. But it does show that a rising tide now, asset inflation, people are piling into the things that had not been inflated since the April low, almost as a catch-up trade. And that's, I think, informative enough where if I want to be bullish on stocks, at least for the remainder of this week, if I'm playing the short term, what looks better than RTY? I don't know if there's a technical setup right now that screams that we have a chance here to make a new 70, 80 points. This looks like it has 3 to 4% to the upside at a minimum, considering the range that we carved out here, 22 to 23, 100 points. It's a good looking chart.
Yeah, it's definitely a good looking chart. I mean, technically this looks like a buy to me. Into a new range, you might get a day or two where it's, reestablishing a base, but I expect us to continue to grind higher here for sure.
The uptrend, if it is intact still, we have to re-anchor our drawing points to the low that we had on April 9th, back to the low that we had here on August 1st. And so to this end, this just looks like a very simple ascending triangle that has indeed tried to break out to the upside. That's not something you fade. Jamal, I believe, is still in on the long 2400, 2450 call spread, but that's perfectly well situated here now after what's been a very decent run up. I question, Thomas, as we think about the second half of this week, I look at an economic calendar that has a few noteworthy events. Tomorrow, PPI, of course, is coming out of the United States. CPI produced such an enormous reaction. It went well beyond. IV was implying 40-point move, realized move by the end of the day was something closer to 68 points. Do you see a report like PPI potentially packing that punch on Thursday?
No, I think it's going to be something. I think something right now it's overhanging the market, and in terms of you don't want to get too long if this report comes out hot. Then those 99% rate cut bets for September, go down to 90, 80. How's the market going to digest that? I see it as an event where it's just going to be one thing that's removed from worrying about. So. We get through it, the market can focus on the good things and keep going up.
Focus on the good things and keep going up. If we're only that simple. I thought that we'd get a market here that stayed pinned this week. S&P 500, to me, this is a really tough chart to ignore short term. We just broke to a new high, 4-hour time frame. That's an ugly looking candlestick. And sure enough, it closes below the prior one after setting a new high. Technically a key reversal, but how often have these key reversals on a lower term time frame been viable? That should be the next question. Here's one that didn't find any follow through to the downside. So let's find a second one, Thomas. Oh, here's a second one. Another outside engulfing bar. We set a new high. We closed below the prior candle low. Was there any follow through? No, there was not. Okay, so what about this one then? What gives us reason to think that this is the one that we should put our faith in? I don't know if it's there, because on the way up, these sell signals have not worked. So if you're a candlestick chartist and you're looking at these, this looks like this may have topped out, I'm going to get short against 63.80. Hasn't worked. If you saw it again here, I'm going to get short against 64.40. Hasn't worked. So do we want to get short against 65.10 right now? You could try to call a top. I saw a really great quote today, though, Thomas, which I wish I read a week or two ago. You can only call the exact top in the market once, because there is only one such time the market reaches a new high and then doesn't establish another one. So just playing the uptrend here, I think my fault this month has been trying to be too cute by half. And if I had just been the dumb bull that I was in July, following the technicals and not letting myself be enamored by some of the seasonal stats, this would be a much more pleasant conversation. Let's be clear. It would be a lot more unbearable. But it would be a different tone and tenor of the conversation from my point of view.
Yeah, no, I agree with that. what do they say? Don't get off the ride until the music stops, something like that. It's the same as your quote you just said. We're in a bull market. So, trying to pick tops does not make sense to me here. I don't try to do it. Sometimes I'll try to pick a bottom more often than a top. But I think that, picking bottoms, short-term bottoms, it's going to work a lot better for you when you're in a bull market, which, is what we're in my opinion. And through the rest of the year, I have a pretty long bullish view on these, but it's, I've been keeping pretty light on equity exposure, keeping 1-2 trades on, usually SMH, NVIDIA, Tesla, something like that. Now is the time where I think I'm going to start playing more in RTY, smaller cap stocks, some of these catch-up names that have been lagging. With these rate cuts coming now, it's perhaps a good time to, throw that into the mix. I'm going to continue doing the longs on NVIDIA, Tesla, etc., but I'm going to mix that in too.
I really like what you said there about you're more comfortable picking bottoms and tops. I think for stocks, that's the only way to go about it because of the natural tendency of the market to go up over time. It's a lot less risky to say that this is going to be the low than this is going to be the high.
Right. And, when you're picking tops, it's usually someone who's searching for a big win, And, if you base your trading philosophy on getting a big win every once in a while, you have to have a certain amount of luck. And luck isn't, really what you want to be depending on. If you do it, if you're one of the few people that do it and it works for you, that's great. But I don't think it's really viable to try doing that otherwise.
No, there's a difference between trading and taking calculated risk versus just gambling and punching lotto tickets. I would point out here that even with this, what our producer Josh might call a shooting star candlestick here on the 4-hour time frame, we didn't actually get below the high from July 31st, which was 6468.50. Today's low is 6466.75, and we're in at 6474.5. So one might argue, Thomas, we punched up through the former high, we pulled back into it, and then we're stabilizing there. Former resistance turned support, scroll out, big picture, 6,700 here, measured move. Okay, give us a few days of meandering. We could probably get up there mid-September. I think that's worthy of a consideration. So going out to 44 days, maybe a little bit more than that. Let's go to 48. 67, short 67.50, 29% pop, 3-1. Back on the train, Thomas.
There you go.
It was a brief vacation. It was a short holiday. I regret it. It was miserable. Would not recommend being a bear. Or not even a bear, just directionally neutral. Learn my lesson. Let's go over
you
the
got to
bond
take
market.
some pain once in a while.
Really don't want to take pain ever, particularly my trading account. But c'est la vie. We can go over to the bond market where it is a nice rip back. This to me is really fascinating because I have no understanding why the Fed would feel so pressured to cut rates in September. I want to bring up the Atlanta Fed's inflation dashboard here. So this is just forget opinion, forget what Thomas or I think. This is a very simple observation. If an inflation measure is more than 0.5% above the target, it has a really bright red coloring. Every single box here has bright red coloring. It's going to keep it simple. It just means that no matter how you slice and dice the CPI numbers, what a little adjustments you make, if you strip out certain categories and add these back in or change the weightings, as so many of the regional central banks do, none are at target. None are close to target. And while we're moving closer to target over the past year, none of this implies like Cleveland 16% trim mean CPI, 3.3 to 3.2. All of these gauges are above. We also have an unemployment rate that's sitting at 4% and change, 4.1, 4.2, depending upon the recent month. Labor force participation has come down because of immigration. And we've seen, according to the Border Patrol data, that there's about 2 million fewer undocumented people living in the United States now than at their peak last year. And that could be either through deportation or self-deportation or what have you. So the labor force participation numbers that are shrinking, those are meaningful insofar as they're helping compress or keep down the unemployment rate. If the labor force participation rate for last month was the same as it was at the start of the year prior to Trump taking office, Thomas, the U3 unemployment rate would not be 4.2% as it reads now. It would be 4.9%. So I'm not exactly sure, right? A 4.9% unemployment rate, does that warrant a Fed rate cut? Probably. In the post-global financial era, the non-accelerating inflation rate of unemployment, NIRU for the Fed, has been less than the typical 5.5% level that they've historically operated around. And they've treated that level as closer to 4.5%. So I just find this set of circumstances fascinating, that effectively we're going to be cutting rates. We have above target inflation. It doesn't look like recession's here, although it persists as a risk. Stock market's obviously not behaving like inflation is going to be a problem if Fed rate cuts or hikes would ever be a problem. But we're now back to break even. When I say break even, I mean the midpoint of our trading range in ZB this year. The long end of the curve has effectively oscillated around 115.5 for the past several months. Here we are again today. So Thomas, as a bull, I know that you've been leaning long bonds the past several sessions. We did have this pullback into the yearly low that was caused from that fat finger trade in UB last week. We get there on CPI, we bounce again. Are you sticking long bonds? What's compelling you to make any changes to positioning at all?
I'm still long as the end contract. Probably just going to roll it because I have 9 days out on this, so I got closer than I liked. The ZN is just dictated by these rate cuts increasing. So as long as that's happening, I think staying long ZN is probably the best strategy to do right here, besides for, an iron condor too, taking more of a directional approach. I have a long call spread on here, so I'm not sure if I'll exactly roll that or pick another strategy. But it looks like ZB is ready to move higher too. So I haven't been in that one. I got out of that one last week actually with the gain after taking a lot of pain through the month of July. So I'm sitting on my hands a little bit to get back into ZB. Probably do that next week. But the market for inflation, it wasn't even that great of an inflation report, right? But what the market is saying is we just have to avoid any big upside inflation surprises, right? Because inflation, it hasn't come down to target, but it hasn't been there. So the Fed is still going to cut, even if we're at a 2.8, 2.9, 3.0. We just have to avoid, something like a 3.3, a 3.4 or more. So I think being long bonds, which I've been doing all year, is probably I'm going to get back into being on the long side. Even though I'm still long ZN, I'll probably get long ZB2 pretty soon here. You're muted again, Chris.
Sorry, I'm sneezing. All the sneezing. It's all the sneezing, Thomas. I want to be polite and not sneeze on camera. I think about what happened in COVID, right? The tariffs in and of themselves, if they are a one-off price rise, which has been a clear line that we've established going back to April. The Federal Reserve's own data from Trump's first term, which we've referenced a number of times here on the show, suggests that tariff inflation, you have inflation going like this, it bumps up at the hike, and then it continues along its predetermined course. And so to that end, the Fed typically thinks about the larger decline, the more important decline in real output and growth on the other side of the tariffs. But what we have going on right now in terms of the mix of the data, okay, so we're going to look through the tariff inflation and think about the decline in real output that would favor lower rates. But we also have a lot of people leaving the labor market, right? Not a commentary on whether or not the deportation should be happening in their form or fashion. But we've seen that in the areas in the economy where the deportations have picked up, wages are getting stickier there because you have a shrinking labor pool, which means the remaining people in that pool have more bargaining power for their wages. right? If there's 5 companies and 10 workers, the companies can set the terms. But if there's 5 companies and 5 workers, the workers can negotiate. You're going to have to hire one of us. Pay me. So you have this really interesting mix right now, right? Where inflation pressures in core services, not just core goods, but core services in yesterday's report was likewise rising. In hospitality, in retail, in places where you're seeing typically jobs for immigrants, or I don't want to say unskilled, but less skilled, no, formal professional training, apprenticeship type of job. Okay. So this is an interesting mix. Like the Fed could be cutting rates and giving us a more of a stagflationary world in the short term, where on a relative basis, unemployment rate keeps going up. We have growth continuing to pull back in, even if it's remaining positive, and inflation is staying sticky. So I think whether or not this is a good look for the bonds long term is a completely up in the air question. If it's a reflation series of cuts, just like last September, October, we are probably getting rallies to sell here in notes and bonds over the next few weeks. So I'm with you. Right now, I still think, I've held directionally neutral. It's been working out well. It hasn't hurt me. So there's no reason to get away from it. But if we're up at 117, 119, I'm going to pull something out of Sosnoff's book. At 117, 118, the market has the cuts already baked in.
Right.
If you're looking at ZB. And it's just difficult to justify that unless you start really saying we're in recession.
Yeah. So, I mean, you get up to 117. What do you do there? You iron condors, more directional. I mean, I'd imagine you don't get a quick retracement with being dictated by Fed policy, which moves monthly to quarterly rather than day by day.
Okay, so right now we are at 115.5. Let's say we wanted to sell, we wanted to do a short call spread up against the 1 standard deviation move to the upside 44 DTE. I'm not sure this is a fantastic looking trade here. Okay, because you're risking what? 9 to make 1.
Yeah.
Perhaps we can pull this in. Now we're risking 6 to make 1. So it's not great. That said, I bring those up because if we're at 115 and we're talking about doing the 118, 120 short call spread, let's say we get up to 117, it basically means that we're doing the 120 to 122 in terms of pricing, assuming volatility stays the same. So is this worth a 6-to-1 risk to reward, 70% probability of profit? Under all of the circumstances, I would usually say no. But the bet then becomes we're careening into imminent recession, and we have a full 1 cut for price for September. We have most of greater than the 55% chance for October, and we're on the cusp of broaching 55% chance for December. How much more can we go? I suppose we could fully price in December and start dragging forward a 4th rate cut for the rest of this year. We only have 3 meetings left this year, so you'd have to be making a bet on 50 basis points. But if the Fed's doing all this easing up front, Thomas, doesn't that mean that the economy is going to be stronger a year from now? So why would yields need to keep going down? The scenario that if you're a bond bull is that the Fed does not cut enough going into recession, which means they're going to have to do more later on. I don't know if that's the signaling we're getting here today. Although the Fed officials telling us that inflation is still too darn high, that's nice. We want to hear more of that.
Yeah, and when we say a one-time price increase, I mean, it's hard. What does that actually look like? I don't think it's, 1 month CPI is all of a sudden really higher, and then you go the next month and it's, back to normal. I think, one-time price increase means prices increase within, a whole year or half a year. Is that your view on it?
Yeah, it's not like flipping a switch. It's not like, the tariffs are on, so prices are up this month by 5%, and the next month we go back to 0.1% month-over-month readings. But it's an understanding that when the tariffs go into play, the company is going to raise prices around that just once, right? And that may mean negotiating with the supplier, cutting deals, discount sales, changing prices is in the final step. They're going to lose some volume, but they go up on the price itself. That is the one-time price increase that all of those steps together, right? And so that doesn't play out on a single month, especially these kind of tariffs where they're Michael Scott, snip, snap, and they're on again, off again. And we don't get that kind of clarity for a business to say, should I even negotiate with my suppliers? Can we even get the process started of the tariffs? Although some companies have. GM this week reported earnings 2 weeks ago. It was already 2 weeks ago. Wow. July.
Yep.
Yeah, I guess we're like I can't believe it. I keep telling people, yeah, I just turned 36 like a week or two ago. Right. No, it's been a month.
Yeah.
Okay. So July 22nd, GM reports earnings, over $1 billion charge related to tariffs. It got walloped. It's obviously bouncing back now, but they've made that determination. But it took them a while to get through to figure out how the tariffs would actually hit. So we're going to keep moving here, Thomas. I want to move over to what's going on in the metals market today. The metals remain mixed. The vol is absent still. Gold here up by 0.2%. Pinned at 3,400, which this has been the midpoint of the trading range. The high that you get April 22nd, the low that you get May 15th. We'll call this post-Liberation Day. There was the whole stuff hitting the fan part of the phase when people realized, oh my gosh, what can I sell and raise cash? What's not nailed down? So gold and silver get thrown out with the bathwater. And then once we realize, okay, they're not actually doing this, and we get the pause, gold rips. You get that additional premium built in around the trade deals. But here at 3,400, the single best trade in recent months has been what? It's been directionally neutral. It's been going directionally neutral. Not my cup of tea, but it's been the right thing to do. So thinking about that here, Thomas, we go to Iron Condor short, we go to the platform. Let's bump this up to, was 43 DTE? Very simple. 3 wide, about 85%. We'll go 80% here. Up. Okay. 61% probability of profit. You could sell the 36.25, 36.50 short call spread. We could go over here. We could do 31.75, 3,200. Where does that put us on the chart? It puts us well north of the highs that we had here, puts us below the lows that we had back here in May. This is an interesting setup, Thomas. And I say it's interesting because you can play the 4-month trading range in gold. It's not quite a 2-to-1. It's more of a 2.5-to-1. But 2.5-to-1 risk to reward with a 60+% probability of profit, golden. Send it.
Yeah, it's not bad at all.
The pinning here is really what matters. There have been 2 ways to make money in gold. There's been 3 ways to make money in gold the past few months. Short call spreads, short put spreads, short iron condor. Right? Ilya has played this well. He was bullish, but short put spreads because the vol was so high. I was still staying long calls. He was adhering to the tasty methodology. I was stepping outside of it. He made money. I did not. Lesson learned. But here, as Mike, Nick, Jamal, so many others have, at 3,400, the price is right. This is the Bob Barker market. And as long as gold is at 3,400, just like ZB around 115.5, we'll call it the condor. Silver's a little bit of a different story, though. Thomas, are you still long?
I am. I have the, I'm 76 days out, so I have plenty of time. I'm in the long call spread 39.5, 39.75.
You and me are in similar shoes, my friend. And I would like to talk about the beautiful resiliency here technically in silver right now. A few days ago, you had the green bar, the doji, the down red bar that brought you back through your 1 week and 1 month moving averages. And the sky's falling because we are pretty close to clearing that June swing high. A June swing high, when you go down to your lower term timeframes, you could see that this June swing high was actually quite decent support. But alas, the bears fumbled the ball here because the past 3 sessions now, there's your Morningstar candlestick cluster, Thomas, right at support, right up against that 1 month moving average. A bottoming pattern, a trio of candlesticks bottoming, vol going back up, no longer negative IVRs. Okay. Now you're piquing my interest. This is the contemporaneous type of relationship that we like to see play out. I already have my position, though, just like you. So keeping that in mind, if I was looking at 43 days and just the recent swing high here in the SIU5 contract, maybe we go over to Z5, double check this, 40. Okay, so we're over in Z5. We go over to 40, long 40, short 44.5, 38% pop, risking 1 to make 2.5. You could spread this out a little bit more, go $1 wide. I myself am sitting something a little bit more aggressive. That's in the 40s with you at 76 DTE because I think this thing is going to run. That right now trade would be something more akin to 4-1, risking 930 to make 4,700. Depending upon your aggressiveness. But listen, if the Fed's cutting rates into a cycle where inflation's still above target and government deficits are expanding and government debts are going up, and yes, the tariff revenues are coming in, but the government spending is so much greater than the tariff revenue that the deficits and debts are still increasing, as the most recent trade data showed. Basing the currency 101, Thomas. This is a market that we should be looking for metals, and still it's so difficult to get bared up given how well they've done in this exact environment for the past 5 years.
Yeah, and I mean the environment with the dollar, where if you expect it to lag, you know, you're thinking that central banks are still going to keep adding gold to reserves. So I mean that has a positive effect on silver, just through the correlation there. So I mean I think the environment, the rate cuts, everything is lining up for silver to really make another expansion higher.
So silver has its little run here. Whether or not this was the pullback, it does set up a near term, and it changes the equation a little bit. But if we want to call this here, A, B, C, okay, A, B, C, 41.18 becomes this most recent impulse potential high. So I myself, like I said, I do have this 42.43. This is more of a play. I don't think I'm at 76 days. This may not be something that reaches 42. This is going to be something where, thinking about how I have this exposure, not just here on the fall count, but elsewhere, if we start to get up into that 41 neighborhood, start to peel back the exposure. We don't need to have this go to max profit. And quite frankly, you shouldn't be going for max profit on every single trade anyhow. But this now becomes a situation where the technical impulse for a more considerable rally, as was originally outlined, for a move through 42, that's looking less probable because the support was never found there. So 41.18, 41.20, 41.30, if we're peaking up there at any point, I think that would be a good place to take some profit, wait on another pullback, reestablish longs after, a week or two of a little bit of retrenchment. But this is a great chart. Silver, of course, kind of difficult to trade. I think that's worthy of the disclosure here. Even at 76 days, Thomas, we've only seen 18 trades in our 42 strike here today. So if you're trading this, it better be a little bit closer to the money, or as the obligatory, head over to SLV. For the average retail trader, this may be a more cost-effective, but importantly, easier way to get in and out of the market. So I like the SI futures myself. That's where I'm operating. I like the SI futures options. But SLV for your average retail client, Thomas, is probably the better vehicle, and we shouldn't dismiss that.
Yeah, very, very liquid SLV.
Give me some copper news, Thomas. We're going to head over into energy in a little bit, and I'm excited to get you riled up to tell me about energy inventories. But copper has been one of the more fascinating trades, given its involvement in the tariff saga. It's only 6.3 IVR, though. Given all of the noise, the news, the interference, is there enough juice to squeeze out of this where it makes it worth trading for you?
No, not really. I mean, I said, I think 2 weeks ago when we had this big drop, that I was going to wait for, prices to reestablish. You probably get some sideways action. It's kind of what we've seen. I just don't know if, the outlook for the rest of this year really supports it going one way or the other. I think this is somewhere where we could chop around sideways for a bit more. We had Chile State Copper Miner, Cochilico, I think that's how you pronounce it. They put out their forecast for 2026, $4.30 a pound. So we're trading above that already, 18 cents above that. I just don't, without a big economic expansion in the rest of the year, and I think it'll be, more subtle than that, I just don't see a trade here. I'm not, there's not a bunch of volatility where you could do something where you stay neutral. There's, it's not exciting right now, I don't think.
Just in terms of how unappealing the volatility situation is here, I try to construct the trade along similar terms to what was just looked at in gold. So we're looking at a 61% probability of profit. We're looking at risking 5 to make 1 in that neighborhood. In gold, the trade that we were just examining here at the 76 days, okay, that was 62% probability of profit, Thomas. So it's this 1, 2, 3, and 4. Okay, so that's 62% probability of profit, risking 2.5 to make 1. So basically the same pop percentage. The difference in volatility is giving us the better risk to reward here. Do I want to go into copper right now with its 6 point whatever IVR, 6.3, and take a 62% pop where I need to risk 6 to make 1? That's not great. And where's the liquidity? Where's the volume? Don't Hotel California yourself into a trade. And sure, the market maker will come out there if you are willing to tinker with what you want to get filled. But this is copper just doesn't have it right now, Thomas. Ignore. Energy looks sick, still, more so. Natural gas is obviously something that's a terrible thing to trade. But that's my bias speaking because it's eaten me alive the past 2 times. I'm currently in the timeout box here still. But I want to talk about catching falling knives, Mr. Westwater, because that is something that's come to my attention here. A number of people have commented, Chris, how are you ignoring natural gas? It's 39 IVR, 40 IVR, 45 IVR. It feels like a falling knife still. I'm looking at this on a shorter term time frame, Thomas. Yes, there's a bounce today, but the slope of these moving averages all remain negative. We can go down to a 4-hour here. The 4-hour is just turning positive. Why would I look at this chart and think now is the time to say that natural gas prices have stopped falling? Is there something in the inventory data that we may not know about?
No, I don't think so. I mean, when it dropped under 3, there was a lot of traders, expecting for a big retracement. And when you don't get that right away, in this kind of market, you get a lot of people just backing away from the trade, not trying to force the shorts out. And the weather, it's been slightly helpful to kind of, arrest this bigger move, but it hasn't been enough. And now we're going into the part of the summer where, the chances for a big heat wave are kind of diminishing by the day. So like one last hurrah to really kind of pull these inventories down a little more is vanishing. And it looks like this might be, a period we go into now through November maybe, where you get, there's just not much hope for the bulls to really stage a big comeback here. I'm still in a short put spread at the 43-day out contract at 3. We're trading 292 right now. I'm going to keep it on for now. Don't feel too great about the trade. If I was trading it right here with fresh eyes, there's some volatility to play around with if you want to sell do a short put spread, but it's just fundamentally, it's not the greatest outlook right now.
So if only to make a point, you keep talking about natural gas. If we were to think about where the population lies, so let me pull this map up. This is the 8 to 14 day temperature outlook. So a good chunk of the Northeast is here. If I were to take a straight line, Thomas, and draw it right through the middle of Indiana, Gibson, Indiana, in fact, and draw a straight line down from north to south, okay? 50% of the country's population lives in this area. If I were to go out a little bit further west to the 98th meridian, that would mean 60% of the population would be living over this area. So yeah, it's really hot in Utah, and that stinks if you're out in Utah. But this portion of the country, heck, this whole entire portion of the country has less people than this portion of the country. So most of the country, lower temperatures. Good news. especially for us, Thomas, our electricity demand won't be as high. Maybe we can keep our houses cool without having to get a second mortgage. But for natural gas, right, this is the big story. Temperatures not as hot where they need to be, and well, inventories are where they are. Oil is a different story, though. This is looking a little bit more directional, and it has in recent days. It feels like we've chewed through some really meaningful support around 62 in the CLV5 contract. I'm not questioning my positioning here just yet, but at 35 DTE in this short iron condor that's been on the books for a little while here now, it's not fantastic because it's getting away from the midpoint. Am I wrong to ride this down from 35 days to 21 days, given how we've seen the market shape up over the past week or two?
Are you wrong? I'm not sure. I actually have an order in for an iron condor, and I'm doing that at just 35 days out, between 59 and 64.5. Max profit 290, max loss 210. So just, expecting a little bit of range trading here after this move. You had the International Energy Agency, not to be confused with the EIA, come out with their report. A little bearish, their numbers, saying that supply is going to, outstrip demand, things like that. So oil's come down a little bit further than I expected. The 60 level, it's going to be a test if we keep going. We're down 58 cents, 59 cents today. So not a huge move on these EIA numbers, which said that we added 3 million barrels from the previous week in commercial crude oil inventories. So we're still 6% below the 5-year average. The thing is, gasoline stocks, distillates are also going up. So, it's showing that demand is kind of muted here, and inventories are increasing. So it's just not the best scenario if you're trying to get long. I don't think, you see any kind of upside retracement anytime soon. We're already expecting the Fed to cut rates. That's not feeding into any expected energy demand in the short term. So if I was playing this, and I'm going to play it pretty neutral for, right here.
If there's a line to watch, it's going to be 62.22. That is the low day close on June 24th, the day that day after we had the U.S. Bomb Iran. So the market opens up, we rip higher, we come back in on that Monday, right, Thomas? Tuesday, everything is officially done. We did see the videos from the Iranian government of them shooting missiles at the Statue of Liberty, and the Statue of Liberty blowing up and then presenting it on Iranian state television as if that was actually what occurred. Being a New Yorker, had some friends in Lower Manhattan double check for me, and the Statue of Liberty was still there. So when they were sending out that kind of BS propaganda, we knew that it was finished. But I think that close kind of is the important turning point for this little post-Middle Eastern tensions geopolitical risk expansion regime. If we get below there today, forget bounding around the midpoint here. Something more important could be occurring. You talk about that Russia-US meeting coming up. Not to be dismissed. Not to be dismissed.
Yeah, no, and I mean, we've lost 40 cents of backwardation in oil since the start of the month. So, the prompt spread, the physical demand proxies are signaling, some weakness ahead.
Thomas, we have $1 to talk about here today for a quick minute. I just want to give a brief look. The uptrend here in the dollar, starting to look a little sticky. The opposite of this, the euro, because we're getting off air for treat the skepticism momentarily. Let's go over to 6E, not the continuous. Dollar's not looking too hot all of a sudden. So if reflation's right, then yield should be going up and dollar should be coming back higher, but we're not seeing that occur right now. Again, testing a thesis out here, because if we are going through a regime shift, which I do think we are, you don't have that kind of outperformance in the small caps to the degree that you do under the conditions that we did unless there was a regime change going. The dollar tactical bounce may be finished. But one last note on that, Mr. Westwater, the Bank of America Fund Manager Survey is now out, and the most hated trade is still your old greenback. It is the most shorted anything. Forget whatever, not just currency, oils, metal, gold, stocks, bonds. The dollar is still the most shorted trade. And that to me is very appealing to be contrarian. Tomorrow's calendar, UK GDP in the morning, US PPI in the morning. And then that's really it. Take a look at the jobless claims. Who knows? They may be more important to pay attention to moving forward because those are aggregated from the state level up. Who knows if we're going to get NFPs anytime soon, Mr. Westwater. But you and I will have more to talk about later. I'll be back later for overtime. Until then, we're going to take a quick break here on Tasty Live. No, not until overtime, but until Truth or Skepticism, because Sosnoff and Radigan are up next. You're watching Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place.
Crypto. We got it. We get it.
Hello, everybody. We are back. It is another glorious Wednesday. It's time for a little truth or skepticism. I'm Tom Sosnoff, and I'm here with my buddy Dylan Radigan. And here we go again, Mr. Radigan.
Now I'm your buddy, huh? Now I'm your buddy. Come to this.
What you know what they say? What happens behind the scenes? What happens behind until the countdown? What happens behind there is just
something that happened.
Fun little speculation.
Okay. Well,
maybe someday we'll intentionally leave the mics on and that kind of stuff. But until then, it's we're all just having fun and until there's an open mic.
Okay. Well, I had a little background on today's topic, so if I might just jump right into it, if you don't mind.
I would appreciate you jumping right into it. I think it's a fun one today. I'm looking forward to it.
I believe that there's a larger issue at work here, but I believe that the fundamental thing is that it appears that there is a substantial portion of the American population that's a strong believer in a centralized government with a single point of failure. I feel like we saw this in the Obama administration. People were happy to have President Obama drone anybody he wanted without any supervision. I think we saw this in the first Bush administration, or excuse me, the W. Bush administration with the Iraq War and all that jazz.
I would argue that's a stretch.
I'm quite sure you'll be doing some arguing, but I'm not even worried about that. And I think what we're seeing now with President Trump is sort of the ultimate effort to consolidate centralized power. I think that what we're looking at is a general. I would argue that the American rhetoric around distributed power, conservatism, states' rights, small government is a hollow rhetoric, regardless of political party. And then and it's even more hollow because at least the Democratic Party doesn't really sort of tie themselves to the icon of conservatism. They say, well, government is your friend and government can help. Whereas the Republicans use this rhetoric of whatever you want to call it, conservatism, I guess, the small government and I'll stay out of my bedroom and stay out of my life and all that stuff. And yet we have a President Trump who seems to be the most ambitious to consolidate and accrue as much power as humanly possible, with apparently the total support of the American people. And I think the American people actually I think all people, not just American people, I think that all populations are vulnerable to the laziness of assigning power to a single leader. I think that's why the sort of idea of democracy was even emerged, was, we have all these kings and then all these things sort of lend themselves to human nature where they're like, well, I guess Tom's in charge of everything, even though I don't like Tom.
It's why we still have religion. I mean, there's a lot of things you can argue.
There's a sort of human reflex to be like, well, at least I don't have to worry about anything because now the big man has got it or the big lady has got it or whatever. And I think that it's a super dangerous thing. And I think that it's bigger than Trump. I think Trump is exploiting it. I think Trump is exploiting it more than anybody else maybe ever has. But I think it's bigger than him.
If Bush Sr. was V1, version 1, and Obama was version 2, Trump has taken it to a new level on version 3. Because
I agree with that.
Because Biden was pretty much non-existent. So I think that this is a completely, we've entered a new paradigm with Trump, and version 3 is nothing like version 1 and version 2. I think the American people were fine with version 1 because they thought there was some kind of logic and rationale that supported the moves. I think people were absolutely fine with version 2 because Obama was one of the most popular presidents ever, and came in a very difficult time, and so he didn't come into a stock market that was at all-time highs. He didn't come into a booming economy. He came into an absolute just a disaster, an act of God, and was able to turn it around and turn us into a booming economy.
And so if that's version 2, okay, fine. Version 3 is not even, it's not even like the same sport. Version
what
3,
are the keys to, like, let's assume that there was always a mild preference to allow a centralized power.
Yeah.
Okay. And previously,
well,
what is the key distinction? Where is the fork in the road on this?
Well, the key distinction is that is that we've gone from a country of people with spines to a country of people without spines. And what that basically means is that the number of people that have moved over, into what I call the spineless camp, it's essentially just, we've completely destroyed the notion of, a traditional kind of rules of economics or rules of the ecosystem, and we have we've slipped into something that's I think pretty ugly. So, and I think that's a fun topic for discussion, because the concept of centralized power, like, I don't want to have a big social or necessarily social or political discussion, but I want to talk about how that applies to financial markets and how it applies to our financial ecosystem and to our position as a global leader, whether it means trade or whatever else it is. And I want to talk about the dangers of where we're going, because we've never seen something like we're experiencing today actually in an unwind state. Everything goes great when you're winning, but as soon as you start to lose, a more traditional system or normalized system has ways that you can balance out the losing and ways you can protect yourself and things you can do. When you have a centralized system, it's almost impossible, to resolve the losers. So it's a very different unwind, and that's what scares me the most. When you're winning,
so speak to me without metaphor. Speak to me with.
Well, when things are going good, there's not a lot you have to, there's not a lot to worry about when things are going good. And right now, you've got, a reasonably good situation powered by a strong stock market, powered by, reasonably low interest rates. There's powered by a lot of strong companies, powered by global dominance, blah, 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 all the above. Everything is cyclical. And the difference is, just like anything else, when you consolidate power, and you consolidate decision-making, and you change what has been traditionally the rules of the economy to something else, then whenever this situation turns, whatever that means, so it just means, I like to call it, because I'm a trader, I like to call it an unwind. It's essentially how you get out of everything. But when we unwind everything, whatever that looks like, whenever there's some kind of reversal, when you have a centralized system, there's no distribution of risk. So power is centralized on the way up, and risk is centralized on the way down. And there's no way to distribute that risk, so you can't effectively lower the volatility of all that risk, because it's all centralized. It's the same thing as having think of it like having an entire portfolio in one stock. There's nothing you can do when that stock turns around and goes down. You're trapped like a rat. When that stock's
how does that work in the context of the U.S. government? If all the power
when that stock's going higher, you look like a genius. The problem is, in the context of the U.S. government, and lots of people have been writing about this, right now, the U.S. government is essentially deciding who they want to hold that power. And that goes counter to everything that free markets are all about. That is not
But I guess what I'm getting at is, I agree, I get all that, but how does the actual risk if you have a single point of failure and all this power in one location, being the White House, and then things go poorly, meaning we go into there's the unemployment goes up, inflation,
could be anything, sure,
social instability, all the negatives that can manifest. how does that play out in a centralized response, centralized risk versus distributed risk?
It's grossly accelerated. So what happens in a centralized response is there's only, here, picture it like this. You're in a crowded stadium, okay? And there's 17 fire exits. There's 17
Maybe
exits.
Stadium. Perhaps Yankee Stadium.
It doesn't matter, whatever stadium you want. Perhaps Yankee Stadium. Okay. And there's people taking pictures in Yankee Stadium, just whatever. And then a fire breaks out, and there's 17 or 20 different exits around the stadium. Everybody runs for an exit. Everybody gets out. Everything's fine. It's a little scary, but everybody gets out. Now, in this other situation, there's only one exit, and everybody goes for that exit together, and it doesn't work because everybody gets squashed to the door. That's the difference. So
I totally understand that, but what I'm trying to connect the dots of what does that means that unemployment accelerates higher than it should. That means that inflation is more than it should.
Well, you're asking. I don't know, because what's happening right now, and this is the scary part, is we are artificially determining who gets to play, right? Because we're setting the rules. We're setting the tariffs, we're setting the rules. So we are artificially determining who gets to play. This is not a true free market. This is not free trade. We are deciding who gets to play. We are deciding what price they pay. We are deciding who they get to play with. Who are the winners going to be, and who are the losers going to be. So we are now, the government, which is not the group that you want to be making these decisions, and worse than the government.
Look at the Soviet Union. Look at
it's worse than the government. It's one person deciding again who can play, okay, what price they pay, and who's going to win.
Play with.
Who they can play with, who's going to win, who's going to lose, how much are you going to win, how much are you going to lose, and it's one person who's got their paws in everything. We're talking about from college football, okay, to professional sports, to cultural events, right? You name it, to pop singers, and you can go on the list to who gets to who should be running Intel, for example.
No, I get it.
Who should be running Goldman Sachs? This is the most over the top, egregious abuse of power we've ever seen. There's nothing like it.
And no, I'm not disputing anything. The reason I'm pausing. So that basically what that means is that the price of things could change dramatically in the unwind, right? Like what happens when you have a rigged game? Product quality is compromised because quality of the product becomes less relevant because it's just basically whoever the chosen one is, even if it's a lousy product. Supply. I mean, the most dramatic risk that you're talking about is supply shortages, price volatility. I mean, do you think that this sets up a stock market? Does this create a risk for the current? I mean, the obvious thing is a risk for the currency, but I feel like the currency is pretty well protected because there's no alternative. So even if it's a total fiasco, where are you going to go? I get. I'm just trying to sort of game out where.
Well, the challenge, Dylan, is that we have a system in our government. There's a system of checks and balances all the way down, and there's supposed to be, even in your own party, there's supposed to be, objective discourse and suggestions. There's supposed to be two-sided discussions. There's supposed to be even an internal debate. We're supposed to have at least think about this thing intellectually. And again, I'm just going to say that it feels like it is a very one-dimensional, static government now, where there is no opposition to anything. Somebody does something that is beyond ridiculous, like fire the person who's, the BLS, the BLS commissioner, because they don't like the statistics, and your Treasury Secretary and your Treasury Secretary, the deputy for I forgot which other department it was, but deputy on the accounting side, whatever that group is called, they're all like, oh well, yeah, the president's right. I'm like, what? How's that possible?
No, I know that. I was walking on the street a couple of days ago, and we did, because when you said this, we talked about this on the podcast a couple of weeks ago.
Yeah.
And like, you listen, you've been incredulous from time to time as a result of a lot of these things, but your incredulity that everybody's like, okay, I don't know, you're just making me laugh. But it's not funny at all. It's a huge red flag that you could have senior adult administration officials in the most powerful government on earth tolerate sort of such obvious absurdity.
Yeah,
I'm just trying to sort of get past
it's
all
not,
the absurdity.
You understand, this is not how we work in any part of our lives. None of us.
None of us.
You go to
You can't
work,
make a decision with a 3-year-old child like this.
Yeah, exactly.
Like a 3-year-old child's like, no, this is a hamburger. You can't be like, no, it's not a hamburger. Like
every
3-year-old knows that's a hamburger.
Every single company in America, every single successful company, if the CEO loses their mind for whatever reason, every single person around them tells them, what the fuck are you doing? Like, what are you doing? What's going on? This is not how we operate our business.
To intervene. There's some mechanism to intervene.
Boards are not scared. They're not scared. They weren't scared to fire Steve Jobs. They weren't
fired
scared.
Michael Eisner out of Disney. They'll go crazy. They'll pile like a pack of hyenas and toss you out.
They'll do it for anybody they think now. It's not, that's the way we operate. Okay, but in this case, oh, sorry, can't do nothing. It's crazy. Anyway, so
where does the risk? I understand the metaphorical risk. I'm trying to sort of identify the physical risk, whether it's in the currency.
Well, it's my same analogy I use for money managers. Bull markets make all money managers look like geniuses. Mm-hmm. And some of them are incredibly stupid and know nothing about markets. But bull markets make every single money manager out there that's just tracking some index or whatever it is, or overweighted, and they're all geniuses. At market highs, everybody's a genius. At market lows, everybody's a dumbass. Okay, it's just the way it works. And so right now, it's very difficult to challenge when everything is working, because it's a bull market. Everybody's a genius. That's the whole problem. Everything works. You could have the dumbest trade policy in the world, which I think Trump has initiated. You could have some of the dumbest policies. You could have the worst. You can have the worst supporting cast. And as long as Palantir goes up and Nvidia goes up and Apple goes up, it doesn't matter. Okay? So what you essentially do is you have all these idiotic policies, and then you set up a tariff platform that essentially protects the firms that you need to go hire in order to protect your agenda. And that works until it doesn't. Because as long as you are able to protect the firms that you can argue, well, you see, it's working because the stock market's at all-time highs. So if you can protect those firms and hurt their enemies, then essentially you've basically protected yourself, because the proof is in the pudding. It's the same thing. You can gut your team, you can gut your firm, you can do everything you want, but as long as you're winning games, nobody cares. And that's the way it is right now.
What is losing games in this context? A decline in the stock market, an elevation in unemployment. What is losing games in this metaphor relative to a government or a country? I guess.
Well, the difference is in sports. When you win, nobody cares about anything else, and when you lose, nobody cares about anything else. And in the government, it's in the situation, it's all about the perception. And when when the stock market's making new highs because you have the same concentrated group of 7 or 10 stocks that are making up, 40 to 50% of the indices, and they're making new highs because you're protecting them with a trade policy and you're protecting them with very advantageous regulatory. You basically removed the regulatory limits that hold them back, and you've essentially you've said, hey, whatever you need to do to keep this machine going, keep doing it. And in return for that, I'll keep supporting you, but it's at the expense of everybody else. There you go. When this turns around, then we're going to have issues, because that's my whole point.
Turns around meaning the stock market goes into decline? Is that what turning around looks like?
Well, the stock market will probably be the leader to the downside, and then the economy will follow. Because
meaning unemployment.
It's not just unemployment, but unemployment will be a big part of it.
And then inflation.
It's not just inflation, but inflation will be a big part of it.
So the unwind looks like a declining stock market, rising unemployment, and rising inflation.
With a lot of concentrated asset risk, because that's what happens. It's like an exaggeration of what happened in April, but in a much longer, drawn out decline.
Right.
But you know what? The bad thing about it is that's not how you build for the future. That's how you mortgage the future to build for the immediate term, to take care of whatever, yourself in a very short term. The difference between sports and between running running a country and things like that is, if you're a sports team, you have to play for now. Like, if you think you have a chance to win the Super Bowl, or you think you have a chance to win the World Series, since we brought up the Yankees before, or you think you have a chance to win the Stanley Cup, you go all in. Okay, you get rid of your future talent.
You pay money for old men that are in their last year.
You go out and you get whatever you need to do. You go get that pitcher. You go get that. You get whatever superstar you can get that you don't.
The young.
You get rid of the young. You get rid of some of the young talent that's gonna be around for 20 years, because you got to win, because it's so hard to win. You got to win now, so you get rid of it. That's totally okay for sports, because everybody needs to win. So you win now, great. Everybody forgives you. In the rest of the world, in life, it doesn't work like that. We can't mortgage our kids' future. We can't mortgage our kids and their kids, their future, for now. And that's the difference. That's the difference between real world economies and sports. Sports, you can mortgage the future. Real world, you can't do that. And so I feel like that's the mistake that we're making. We are closer, and I know our producers are going to hate this, but we are closer to a weird form of socialism now than we've ever been in the last 50 years. And it's all under Trump. The whole speech of, I don't want to be a communist, I don't want to be a socialist. We are the closest thing we've ever been to a form of socialism right now, a form of it. It's our own kind of bastardized form, but that's how close we are.
Socialism meaning consolidated control of resources.
That's right. That's right. A true free market is a distribution of opportunity and a distribution of power. And in a socialist society,
Louis Brandeis once advocated.
There you go.
But I'm sorry, I interrupt you.
No, that's fine. I'm done.
More importantly, this is a contradiction to the very values of traditional republicanism, which has always, at least rhetorically, been the opposite of this.
There's no such thing as the Republican Party, and the Republican platform as it once stood is no longer. There's no such thing as a Republican anymore. There's MAGA and there's everybody else. There's no Republicans anymore. The Republican Party has left the building, and they're not coming back because they are truly a bunch of sheep, and they're not coming back. And that may be what they needed, was to burn it down and start all over again. But it's a dangerous start.
My concern is that this is a kind of a one-way street. Going back to my comments about W or Obama, that as presidential powers accrue, whether it's Patriot Act, whether it's national security, whether it's an intervention with the financial markets, or all these executive orders, as presidential powers accrue from one presidency to the next, and as sort of new boundaries of power are established from one presidency to the next, that there is that each successive president is that there is no incentive, or that it's unlikely that each successive president will diminish those power. I mean, Joe Biden ran for president promising, I'm a one-term president, then we'll bring in new leadership, blah, 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 only to get to the end of his term and insist that he needs to run again because the country needs him.
Okay.
I mean, George Washington is famous, our first president, for facilitating a peaceful transfer of power to the second president, John Adams or whatever. And he's sort of celebrated for his willingness to curb his own powers. And so, Trump, for sure, in my opinion, is the most abusive and extreme, maybe 10x any prior person. I don't disagree with that. But I am concerned that even if, some young Democrat becomes the next president, that they're going to be just as that the whole point of America, and it's in the whole celebration of the Constitution and the three branches and all these things, was to create a structure that naturally creates barriers to the human tendency to want to have total power. The three branches of government, the Supreme Court this, the Congress that, the House this, the Senate that. And what appears to have happened is that entire system is broken down. And so what we're witnessing is an abuse of the opportunity, the facilitation of the loss of boundaries, or the loss of checks and balances, has opened an opportunity for this president to be abusive in a way that no president has before. But the issue is not just the abuse. The issue is the absence of checks and balances, which I don't know that they're going to come back.
Of course it is. This is just,
But I mean, do you think checks and balances return to the American way of life, or do you think we're now in a new world?
No, I think it returns. I think this is just because I think we're just hitting a new low, and we will recover because people will realize this is not what America is. This is not who we are. And I don't know what happened this time, but there's a first time for everything, and this is just it's incredible. The system works. It's like this time, we're seeing something we've never seen before, and the level of abuse it's incredible. But I think politicians are going to wake up and they're going to realize, I didn't do this to be a spineless ass kisser. I did this because I really believe in a platform. I believe in something. And I think that, you're going to see the American people will vote, and they will express their disgust with this, because this is not what we believe as a country.
And how will that's through a Democrat?
I don't know. It doesn't have to be through a Democrat. It can be through a Republican.
Or could it be through another Republican?
Sure. I mean, you see Republican town halls right now. The Trump polling numbers are the lowest ever in the history of a sitting American president. I mean, people don't like him. He's the most hated president ever. This is not something, he doesn't want you
You're
to
saying
think.
even if it's a different Republican, the chances that you have, anyway, I just don't understand it. I don't understand the absence of any resistance.
Of course you can't understand it, because nobody can understand it. Anybody with a brain can't understand it. But
to your point about the Treasury Secretary or the Commerce Secretary being like, yeah, well, the numbers are all fake. Never mind.
Yeah. How do you have a Treasury Secretary without a spine? How do you have other people that would literally without a spine? I don't even understand it, but it's happened. And, in his first term, Trump
brought on people with spines, and they all turned on him. So this time he basically did a resume search on LinkedIn to find people that didn't have a spine. Number one requirement: if you don't have a spine, you can apply for a job. And if you're going to do whatever I say, you can apply for a job. So, he got Pam Bondi and he got Scott Bessent and got a couple of other lackeys, and that's it.
Yeah. I mean, but that doesn't explain the Republican majority in the Congress.
No, what it doesn't explain is a bunch of smart people out there that think that it's okay. And those people, the reason they think it's okay is because they're invested in Meta, they're invested in Apple, they're invested in, Palantir, and so they're turning they're turning a blind eye, and they're okay with it. If those stocks go lower, they're not going to be okay with it. So you've got these just miserable pricks like Bill Ackman and other people like that are just the Mark Andreessens of the world, the Peter Thiels of the world. Of course, the Peter Thiels of the world, love this because you make, I don't know, $1 trillion or $500 billion.
A billion a day, baby.
A billion a day. Sure. So of course you love Trump. You sell your soul for that. But for the average person, it's a little different.
If there's where does the reversal first manifest? In other words, was the dollar?
Come on, man. Nobody, if any of us knew the answer to that, it would be, you could actually make $100 million. I mean, we've been trying to guess that.
No, you're right.
Yeah.
You're right. Impossible. It's impossible.
In fact, though,
when and where is both impossible.
Which one? What? Say it again.
When it would happen and where.
Oh, yeah. Sure. It's impossible. Nobody knows.
Yeah.
When you least expect it. It's that kind of thing.
Yeah. Is there a world where the incredible buoyancy of the super tech actually has this sort of a ripple that it creates some insulation, that there's so much wealth that spreads around that it sort of has it's insulating, that it moves outside of itself, that it does sort of spread out?
That's a really good question.
That there's just so much money. It's like foaming the runway, even though there's going to be a wreck, that there's just so much froth that it's like not going to be that the risk is less than you might think, only because of the so much foam on the runway, basically, to use my metaphor.
I mean, that's a very good point. And the question becomes, if you're a $4.5 trillion, if you're a $4.5 trillion company like NVIDIA is, or Microsoft or Apple, whatever, and you lose $1 trillion, okay, in market cap, does it really change anything?
That's what I'm saying.
Yeah, I know. And that's a good point. Have these companies,
there's so much buoyancy that you can tolerate a 25% impairment and not be that alarmed.
Yeah. And that's the dangerous part about, that's one of the dangerous things about the government, basically the executive branch essentially deciding who wins and who loses. And now what does change now is that this puts an incredible amount of pressure on the 2028 election and beyond, because this is like, you got a big bully who's protecting, this incredible amount of growth, and in return, you give this bully, a few $100 million, which to you is nothing. I mean, it's literally nothing. Like, it doesn't even matter. So companies can write $1 billion check, and it doesn't even, it's pocket change, it's couch money. And so, how does this change the landscape of what's going to happen? Because there's big money at stake.
So much basically, there's a lot of tolerance for a big reversal.
Sure.
Just because of the buoyancy.
Sure. Yeah, I mean, you already see that the backbone, of, the Mark Zuckerbergs or the Tim Cooks or the Jeff Bezos, you already see that they have no backbone. You know, they don't believe in anything other than the value of their company. That's it. So, you know, they don't care about a single thing. So, you know, listen, I don't trust them as for anything.
You can't trust any of them for anything.
Well, I think there are still some good people out there, but who knows?
Well, thus my whole hypothesis I've been asserting on Overtime the last week or two with Vecchio and Spivak is stop thinking and just buy them. Like that, because all your thought is going to get you into rational analysis that's going to identify all kinds of never-ending list of risk.
Well, traders don't, you know, from a trader perspective, no, you can never, the no thinking thing is great for trading because trading is about you can't start thinking about
but
macro
it's terrible
crap.
for a country, but it's bad for humans in a country.
I mean, it's great for a podcast, you know, it's great for a podcast. That's it.
Yeah. Yeah. But it's not good for the life of a human.
Right.
Thinking is recommended.
Let's put it this way, Dylan. For mostly everything you do in life, thinking is recommended. but you know, for trading, not for trading.
All right. Well, fortunately, I've been around the block long enough. I'm very thoughtful, and I make very prudent decisions, despite what people may perceive.
I like it. Well, this was a very fun discussion, and I'm glad we had it today because it's a little bit different, and I'm sure we upset some people. I'm sure we made some other people happy, but it's just always fun to have these discussions because I think, you know, America's at an interesting crossroads with what's happening with the centralization of our government and especially of our executive branch. And I think that to put your head under a pillow or hide in the sand or do whatever, you know, it is you're doing, I don't think you're being fair to, you're playing the bull market makes geniuses of everybody. And I don't think that's a fair way to look at, you know, the future and our kids' future and our grandkids' future and everything else. So I think we got to be more real about this. But Dylan, thank you very much for playing along at home. I appreciate it.
Always a pleasure. We'll see everybody at Overtime in about an hour and a half. So I'll be back.
Yeah. Hang on for 1 second, Dylan. Hang on.
All right.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the four little things as a
four things.
One big...
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
Be nice? Nice.
The best part.
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field most likely before the game.
You're going on the field most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof.
You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live.
We're already out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm gonna say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think think is funnier? Who is the better debater?
Well, I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
What is going on, guys, and welcome back to today's assignment. Today's Wednesday, middle of the week. We got a lot of volatility in the market ripping to its highs, but what's new? Before we get into all of that for today, we got some tickers that are popping off. Dr. Jim, how are we doing today, brother?
Man, what's going on? You know, it's another day. It's just another, man, it's just a dream, dude.
Yeah,
it's just a good day to be alive. Yeah, it's amazing.
I almost thought it was St. Patrick's Day today.
I mean, you got to do something. I mean, look at this market, man. You got to do
it's
something.
green.
You got
You're letting us know.
The Russell 2000 is up another 1.5% today, bro. Like, this is crazy, 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 crazy. And so CPI yesterday, I mean, I didn't even think it was that great.
Yeah.
Like, I thought it was okay, but it wasn't it didn't seem to me like it was, this worthy of such a strong response to the upside.
Yeah.
But hey, man, I mean, this is what bull markets do, right? Bull markets, they find every last little morsel of optimism to latch onto, and they just keep pushing higher. So it's crazy stuff.
I completely agree. I mean, yesterday, I think we had a little bit of a push to the upside and then a pretty aggressive sell-off to the downside, and then we got bought straight back up immediately, and then we kept going pretty much the rest of the day. So your shirt really tells the story of what happened yesterday and pretty much going on today for the most part.
I had to go green polo today. There was no other way, dude. I'm like, you just got to do it. Yeah.
No, I like it. I think I'm going to have to start branding myself as what kind of color is he wearing today? What the color of his tie? I think that's kind of nice. I see what you're getting into. But before we get into that, we have BSLK, we have ATNF. I know we don't trade too many of these smaller caps, Dr. Jim, because I know sometimes they won't have options on them. Some of them do, but not all of them do. They're always catching headlines, 300% gainer. That's attractive to look at, especially if you're just getting into the market or you just look at headlines. I mean, you see a 250% stock popping off. You're wondering what's going on here. This must be some amazing investment, whatever the case might be. But we're going to dig into that today, Dr. Jim, because we have two of those tickers, but we want to highlight and emphasize the float today. And that's going to be the amount of shares available for the public to trade. So pretty much our supply, and that's what we're going to get into. So we can pull up the slides when we have a moment. But before we get into any of that, Dr. Jim,
so what are the prices of these stocks? So they're approximately
right. So a lot of these small cap, lower floats, typically they're going to be around $5. ATNF right now is around 10. Now it's 12. Making its way out of Snapchat territory, which I can't believe Snapchat was even trading down at those. So a lot of these companies will have some type of news, and the news always sounds extremely attractive. But I want to highlight some things that we want to be aware of if we're looking at any of these type of stocks, because the headlines are attractive, Dr. Jim. I know they might be cheap. I know they're $5, whatever it might be. But if it's on CNBC, if it's on a credible headline, something must be happening here, Dr. Jim. That was my initial assumption whenever I would see some of these things popping off before I learned what a float was and those type of things and breaking it down.
Yeah, and what's kind of fun about these names, right? This is the reason why I asked about the price. Is I kind of assumed that they were all probably $10 or less.
Right.
I mean, this is going to be very similar to kind of GameStop in 2021, right?
Okay.
Where it's like, all right, if you were to get in like on the ground floor of one of these investments, then you could be sitting on a significant gain in a short amount of time. And so that's what makes playing these names kind of fun as kind of a, I'm going to say like a supplement to what you would normally do with like your foundation, right? Because if it's like a $5 or $8 stock,
right,
then the nice thing is you buy the shares, you buy as much as you want, whatever.
Yeah.
it can only go to zero. So
Right.
it's like if this thing doesn't work, as long as you don't over leverage yourself, it's like, hey, you take a shot. If it doesn't work, it doesn't work. But if it does work, it can be super fun. And so I would just encourage, before we get into the float and stuff today, I would just encourage everybody, hey man, have some fun. Like this stuff is supposed to be fun. Like you're allowed to have fun from time to time.
Right.
Like don't let Tom dissuade you from having fun. I know he doesn't want any of us to have fun, but you gotta be contrarian to that and get in there and have a little fun. I think it's totally fine. I just wouldn't do this as your foundation.
Yeah,
That's
absolutely.
all. So those are like my overall thoughts.
No, and I mean, so Dr. Jim, actually, I was a little bit deeper into the weeds with a lot of these low floats and small caps, and I started to learn the game of how it went. You know, there's a game to small caps and penny stocks too, right? Most of them end up going bankrupt. So it's like when people are handling these type of $5, $10 stocks, what are they doing? Like, how is the game played here if most of them aren't around or eventually get delisted per the statistics? So let's go ahead and jump into these, touch on them a little bit. But I know I have something like RKT. Gus and I have a show every Tuesday and Thursday, and we talk about risk of the week. So sometimes we'll find a smaller stock that was popping off, and we'll put on a little bit or an additional piece of risk on a specific underlying. But to the point you made, Dr. Jim, we'll make sure it's capital that we're willing to lose on the trade, especially if it ends up going to zero. And really just want to emphasize the fact that, you know, it might not be your main way to trade, but if you ever do come across these headlines or these smaller stocks, here are a few things to keep in mind, and here's how you can approach some of these smaller names. But heading into low floats and volatility, let me get to our next one. There we go. So today, Dr. Jim, we have a couple big ones, ATNF, BSLK. Usually there's some type of sector that's really popping right now. Right now it's like AI. A lot of the times it's crypto. I know sometimes there's marijuana. That's the sector's popping right now. And a lot of times when a specific sector's popping, we'll start seeing smaller names within that sector to start pop off, you know, as well, because they'll drop whatever type of headline. Because that sector has some momentum, you will see kind of some sympathy plays that will kind of pop off. If Bitcoin pops off, something relative to crypto might, you know, do the same. But ATNF was kind of a similar story, Dr. Jim, but in a different way. They ended up purchasing a lot of Ethereum. And you know what's so funny? Gus and I have been talking about this a lot. MSTR, a part of their strategy was buying Bitcoin. Like MSTR probed some of their strategy or put the flagpole down on Bitcoin and said, if Bitcoin continues to see success, MSTR will begin to see success. And that's what a lot of their shareholders derived from a lot of those announcements. And I know ATNF's a smaller stock, but it looks like they're doing a similar thing, but with Ethereum. They're buying a ton of Ethereum. And if Ethereum is successful and they keep going up, so will ATNF, maybe, probably. We'll see how that plays out. BSLK is another one. This one was up a lot today. I think over 700%, including the gap and the continuation into today. Usually with the move like that, usually some type of short squeeze, Dr. Jim. Somebody got caught on the other side of the move. And we're going to get into the float. The short float percentage, things like that, things of those nature as well, because that's another reason why we'll typically see massive moves in these stocks, right? If Dr. Jim is buying at $5 and we run to 6 or 7, everybody watch out if he has to cover his position, because we might send it to 15. So,
well, hold on. So BSLK, I mean, are you looking at this right now?
What's it doing?
I mean, it's up.
What's it doing right now?
It's up 500% today. So it's up to 13 now.
Okay, it's
up
at $13
$11 today.
Wow, massive move.
I mean, you've got 50 to 70% here on the slide. I mean, that was like this morning.
Yeah.
Like now it's up 530%. So I mean, that's some crazy stuff, man.
Right.
That's a crazy move.
No, 100%. And I think it's always nice to be aware and know what's going on, even if we're not trading some of these products, right? Right now, I'm not trading ATNF. I'm not trading BSLK, but it's popping off right now. If you look on all your scanners, these are a couple of tickers that are going to be at the top of the list out of all of the markets. So it's always nice to just be aware of what's going on, what's happening, and keeping ourselves informed, Dr. Jim, because I mean, this isn't the first time we've seen another company take the strategy of buying another asset that's extremely bullish like Bitcoin and Ethereum. Let me jump to the second slide here. The low float, very high impact. As we know, ATNF has around 3 to 4 million shares. The daily volume over 25,000%. BSLK, 1.7 million shares available to the public to trade. And the point of the low float, again, is the fact that there's a lack of supply there. So with such a little amount of supply, it's not going to take much volume or it's not going to take much trading activity. It's not going to take much lots for Jim to really move this thing. And because it's a cheaper underlying, especially if it's a low float, it's not going to take, again, it's not going to take much buying for this to catch some steam. And most importantly, if it catches the short sellers off guard, because as we know, sometimes these things can act as a chain reaction. And that's why we want to be mindful when we're trading some of these smaller cap stocks. If one of these underlyings, right, they can have bad fundamentals. We get a lot of these underlyings popping off have bad fundamentals. But if a stock is trading at $5, makes no sense. Now it's at $6, that makes no sense. Now it's at $7, right? We know shorts could be piling in at the same time, but the one reason we want to be mindful is if this thing goes to $8, $9 and those shorts want to start covering their positions, they're going to have to buy back a lot of those shares to get out of their positions, which can put a little bit of fuel to the fire and enhance some of those moves. And then we get BSLK up, 500%, $13 as it is right now, Dr. Jim. But again, just highlighting the float a little bit in these two names popping up as we go on in the day. We're not at 600% yet. Are we, Dr. Jim?
No, we're actually only at like 480% now.
Okay. I got you.
But I'll tell you what. So here's something that's really interesting.
Yeah.
So what's interesting about the low float, and what's interesting about like the fact that there can be a big move on like not really any fundamentals and just not a lot of shares and not a lot of supply and whatever. So what's really fascinating is this is actually the exact reason why most of the time with what we do, we like to focus on, the S&P 100 stocks, the S&P 200 stocks, because the reality is with like an Apple or an Amazon or Meta or of course like SPYQQQ, the float is so massive. It's so massive that the likelihood that you get caught in something like this is so low.
Right.
It's so minimal. And when you're selling premium, that's the thing you want to guard against. That's the thing that's going to do the most damage. So by all means, again, I think it's so interesting with the lower floats and the potential for big moves, but this also actually highlights why we do what we do at the foundation for 90 to 95% of our activity.
100%, Dr. Jim. We're actually going to wrap it up on that slide, Dr. Jim. I know you kind of edited on that note, but anything else you want to add with some of these low floats before we jump to the platform here?
No, I mean, it's, the BSLK, what's the ATNF? What's that one?
Yeah, ATNF, that one's going off a little bit because of crypto
not
right
quite
now.
To the degree. Yeah, it's not quite to the same degree, but yeah, that's pretty, that's crazy stuff, man.
I gotcha. As we get into some of these positions for the day, Dr. Jim, it's been a little while since we got your thoughts. There's a couple underlines that took me down over the last couple weeks that we haven't got to catch ourselves back up with. And one of those was Eli Lilly. Those weight loss drugs. Dr. Jim, you were right. But Eli Lilly had some pretty massive days to the downside. We had a pretty big gap down, and then we continued to sell off to the downside. So Eli Lilly, things really turned around very quickly. Microsoft, this was an earnings position, out of the money call spread, being tested right now, kind of on the dance floor. The extra call isn't being tested, so we're going to give it a little bit more time. Down about $69 on that one. We still have 37 days left till expiration. Let me know if anybody's trading any of these other tickers that we have in the portfolio right now. And I know someone had just mentioned here too, Dr. Jim. Let me know if Dr. Jim gets Errol to trade anything other than MNQ. And I was like, you know what? Maybe we look at some other tickers as well. And I think that's kind of funny because you told him to say that, Dr. Jim. That is pretty funny. I know you told him.
I'll tell you what, man, you missed a golden opportunity on Kava last night.
What was that?
So for everybody in the chat,
yeah,
I know everybody's getting all riled up.
Right.
I know everybody's all this and that, blah, 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 blah. But so just based on the price action today, how do you think I played Kava yesterday?
Based on the positioning today, I'm going to assume you played Kava to the downside. What did you do? A butterfly to the downside?
No, I know. I played a mega bullish.
Did you?
Mega bullish.
Really?
Oh, yeah, of course.
Why?
Of course.
Are you like Kava? You have something against Chipotle?
I mean, are you telling me that there's people out there that don't?
After the sixth time, I loved Kava. After the sixth time, I just can't anymore.
So wait, what happened after the sixth time? I don't get it.
I just can't anymore. That's what happened after the sixth time, Dr. Jim. It was a great replacement at first for Chipotle, but after the sixth time, I don't know. It just filled my tank. I ran dry of Kava. It's
so
not very appealing. So
you went back to Chipotle?
I did. Chipotle is Old Faithful. It's very consistent. You know exactly what you're
going to get. And I'm not
going
to fight you on that. I'm not going to battle you on that. But Kava, Kava is
I love Kava. Nothing against Kava. It's a great spot, though.
Yeah, no, Kava's solid. Kava's super, super solid. So, but anyway, so you had a chance to make some easy money last night if you would have faded me on the Kava trade.
Yeah. No, I mean, What a massive move in Kava. I guess we'll circle back around to that too, but it sounded like everybody wanted your insights on that, Dr. Jim. So,
well, they got him last night.
So,
and everybody who watches from theater to practice, like they know, they know they should be doing the opposite of me. And so it was easy money last night. So you're welcome to everybody out there.
Yeah. RKT was another one with risk and reward with Gus and I show that we had put on, and then we had SPY. We sold an out of the money call spread, 37 days left till expiration. And just the call that we sold is being tested right now. But other than that, nothing else, too crazy in the portfolio. Not too much on M&Q yet. We'll have a little bit more here soon. But before we switch gears here, Dr. Jim, anything kind of standing out to you besides this Eli Lilly position? I'm gonna have to wait out Microsoft, RKT, and SPY just a little bit longer. Those need a little bit more time to work.
Yeah, I mean, especially with like Microsoft and SPY, I mean, you've got spreads on in there. It's very much a wait and see situation. You've still got 37 days on both of those, right?
Yeah, we got 37 days.
Yeah, that's a long time, man. 37 days in the options world is a really, really long time. And I know that right now it feels like, man, this market can do no wrong. It feels like, man, like it's just going to keep going higher and higher and higher. And it might very well do that. But again, I mean, Tom is right. Like, they don't ring a bell. Like, there is no bell. Yeah. Like, not to say that today's going to be the day or tomorrow's going to be the day or whatever, but these things can turn around in a hurry and kind of give us some two-sided action, give us a little bit of volatility back in the market, and then some of those short call spreads you've got on will all of a sudden be out of the money again. So that can happen very, very quickly. I mean, even on a day like today, the NASDAQ is super weak. Like, I'm shocked actually at how weak the NASDAQ is now. I mean, it's only down, it's down 10 points or whatever, but it was up 160, not too long ago. So, these things can turn around pretty quickly.
No, most definitely. I mean, we that's pretty much been the story the whole week so far. Sometimes we'll get the sell off and then we're bought back up, or we've sold back off all the gains that we've put in the morning. And just to your point here on NASDAQ, a little bit of a pop, then sold off, and then we haven't really done too much since then. One thing that I am pretty excited for, Dr. Jim, and we'll get into it a little bit more in another segment, especially if anybody else has been checking it out. But over here, let me go to trade. We have the Active Trader version 2, which is actually pretty fire, especially if you trade M&Q like I do. You'll have the ability to be able to buy and sell by looking at the charts, which is pretty cool. Not something that we've had before, which will be pretty fun to talk about over here on some of the segments, Dr. Jim, because now when I show you what I'm doing, right, we have the ability to be able to show, let me see, the execution. So I can show you, I was entering here, I exited here, a lot of the times too, because I'm getting stopped out managing risk. I want to show the psychology at play or what I was trying to do. And sometimes it would be helpful to be able to show my execution. So this is the first version that was put out. There's more features that they're going to be adding really soon to this, but it's going to be super exciting. And we'll be able to break that down a little bit more over here, Dr. Jim. But it's something we haven't got to touch on pretty much at all. But this is where a lot of the M&Q action
hold on. So you're telling me that I'm going to finally get to see the recipe to the secret sauce?
There's no recipe to the secret sauce. Pretty much the recipe to the secret sauce is I think it's going up and I think it's going down.
That's all you need, bro. Hey, that's all you need. Don't ever let anyone tell you that you need something other than that.
I think it's going up. Yeah, I think it's going up and I think it's going down. And let me make sure I'm not going to be broke if the outcome that I don't want to happen happens. That's like.
Let me make sure I can turn the lights on tomorrow.
Exactly.
Yeah, that's it.
Yeah,
that's it.
Let me make sure I can live the trade another
funny.
day. Like, this is the risk, this is the reward, this is the probability. Here's why, and I'm gonna send it through. No, it is funny though, Dr.
This
Jim.
This is really good, and I'm guessing on the right hand side there, that's the depth of market.
It is the depth of market
in the actual
over there.
book.
Yeah,
Nice.
it looks really good. It was really smooth. They had it on the web platform last week. I peeped it on there, and then I was like, "Yo, when is this coming to the desktop?" They had it on the desktop the following week right away. And I'm just looking at it. I'm like, yo, this is really smooth. It looks really clean too, easier to read. I know sometimes when it comes down to reading some of these tools right off the bat, certain application softwares, whatever it can be very confusing, very intimidating. It's a lot of numbers. It can be moving very quickly too. I think this does a great job of putting it in a very digestible format to where it's not too intimidating and to where it's not feeling like you're drinking water out of a fire hose right off of the bat right away. But I will say, if there are any other active futures traders out there, it's going to make it a lot more convenient for you to place and manage your trades, which is almost most important, right? We talk all the time about entering and exiting trades, but we got to know how to manage it. The execution really does matter on these trades, and this will make the process a lot more smooth for you to go ahead and do that. So even over here, we're not going to place any trades right now, but you can kind of see I can click on the bid or the ask, and I can place a limit order. So it can fill me whenever the price gets there, or it can take me out of the market whenever it gets there, or I can set my stop loss. And by being able to use this depth of market, it helps me find my stop loss or my limit orders for the exact price that I'm looking for. And I can just click on it, and it's going to put that order in, and you'll see it pop up over here on the chart as well. So excited to see how they continue to develop this out.
Let's bring this into the show. I'd love to do this with you.
Yeah, no, definitely. And with MNQ, I seen MNQ in the chat again. I was like, oh, you guys are going to be sick of me with NASDAQ and some of these futures products. But other than that, Dr. Jim, going back over at Eli Lilly in terms of the portfolio. Go ahead.
Well, we also have, don't forget, man, we've got PPI in the morning. Like, I don't know if you want to trade PPI tomorrow, but it's coming out tomorrow at 8:30.
I mean, I don't know about PPI. What are you guys doing over there in your camp, Dr. Jim, for PPI?
I mean, I haven't done anything yet because I've got from theory to practice, later on tomorrow in the afternoon. So it'll be kind of after the fact. But all I can say is this. So I've been trading since 2007, been studying the markets for almost 20 years now, maybe over 20 years. Tomorrow morning's PPI, this is the most important economic print that I've ever seen in my whole professional life.
Okay.
There has never been a more important economic print than the one we're going to have tomorrow morning.
You're so convincing, like every time too, Dr. Jim.
No, nothing like this one. All the ones before this one, they don't mean anything.
All I'm saying is I'm glad you're not the Fed chair. I'm glad you're not the Fed chair because I wouldn't know.
Hey, you never know. Apparently, they're looking for somebody, right? They need somebody. You never know.
That's true.
But I don't know, man. It's like, a lot of times PPI follows CPI, I guess. So it's like, okay, maybe it'll come in line, whatever. I think everybody's kind of expecting it to be fine. I think everybody's expecting it to be good. And so maybe the market kind of surprises some people.
Yeah.
Like maybe the market reaction tomorrow morning is not as positive as people are thinking.
Look, I am on the side of put some money where your mouth is, right? Because right now, I was just about to say, man, I would be leaning bearish. I would be, but it's like, okay, Errol, reflect your opinion with the position. That's what I'm saying in my head right away. But right off the bat, we've been rallying to these highs. We've been really aggressive to these highs, Dr. Jim. Based off of sentiment, based off of what's going on, I would just be personally leaning to the downside a little bit. So if I'm looking to speculate on PPI a little bit tomorrow, I would be looking for some more short delta. So I'm not opposed either.
Okay.
I'm not opposed.
You could do, it's Thursday, right? So you could do like an SPY butterfly for tomorrow.
It's like, man, I have all this short delta. If we get a down move, it's going to help me regardless,
Okay, sure. Yeah. All right.
I don't know, just reasoning,
so
debating.
Maybe it's kind of a pass on the PPI. And then I think Friday, we have a couple of inflation numbers that come out at like 10 o'clock maybe.
Yeah. We got more potential volatility.
I think I misspoke. I think we have consumer sentiment and also some inflation expectation numbers. So, yeah.
No, I got you. I hope we get some move to the downside. It would kind of give me a little bit of relief with some of the positions that we have on over here. That's the thing too, Dr. Jim. It's like at the point to where I want to get a little bit more delta neutral because I'm leaning short right now. And then we have the binary event where now it's difficult to put on a little bit more long deltas in my specific situation near the highs with the binary event tomorrow with primarily short delta on already. So it's like considering those things, sometimes it can be a little difficult position to be in.
No, it's very difficult. It's extremely difficult. And actually what you just mentioned, that actually speaks to a larger point, right? So generally speaking, as premium sellers, we tend to be, we have negative gamma. So that essentially means that when the market rises, we become bearish. When the market falls, we become bullish. And so we're always kind of naturally playing for that contrarian move. Okay, so when the market rises a lot in a short period of time, just like it has, that usually puts you in a tricky spot because now the market has risen a lot.
Right.
And so you're going to become more and more bearish. You might be thinking, hey, I want to neutralize my delta. I want to add some bullish delta, some positive delta, whatever. That's tricky for all the reasons you just outlined. It's like, man, do I really want to add them here at the very top?
Yeah.
Like, do I really want to add them at the tippity top?
Right.
That's tricky. Generally speaking, the way I typically view that conundrum is you should be small enough on entry to where if you do get stretched and you're really bearish or you're really bullish because you're on the other side of whatever short-term move, you should always be in a position to where if you choose to do nothing and just hold that directional bias, that's okay. Position sizing wise, that's okay. But if you do want to trim your directional bias somewhat, I would just encourage people, I wouldn't go all the way to delta neutrality from wherever you are. I would just do it in kind of a gradual way. So for example, if you have a strangle on, you sell a call, you sell a put, right? The call gets tested because the market runs up. When you go to roll that put up, I wouldn't roll it all the way up to where you're neutral now.
Right.
I think you want to give the marketplace cyclicality a little bit more room to work. And so stay short, but maybe just trim it a little bit to bring in some premium. So again, it's just, you want to be thoughtful. You want to be somewhat gradual with how you do it. At least that's how I view it.
No, I'm going to keep that in mind because I'm glad that you picked that up because I feel like it is a unique spot. And it's a spot that I think all of us are in sometimes a little bit more commonly than what we would think. But when we're at the highs and you need to balance the portfolio a little bit, and it's like, now I got to get on long delta at the highs, it's an awkward position. So with Google, Dr. Jim, I know we talked a little bit about Google. This is one I was able to put on. Was it Goog or Google?
I'm kind of a Goog with the L type.
Are you the Goog? I think you were the Goog guy. Let me see.
I'm a Goog with an L.
Oh, you're the Goog with an L. I think I'm just a Goog because I don't have Google position on. So it was probably GOOG. But this was one of the earnings ones. I ended up taking it off. I ended up taking this one off. This was one that we had on for earnings. This was an earnings trade. We were up about 50% of the potential profit. And this is one of those, Dr. Jim, that I want to leave it on this note here. I put on a lot more time on this one because I was very unsure about Google's earnings. Now, I woke up, I was up about 40 to 50% of the potential profit received on the trade, so about double from what I originally closed it at. But I want to ask you, how do you manage something like that? You're already up 50 to 60% of the potential profit. You have 60 days, or I'm sorry, I think at the time I still had maybe 45 days. I had a lot of days left. 45 days left, up 50% pop. Are you being a little bit more patient to milk that a little bit more? Or
no, never.
You're taking it off?
Taking it off. And the reason why is pretty straightforward, right? As you build up a profit in a given position, you get to 50% of max profit. You have to understand that your maximum loss on the position is not only the original maximum loss, but it's also whatever profits you've accumulated to that point. So as you accumulate more profitability, 10%, 20%, 30%, whatever, you have more loss that you're exposed to if it turns around, if it goes against you. Once you get to a certain point, and we typically like 50% of max profit, man, the risk return just becomes so undesirable to hold that trade. And so taking it off just makes the most sense. Trying to milk it, I don't think you're building good habits. The risk return is not really in your favor anymore. I would much prefer to see you book it and then just move on to something else.
No, I like it. It's great 2 cents to add there. Anything else to add, Dr. Jim, before we start wrapping up here? I mean, we don't have too much in the portfolio. We got PPI tomorrow. We got some more volatility coming in. We'll keep you guys posted with the MNQ trades and NASDAQ trades and things of the sort. But anything else to add, Dr. Jim, to the portfolio?
No, it's crazy, man. It's really, really crazy. And the market is incredibly strong. I'm curious to see if the NASDAQ gets its feet underneath it for the next couple hours and closes green, but we'll see.
Yeah, we'll see what we get. Dr. Jim, as always, we always appreciate you having you here. You been watching any football lately?
No, I'm a baseball guy.
Baseball
Red Sox, baby.
Okay, how they been doing?
My Red Sox are on fire, absolute fire.
Oh, wow. Well, we'll ask about that next time. We'll hear about it another time. But that's going to wrap it up for today's segment. Dr. Jim, we always appreciate you having you here, getting your thoughts and insights on the market and on the portfolio. We appreciate everybody's time. Thanks for taking the time to hang out with us. We'll catch you guys in the next segments. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Well, hello. Today is a little calmer than yesterday. Generally green, but yeah, not the wildness we had post CPI. Tomorrow the PPI comes out pre-market. Again, no clue how much impact that's going to have. The CPI, it seems to be what people are obsessed over. Although I guess from a supply chain issue perspective, if the PPI for some reason came in hot, that might get some attention. But it seems that all inflation and recession fears have been zeroed out. Today, the small caps continue to rage higher. There's a big day yesterday for small caps. They're doing the same thing now. I was looking back on December 18, and I don't remember the reason why, but on December 18, small caps just almost crashed. They just went plunging. And they recovered into February. I think it was February 8th, something like that. And that was the peak for the year. I think it was the high point for all this year. We're getting close to that level now. We're approaching that recovery zone. So that's the next modest test of resistance. We're still well below lifetime highs, but at the moment, for example, the NQ is up 0.01%. It's been red a good chunk of the day, whereas the RTY is up 1.8%. So big outperformer. Small caps have been really left out in the cold, finally catching up. Got some charts loaded, including small caps, so let's thumb through them, see what's cooking out there. The spider has another lifetime high intraday, almost certainly another lifetime high close. As I say, not quite the explosive move we had yesterday, but the ES is up 15, and we've made a nominal new high there. And that's, I've said this before, when you get into the zone of lifetime highs, it gets either very clear or very murky. You've got less to work with. It's sort of like, if you're inside of a room, you know the boundaries, the door, the window, the walls, the ceiling, the floor. You can work with those parameters. If you're just in outer space, who knows what's going to happen next? And so it's you can't really talk about so much about patterns and resistance and gaps and so forth when you're just floating up in the ether, which a lot of markets are doing right now, like the spider. So the only thing one can say is a minor event would be a failure of the breakout zone, like so. If it slips below where we burst above it yesterday. But until that happens, the other thing I just noticed is the oddest thing. Look at this. And this is just, maybe it's just coincidence. This is weird to me. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. Toggle. Red, green, red, green, red, green, red, green, in terms of the candlestick part. Like I say, it's possible to flip a coin and have it land heads 500 times. It's just really, really unlikely. So for whatever goofy reason, that's what's happening with the spider right now in terms of toggling colors. The IWM, as I said, very strong. We don't have any such toggle there. Big green bar yesterday, big green bar today. And as I indicated, we are getting in the zone on the cash index of that recovery high. We've already beat it on the ETF, because as I explained yesterday, the ETFs incorporate the dividends. So we're above it now on the ETF, but for the cash, I don't think we're quite above it. Perhaps, if so, by just a little bit. Overseas, emerging markets, big day. another big push higher, big gap higher, like so, up over 1% on the EEM. And specifically for China, they're up about 2 2/3%. Importantly, we are still beneath this base for this pattern here, and much more important than that is the this broken trend line. We're still below that. It would take a launch above both of those to negate them, and as it is now, this is still a very strong resistance zone right along where we are right now. One of the few real downward moves that we had was thanks to earnings. It was the restaurant group Cava, C-A-V-A. And we've looked at this from time to time. For a while, it was just an absolute phenomenon because back around here, this restaurant moved from the 20s all the way up. It was approaching 200. We got to 172, I think, at the tippity top, right along there. Yeah, 172 back on November 13. Since then, we've had a big cut lower, as you can see. And so today it's down about 15%, although off its lows. But we've got a gap here. So even if this recovers, fairly important resistance right along there. So CAVA down hard, and just one of the very few reporting earnings. That was last night. I don't think Sweetgreen reported, but relatedly, just in the theme of smaller restaurant groups having a bad time of it, Sweetgreen peaked itself almost to the day, actually, back in November of last year, doing exceptionally well. This is SG, and since then, a la Cava, falling quite hard. This one moving from around 45 down to the single digits. So it's lost something like 80% of its value. So nasty stuff for SG. Gold, GLD, having a little bit of an update. The key thing here isn't so much today's movement, but the fact that we've got a triangle pattern information here. And if eventually we can push above that April 22 high, which on GLD was 317.63, I think that has the makings of just another stair step higher. It's done this over and over again. We had it here, well, actually here and here and here and now here. So as I've said on gold, long-term, quite bullish on it in spite of its big gain so far. It needs to construct this next stair step to vault higher. Could take weeks, who knows? But so far, so good on that. As far as oil goes, slipping on this, crude oil's down on the front month about 0.75%. USO is down about 1%, resting on this trend line here. So it has been slipping pretty hard for the past couple of weeks. But in general, as I said, it's green across the board. One of the absolute key foundational elements of this bull market continues to be semiconductors. Here's the SMH itself, intraday lifetime high, probable lifetime high close on this. It's been a very strong couple of weeks for semiconductors as well. And that is trying to prop up the cubes. It's teetering a little bit because as I look around, there are some instruments that are down decently today. We've talked about CrowdStrike, QUBT, RBLX, things like that. We'll look at those in a moment. So the NASDAQ isn't across the board powerful, but it's still hanging on to those gains here. Cubes intraday, another lifetime high. Close remains to be seen. It's at the cusp right now, and it hardly matters. But as I say, we're up just a few hundredths of a single percentage in spite of the continued strength with the semis. What else is cooking? Well, over in Ethereum land is having another incredible day. So just to review this, Ethereum had peaked way back in November of 2021. So we're talking almost 4 years ago. And it has been a big mess ever since then until just recently, as you can see. And it bottomed out, just like everything else, around April 9. It's down around $1,400. It's approaching 5,000 now, about a 300% rise. And interestingly, we actually have a shot at pushing above the lifetime high. As you can see here, just in the past couple of weeks, this has moved from about 3,300 to about 4,700 and quite close to besting that line. It would only take another $100 or so, which is what, a couple of percent. So that looks pretty imminent. A lot of new money pushing into Ethereum. SBET, which has held itself out as the MicroStrategy of Ethereum, is for the day up pretty decently, although longer term it's not that impressive because they did their big push, I believe. They did their announcement here in terms of building up a treasury stock of Ethereum, and it fell hard the next day. And it's recovered pretty nicely since then. But in spite of all that's going on with Ethereum, not very impressive here. So it must be a big premium that's making it kind of mushy. Likewise, Strategy Inc., MSTR, formerly MicroStrategy, nothing too exemplary here, down 2.3%. This one peaked back last November at 543, and it's down in the 300s now. So really having trouble getting off the mat, even though the crypto beneath it has been doing very, very well. In terms of some shorts that are actually doing decent today, they are out there. Not many of them, but they're out there. CrowdStrike, CRWD, nice reversal today happening beneath that very clean topping pattern. As I said, quantum computing, QUBT, down almost 4%. So this is moving nicely in the right direction. RGTI is actually up today. I just got into this just before the camera clicked on. Got into this one again. Very clean trade on this. 17.55 is the gap. We're just beneath it now. So anything above that, I just close it out. But I'm going to give it a shot, see if that gap is respected. Roblox RBLX. This one's down about 2 1/3%. That island reversal gap that I talked about is still intact. Couple of weeks of trying, and it's persistently stayed beneath that gap. So looking good. And one last one, a much bigger company, Oracle, ORCL, almost 4% down. The peak on this one just last week, that was at 260.87. We were down about almost $20 from there, and a nice big bearish engulfing pattern today on ORCL. Just a few weird symbol charts from the economic database. This one is the corporate bonds, the AAA corporate bond yield, which, as you can see, even though it's a yield, it still has very nice chart-like looking patterns here. We had this top here, a long hard fall, bottoming out, and then this move higher. And that may be it. Maybe yields have peaked, maybe bonds peaked. This goes back a long way, by the way. This goes back to like literally the over 100 years ago, like the 1919. So it's a really cool long-term chart. Labor force participation rate. This is basically the percentage of people who are actually employed full-time versus how many could be ultimately. And it's never gotten like above 70%, but it is, as you can see, for years and years here, it's been dragging lower, and it looks sort of bearish, which you might play into the narrative of AI displacing jobs. And this is the Somrule recession indicator from the Fed database. And as you can see here, it peaked back last August, and it's ground down to vanishingly small. So just as the VIX is down around 14, so too recession fears have pretty much left the building. So just in sum, just a couple of last charts before I get out of here. NVIDIA, absolutely key to keeping this market propped up. If you're going to watch just one stock, this is a very important one to watch because it's very richly valued, most valuable company on the planet, and core to keeping the market lofty. And just in on a bullish note, IEF, looking better every day. This is the 17-year Treasury bond ETF, getting rather close to a possible breakout there. And if it does, I think good times ahead for this, which would also indicate lower rates. So, okay, we'll see you post PPI tomorrow. Thanks, and see you Thursday. Bye-bye.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Little cantankerous, but...
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
You want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
Not
perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not empirical ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
Oh, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful.
I could be
You're
argumentative.
68% cantankerous. Okay, there you go.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the closing bell. Sosnoff, cancel crash right now, Sosnoff. Do you know why we have to cancel a crash?
Why?
Because even the S&Ps are up 13, and the NASDAQ is down only 10, and the Dow and the Russell are both up. Matter of fact, the Russell's up almost 2%, Sosnoff, up $44. That's a huge move. You can't have a 2% move to the upside in an indice and call it a crash. Even you know that, Sosnoff. Volatility itself is down 6 cents, sitting tight at 1844, and bonds have been strong all day, just off of their highs by about 6 ticks, but up about 3/4 of a point, 26 ticks at 115.15. Bitcoin hanging in there all day, catching a bid all day, up to 123. Sosnoff, I think this would be a new closing high if they close here today at 3 o'clock for us. Ethereum, big move, 4.5%. I mean, Bitcoin had a 2.5% move. Ethereum had a 4.5% move. I see your 2.5. I raise you 2%, up $200. Oil, it's been a non-event. Sosnoff, down 44 cents with inflation numbers coming tomorrow. Gold up $7 at 34, holding steady. Silver making a big move to the upside, 1.5%, 53-cent move in silver. and nat gas. Do I talk about nat gas up 17 cents? I can't talk about net gas. Sadnov, a lot of movers today. A lot of movers back and forth and two sides. But CRWV for earnings now down 27 outside the expected move after opening inside the expected move. App down 21. Netflix down 18. Kava used to be your favorite place. Then you said you hated it. Well, it's down $13. It is off its lows by about $6. Oracle down 10, CRCL down 10, and Meta down 9, Microsoft down 7. So these numbers are big and big on stocks that have been holding up this market. AVGO up 6. I'm sorry, down 6. Hood down almost 6. JP Morgan down 3, Palantir down around 3. On the upside, you've got Lilly up 18. Reddit, can't keep a good Reddit down, $235. So didn't think I was going to say it in the year 2025, but Reddit is $235. Lulu up 7, IBM up 5, helping the Dow, and Apple up 4 and change. Coin had a pretty big range here of $20, Sosnoff. 435 down to 345 down to 321. It's sitting at 326. You've got CSCO, Cisco, JD, and John Deere for earnings.
I think we traded JD maybe. Yeah.
I usually like to trade JD.
We're a tiny little bit long, JD.com. We're short some, let's see, SEP 30 puts.
That would make you long.
Let's see what we did today.
You have anything else?
No. We sold some at SEP 30 puts, 61 cents. We'll sell some at 63 now and then round out. We're done. We're done. JD.com, we're done. We're done with you. Yeah, we did something in Cisco.
Give me my money tomorrow.
In Cisco, we did something this morning. Sold the 75 calls, really small, tiny.
In August, though, right?
Yeah, tiny position. I'm not even going to count that. Yeah, I don't really like the earnings tonight. I think it's a no play. The earnings last night worked, but this was a day where I thought they would turn around. Hated the NASDAQ right from the opening bell. It was the right call. Hated the S&Ps, but they didn't really do much. Well, I shouldn't say much. They've sold off 25 handles. That's pretty big.
Yeah, I mean, this is the biggest sell-off you've had in basically 2 months.
NASDAQ had a nice 150-point sell-off. We don't have a Russell position on, and we don't have a Dow position on. Both of those were strong. I don't really read too much into it. Rest of the marketplace, no, pretty much a kind of a wash.
This is the worst down move ever, up 11, Sosnoff. This is the worst down move ever, down 21 on the NASDAQ. This is the worst move ever, up 44 on the Russell. It's a huge 2% move. And this is the worst down move, up 430 on the Dow. You call yourself a down move? I don't think so.
Okay, I'll give you it. It's the worst, one of the worst down moves I've ever seen, up 12.
Way to join in.
It would be one of the worst down moves I've ever seen if it was down 12. But again, I think the market it's looking for its next little. It's looking for either a burst of energy or something else here. I don't.
900,000 S&Ps traded today. That's at new highs. I mean, that's an absence of just absence, nothing else.
I don't really read that much into it because this is not an across the board traditional market. This is a market I feel like much more that's concentrated into a few stocks that there's motivation to buy, a handful of companies. Some of them reversed a little bit today. But there's been motivation for just a handful of companies. There hasn't been like this broad-based, I got to own the S&P 500 type of, it's more like, You know what, I'm going to pick the stocks I want to buy and that's the kind of market I'm going to pick the commodities I want to buy, and I
Right.
think that's kind of the market we're in right now. And I think it's kind of like a stock trader's market. Like I know everybody wants to talk about gold and crude oil and
Gold and crude oil have been backseat right now.
no,
I mean,
I'm agreeing with you. I'm saying people want to talk about gold and crude oil and the US dollar and all this kind of crap, and nobody cares right now. This is a stock picker's market, and it's a market that is that is highly concentrated, and it's a market where like you can have Apple up $4 and you can have Palantir down $2 and you can have Nvidia down $2, and they're just moving money around from one big player to the other. One of the nice advantages of today's technology is doesn't matter who you are. If you're playing in one of these multi-trillion-dollar stocks with commissionless trading, there's no reason why you can't move from Nvidia in the morning to Apple in the afternoon and play the short-term trends, which I think a lot of people are doing.
I mean, it's possible. I get that. I know you were talking a little bit with Dylan today about inflation and stuff like that, and you got PPI coming out. That's an inflation indicator.
Actually, we didn't touch on inflation today, but we talked about some other things, mostly
about mortgaging the future and stuff like that.
No, I talked more about a very a disrupted, more of a certain political environment where some companies are supported and other companies are not, and it's reflected in stock prices. I really talked about, it's an interesting world right now because the bull market has made a lot of people into, geniuses, and I wonder what the unwind is going to look like eventually. But I'm not trying to predict an unwind. But it is a very narrow.
You know why you're not trying to predict an unwind? Because you're smart enough to know that there is no way of predicting an unwind.
I have traded starting in my entire career. I started when the market was really weak in the early 80s, basically before it took off in I think it was 82 under Reagan, but traded in the 1987 crash. So I saw the whole rally, from I want to say it was 82 to the end of 87. So we're talking about a solid 5.5 year rally, of which I was like, is there ever going to be a downtick? I mean, we started looking for a downtick in 1985, and we didn't have a downtick until the end of 1987. In 1998, we started looking for a downtick, and by the end of 1999, we're like, what the hell is going on? It wasn't until March of 2000 that the market rolled over and basically started to crash. And then in 2007, 2008, we didn't have a downtick for a year and a half, and we're all sitting around going, "What the hell is going on?" And then by the end of the summer of 2008, we didn't have an uptick, literal uptick, for 6 or 7 months, and so you go through these stages where you go to these extremes, and you realize, I was so bearish in the summer of 87, but you didn't have any bullets left. You're out of bullets. Yeah. And I was I was insane. I was pulling my hair out in just the end of 1999, but you run out of bullets. How long can you hold these short positions? And then the same thing in the end of 2000, kind of the summer of 2008. I mean, you're like, oh my God, I couldn't be any more short. And then you eventually you capitulate because you can't hang in anymore. And then they just fall apart, and then you're like, "Oh my God, I had him and lost him." I knew it. I was just 2.5 years too early. So when you say I've learned my lesson, you're right. I've learned my lesson. I'm not going to. I'm not going try to. I'm going to have opinions and stuff, but I'm not going to mortgage. I'm not going to mortgage the house and roll everything out there. It's not a good risk reward. Mm-hmm. One of the things I did talk about with Dylan, which I thought was interesting, we talked about the difference in sports and in kind of the stock market. And one of the things I said about sports is, if this is on Truth or Skepticism podcast, but if you have an opportunity to win now, Like, I don't care what sport it is. If you own a football team, a baseball team, a hockey team, a basketball team, if you have an opportunity to win, you will mortgage the future to win because it's the right thing to do. You owe it to your fan base. If you're one pitcher away, or you're a wide receiver away, and you have a great team, you owe it to your fan base to give away some young talent or some draft picks in return for some wily veteran that can push you over the top so you can win a World Series, a Super Bowl, Stanley Cup, whatever it is. You saw the Florida Panthers did it this year when they brought in a bunch of old veterans. Every team that wins these championships, they bring
Florida Panthers are going to go for a three-peat.
I understand that, but they brought in.
I would not say that is mortgaging the future. I would say that's creating a goddamn dynasty.
Well, when you bring in guys like Brad Marchand and guys like that, you are hoping. You got 1 year out of them. You're mortgaging in baseball. They do it all the time. You trade your top prospects and you bring in.
I understand. I get your analogy.
But my analogy, I haven't finished. That's sports. But in the world, in the economic world, like when you think about the whole ecosystem of where we live and everything, it's different. You cannot mortgage the future of our kids and grandkids. Like, you can't mortgage the future for now. You just can't do it. It's not the right thing to do. You can't sell out. Like in Chicago years ago, Mayor Daley sold the parking meters in the city because he needed $1 billion, but he gave away $12 billion.
You're mentioning the worst.
I understand. I'm only bringing it up so people understand the analogy, which is in the ecosystem, you can't mortgage the future for immediate gains because there is no Super Bowl to win. And what I feel like now,
there is no competition either. So I don't think you're mortgaging anything. I think you're doing the best that you can do in the situation.
What I think's happening now is there is a little bit of mortgaging the future going on. And I don't.
Well, who cares what you think? I just said I don't think he's doing that. They're doing the best that they can with the situation that they have.
Completely disagree, but I will change topics. I was just bringing up the analogy.
It's a good analogy if there was another team to compete against and we were playing for a Super Bowl, but we're not. But I hear you. I'm not. We'll agree to disagree.
Okay. Other than that, as I look at this close here today, the rest of these stocks, I mean, it's a very.
Sometimes you got to make change, Sosnoff. Not everybody likes change. Sometimes you got to make change.
It's a very mixed bag today.
Different leaders change different things.
It's a very mixed bag today. I'm not going to let you get me wound up. It's a very mixed bag today.
I'm doing my best. I really am. Inside buzzwords. I'm doing all kinds of stuff.
Not even going to let you remotely get to me. It's a different world today. And I'm going to see how this thing plays out. I mean, I like the fact that they rejected at 6,500 just a little bit. Not a huge rejection, but 25 handles is nothing.
64.83.
Hey, I like the fact that they rejected. We rejected to the expected move today. That's what they did. I would like to see more follow through. Like to see a little more two-sided action. I think two-sided action is good for traders. I don't want to see a one-way move. That's all.
I agree. I too thought that after I didn't sell until they got back down to 64.90. So I didn't make any money. I didn't sell it on the way up. Made a couple of nothing money. It was too much risk for the amount. I thought we'd have a lot more downside volatility. Upticked a little bit. We're going into some numbers. I thought volatility would stay bid. The market would get a little bit weaker, but that certainly didn't happen. You just had too much of the same thing going on. Sosnoff, they're not changing until they change, and I don't think we're going to get the top. But hopefully we'll get the next couple of days.
Yeah, I mean, we'll see.
Until then, it's blue skies, my friend.
Well, yeah, except that we are getting very close to one of the uglier days, which generally in August would be tomorrow afternoon. So we'll see what happens.
Well, I've been waiting for your seasonality forever now, so it's just not happening.
That's not my seasonality. I'm just bringing up a point of reference.
I'm still trying to poke you a little bit.
I mean, listen, I'm just looking for some noise. I need noise in order for me to make money. I need noise.
I agree with you. For order for me to prosper, I need noise too, and I haven't had it. It's very frustrating.
We need to get some more. We need to get a bunch of more positions on. It's very hard to do, and it's very hard to do in the current environment because there's not a lot of juice out there, and we like to sell juice. So we're kind of, I mean, when I say we're grossly underinvested, we're grossly underinvested. So we need to create a little more noise. We need to get the market to create a little more noise, and we need to get a little more involved. And I don't think you're going to see much of anything. I mean, based on earnings tonight, you're not going to see anything. I do like the bond move today. That's kind of what we were hoping for. So that was a good one.
I mean, bonds going higher supports now at 15 and change. If you can get over 16, that would really kind of support more of a as bonds go higher, rates go lower.
Yeah. I totally agree. Looking at our positions today in the commodity world, biggest loser was, the only loser we had was just the S&Ps. And in stocks, our biggest loser today, surprisingly, is coin. And that's just because the stock went up 20 and then down on the day and then back up a couple. We just got whipped around and they pumped a lot of volatility in there. And our other biggest...
you certainly didn't get any volatility contraction when you had movement like that.
Not in coin and not in Reddit either. So Reddit and coin were our two biggest losers today. On the biggest winner side, we just had a lot of winners, but I don't think we had a big winner.
You sprinkled the infield with some winners.
Yeah. A lot of premium came in today. Vol was kind of, I guess, for making record highs, Vol wasn't that weak today, but a lot of premium came in.
It's probably hanging in there a little bit. Volatility will probably have a big contraction tomorrow. That would be my guess.
After the PPI, for sure. Sure. And I think on Friday you're going to see after the opening bell, assuming there's no numbers or anything.
You got retail sales coming out on Friday too.
Well, you could see intraday volatility on Friday of like 6%.
Oof. That doesn't bode well.
I'm just saying it wouldn't surprise me to see one day VIX after the opening on Friday trade around 5 or 6%. It wouldn't surprise me. Yeah. And then we see what happens. Then we get into the fun part of the year after this. Summer's over, kids are back in school.
Vinny goes back to school tomorrow. This is it.
Yeah.
And I think it's a little early for him, but that's what they're.
I'm curious how these kids, how much ChatGPT, how much AI are they going to use to answer?
Well, they make them put their phones in like a caddy or a box when they walk in.
I mean at home when you're doing your homework.
That's a problem. That really is a problem. As a parent, it's a problem. You want them to do their own work so they learn. But
if I was a kid, I'd be all over that. There's no way you wouldn't use it.
I copied off of Nikki Demutis. If I had a Chat GPT, forget about what I could have become. I would have been amazing. Are you kidding me? I would have been no stopping me. I would have been boy leader of Aristonarca and the whole borough. That's what I would have done.
Yeah, it's cool.
I don't know if you'd be happy to know the NASDAQ turned green.
I have a screen in case you didn't know. I've had a screen in front of me for a long time. Pretty good with seeing what's shaking. All right, we got the boys. We got our overtime boys waiting in the.
Let's bring them in. Overtime boys. Hello, gentlemen.
Hello, last call, boys.
Thank you. Well played.
Last call, boys. I like it. Overtime boys. Last call, boys. A lot of boys here.
I prefer the girls.
I've noticed.
Don't go there, Tony. I already went there today. It did.
False claims. False
news. False claims.
Fake news.
Fake news. Yeah.
I think he's dipping into the stash, Sazno.
No, it's not true. False claims.
I think he's dipping into the stash.
False claims.
I don't know.
I get nervous when Vecchio shaves.
I have never seen. I've seen a lot of guilty faces in my life, like on dogs, on kids. I've never seen a guiltier face than Radigan today when we got on air. But it was
a false claim.
It was worth the price of admission.
Paul Sullivan and Cromwell. I'll issue a cease and desist if this keeps up.
Nobody's more guilty when the first thing that comes out of their mouth is call my law firm of Sullivan and Cromwell and ask them. That's the most guilty response I've ever heard. Call my law firm.
They'll tell you. You'll see.
That's true.
Teflon Radigan.
Yeah. No comment.
Hey, Dylan, this is a true story. The last time we called Sullivan and Cromwell, it cost us $20 million.
I'm sure. Listen, that's why they call them Sullivan and Cromwell. They
literally charged us $20 million. They are the biggest rip-off law firm in the freaking world.
5,000. The opening retainer is $500,000 just to take a meeting.
They were the biggest rip-off I've never been around a firm like that. It's unbelievable.
But if you want to buy a large pharmaceutical company, that could be useful.
I can't remember why we used them, but we were not buying a large pharmaceutical company for sure. All right, boys, what do you make of this mess today? SPOO's up 21 now. They're almost back to 64.90. You know, we had a nice little reversal from 6,500. NASDAQ had a really nice reversal today, you know. But again, I consider this at this point still relatively meaningless, and you can't put one dime of weight. There's no weight at all you can assign to the tape action today. It's meaningless.
Well, the dime would be value, but go ahead. Mm-hmm.
I thought the value was there was a little dip today back into the former high from a few weeks ago, and I thought, what would Dylan do? He'd fly asunder into the sun. Supernova, baby.
Supernova.
So I jumped back in, Tom.
That's my boy.
Okay. I did not go long, but I definitely cleared out all my shorts, and it was the Russell that spooked me today. That was a really, really strong move, and I'm not saying that I like them on the long side. I don't. I think the risk reward still sucks, but I'm not going to fight them. I'm going to let them give me a sign of weakness, and then I'll try again.
That's fair.
Dylan?
I mean, I've been long for, Meta, Tesla. Tesla hasn't been so great, but Meta's been great. But the thing is that hanging around with Vecchio and Spivak, they sort of tempt me into stupid things like the bond, and I don't know. It's never,
Bond's working today.
So what you're saying is Sosnoff owes you some money, Dylan?
First of
is that
all,
what you're trying to get to?
I sold Meta on the opening today when it was up. I just shorted stock and took a couple bucks out of it, but it was a nice trade. It's down 9 now, so that was definitely, it was heavy.
I mean, but listen, I believe, as I have believed for certainly since the CPI number in June and then the jobs number spookorama, that the sentiment momentum overrides all rational thought. I don't know how long it will sustain itself, but I really do believe that we're at a sort of an irrationally exuberant moment in the financial markets. But I also think that you're better off to be long than argue with it, despite what happens on any given day. So I've been doing that.
Well, until proven otherwise, you can't argue that. Until proven otherwise. But I think you have to keep a small short position here and keep your fingers crossed. And I don't know. That's my take.
No, I know. You and Spivak. I mean, the thing is, my problem is I'm terrible at maintaining a small short position. Because I'll get tempted into I start to think that I know things.
Yeah. No, that's normal. That's normal. I've taught myself over the last 15 years of a bull market how to survive being short.
Yeah, I'm still learning. I still pay my tuition every time. But anyway, at least I do it in a small way.
I'm going to write a book. I've thought about this. I'm going to write a book called, Short Selling for Preschoolers.
I need that book. That's exactly what I need.
So you can teach your kids at an early age. Short Selling for Preschoolers.
We'll send you on a book tour, kindergartens across America.
That's right. Mm-hmm. I'm going to do a whole tour on short selling.
They probably would do better than most adults because they're probably less inclined to think.
This is true. Just trade what's in front of you. Totally agree with you there.
Mm-hmm.
And you got volatility low, gentlemen. You got to wait for volatility to uptick. I can't say it to you for the umpteenth time, even to sodden up. But you know what?
You thought you had it this morning, Tony. I mean, you thought.
I did. I thought it was good, and we may still have had the highs in for the short term in the market. Maybe we will get a dip tomorrow and see how the market behaves. So it might still come to fruition. But the Nasdaq just rallied up to 12. Even the S&P's up 22, just under your 6,500 number. But all-term records again sound enough. Listen,
I dip, you dip, we dip, we all dip. All right, let's go.
A little bit of a break. We'll come back. We got overtime next. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
New all-time highs for the S&P. That's your Wednesday. It's overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Midtown Milan, here to join you for the rest of this hour. Futures market closes at 5 Eastern, 4 Central. If you're joining us on the platform, Tasty Trade on the website, tastylive.com. Come over to YouTube. Tell us what you're trading today. What do you think of this market action? A little midday dip for stocks was no problem because we closed the session here on the highs. The S&P 500, 64.91, a new all-time closing high here for the stock market on this Wednesday, breaking through the highs that we saw at the end of July. Likewise, the Nasdaq, which spent a good chunk of the day in the red, finishes higher, up by 0.03%. It's a new all-time high. And the Russell's rip post-CPI, that continues up to a fresh yearly high here. There's lots of risk taking in today's market. Silver's bouncing 1.5%. Bitcoin's up over 2%. Ethereum up 4%, approaching $5,000. Wow. Risk is on. Dylan, our star of the supernova. How you feeling today?
A little, the problem is I think I didn't sleep well or something because I spent a bunch of time thinking today.
Oh, God.
Yeah. It was a disaster. So, so I didn't do anything, but at least I have the things that I had on, and it was ultimately more good than bad. But it just seems wacky, the whole thing. But anyway, I think it's the lack of sleep. So my conviction level is actually diminished, but I wouldn't overinterpret that as anything other than sort of the risks of thought.
See, this morning I did the opposite. I woke up, I got an IV, vitamin B, taurine, magnesium, Toradol,
You gotta get
Zofran.
potassium in there too. If you're gonna
don't worry.
creatine.
I got that shot that makes it taste like Flintstones in your mouth. I'm ready to run through a wall. What rib pain? There's no more of that. And that was, and I said, I'm feeling pretty good today after I came home. Time to buy more stocks, Mr. Radigan.
Look at you.
So I'm back in. I'm looking out now on the longer term basis, 48 days. Little thing, just dipping our toes in. Finocchio wants to wet his beak here a little bit. It's a Godfather reference. Long the 6,700, short 6,750. It was fun, Ilya. No, it wasn't. Being a bear
No, it wasn't.
for the past 2 weeks. Or even directionally neutral. But the breakout in stocks is at least there. We were talking about this yesterday on the show. If we see the further progress, it looks like there could be rotation afoot. Maybe that gives the S&P 500, the Russell, more room to run. And sure enough, they are leading our NASDAQ here today.
Yeah.
So, Ilya, I think you have declared this poking of the bear finished.
Yeah, you have to trade with the price action. This is where you have to remember that all of your thinking, if you so choose to engage, does not mean anything if the price action isn't complying. And so, in so much as we had a break of the high on the S&P today, you had a break of the high on the NASDAQ today, or yesterday, you had a break of it on the Russell today. I'm not fighting that. No, thank you. And this is why I poke the bear with cheap vol risk-defined verticals. Across all three indexes, I ended up giving away less than 1% of equity on each attempt. This is why I do it that way. This is why I build tons of duration into these things to dilute exposure to delta. This is why I use ETFs and not the futures, to keep things small, to keep risks contained, because there's always time to scale up if the price action goes your way. Price action didn't go that way here, clearly, so I'm out. Okay, we'll try again when it seems like there's an opportunity. But the risk-reward has been reset here. I don't think it looks awesome in either NASDAQ or the S&P, but it looks solid in Russell.
Dylan, this stock enthusiasm was across the board here today. I even saw a company by the name of Bullish have its IPO.
Actually, I visited the New York Stock Exchange today from Milan, interestingly enough, and noticed the banner on the building. Using my teleporter, of course.
Naturally. The company IPO'd on Wednesday in a range of $32 to $33, which valued the company at $5.4 billion when it opened. Putting it right now, given current prices, it has a $13.2 billion debut, now at $70.91. Not too shabby, Mr. Radigan, but it's a crypto company that's surging here out of the gates on a day when we have crypto pummeling the market, moving up to new highs. I see this as a new high close in the BTC futures contract. I see this as a new high close in the Ethereum contract right now.
Mm-hmm.
Is this a macro story, Dylan? Are you looking at the money leaking into the world of crypto? And is this something bigger in the state of play that maybe we're not paying attention to?
Boy, I mean, so well, I guess I'll focus on what I feel like I know and sort of avoid what I don't know. The biggest thing that we know, and I think you hit on this the other day, and I think we sort of probably haven't hit on it enough recently. We hit on it a good bit a few weeks ago. The Trump tax legislation is so beneficial to the rich, and it so encourages the flow of money into assets, because people who already have a lot of money, when they get more money, don't necessarily buy more things. They just park the money in financial assets or real estate or art or whatever it is. And so I do kind of wonder to the degree to which that is a factor in all of this. You know, even in the sort of the ebullience of the supernova, is it entirely driven by AI? Probably not, right? It's probably driven by macro factors about the flow of just the availability of cash money. And so I think that that's a meaningful consideration. I do, you know, Ethereum. Why would Ethereum suddenly break out? Who the hell knows, man? You know, why didn't Ethereum do anything for the last couple of years? I mean, you could make a case that, well, now because you have the crypto president, that it's all crypto positive, but why now? I don't know. You know, is it an indication of negative dollar sentiment? I don't know if it is even. You know, I do think that when it comes to the idea of not thinking and instead, you know, buying assets, that buying an asset that is crypto should be on the buy sheet. It shouldn't just be, you know, Meta, Nvidia, and Microsoft. Even though when I think about crypto, I have to really ask questions.
I mean, I think when you look at sort of money chasing assets here, you get to a conversation, especially on a day like today, where you have a further winding up of Fed rate cut expectations. The markets are now starting to lean in. Maybe the Fed will do more than 2 cuts this year. I mean, the bonds rally today pretty significantly, and you get this sense that the market has just fully embraced this kind of a risk-on perspective, saying, "Oh, well, the money's going to be cheap. Allocate accordingly." And so you see it across the board today. If we look at what the markets are baking in now for Fed stimulus, it's 125 basis points between this year and next, and this year has gone out to 58 basis points. That's the most dovish it's been all month this month. And if you look at next year, you're at 68 basis points, which is way more than what the Fed has. And the cumulative 125, I mean, we're talking 5 rate cuts to the Fed's 3, and that's the most dovish we've been since basically NFP. So we're in a place here, seemingly, where money is perceived like it's going to be cheap, and the economy hasn't, in some sort of an unequivocally obvious way, fallen apart. So money is just pouring into risk. The dollar's a little bit lower today. You're kind of seeing it across the board. And it looks like Chris is having some.
We lose Chris?
I think so. I think so. I can still see his charts, though.
What I'll get at, because all of this, even though I know I've been the champion of not thinking, man, it seems like if there was ever a time to consider a little short nibbling, just on the price momentum. I mean, I guess I'm totally contradicting myself, and I'm sure it's because I didn't get a good enough sleep. But I just feel like the actually the sort of uncorking today on that we're going to get all the things that you just talked about, Ilya. Like, if I wanted a short nibble, where would you put me? I guess it'd be my question.
This is, I think, one of those times, and this is why I sort of cleaned house today. This is one of those times where, for me, I need to see a price action signal. When I saw the price action signal at the end of July, showing the market is shrugging off good news, it's embracing bad news, it's starting to roll over, you go, okay, the price action is whispering things here. Let's take a shot. Let's see. Vol is cheap. Yes, yes, no, no. And I just don't see the price signal here. So I think rather than saying, okay, I'm going to bet that equities are wrong, you might instead look and say, well, I'm going to bet that the bond market is right. And say, okay, well, either the equity market is right or it's wrong, and it can, as we know, remain irrational longer than we can stay solvent. So you have to be careful.
Thus, my whole thinking issue. But yes,
right.
So then, how do you square today's bond market action then? Because I will tell you, today was a difficult day for me in my mental model of how I'm viewing the market. Right. I think yesterday was a big regime shift with the way small caps performed. We're going back into reflation. Fine.
Maybe.
How are bonds are going back up though today? Gold's not benefiting.
I think that's what it is. I mean, look at the Fed funds futures pricing, look at the bonds. I think what we're seeing today is optimism about the cheap money is coming to save us all. And whether that's
meaning that the CPI, was a green light for rate.
Meaning the CPI was a green light. Meaning the CPI was a green light.
CPI being a green light or not, we've now had how many months where we've been running above the Fed's target, Elia? 67?
Oh, I'm not suggesting that the markets are right to think that we have a green light.
But if the green light being, let's say we're getting the Fed cuts, what does that mean for asset prices? Yeah, they're going to let inflation go up more. But Dylan, effectively, the market is now repricing a Fed's inflation target from 2% to basically 3%. Like if the Fed is going to be conducting looser monetary policy in a world where, if you look to the Atlanta Fed's inflation dashboard, every single metric is flashing red. But the economy is not slowing down. So if you're projecting cash flows and equity valuations expecting 2 to 2.5% inflation in perpetuity, what does your growth rate look like if you're going at a 3% run rate? So we're going to get looser policy, but Dylan, this is certainly not a thinking question. If the Fed's inflation target is 3%, is that materially different than a 2% target for businesses? And if it's not, are equity markets undervalued? It's a stupid question. It's a stupid question.
I think
it's the right question. Go ahead, Ilya. Sorry.
The market has been saying for months, right, that inflation is not an issue. And it's not because they don't see the tariffs being inflationary, because that would be silly. What we are instead seeing is the market saying the tariffs are going to be such a hit to growth that part of it will be more disinflationary on growth grounds than the upside shock is. And the Fed, because it takes a single rate cut anywhere from 12 to 18 months, typically, to work its way into the economy, the Fed needs to get in front of this thing. Because if we look at the break-even rates in markets, they've not really recovered since April. They've been in a choppy range. But whereas stocks have rallied, inflation expectations, market-based, haven't really gone anywhere. They've stopped falling, but they're, for the most part, anchored in a kind of sideways band. And so the market is telling the Fed, inflation measures might be high now, but you don't need to worry about anchoring inflation expectations. This is not going to spit out on you. You can start to pave the runway because we're going to need it, because otherwise you're going to miss the window. And the markets, for their part, are now convinced there is a 0% probability in Fed funds futures that there is no cut in September now. 0. It's 94% almost of a single cut and a slight sprinkling, a soupçon, if you will, of a probability that you get 50 basis points in September. The markets are sort of fully running head first into, we are going to get easing, and it's going to be wonderful and glorious, and it will paper over all of our sins.
Thus, the no-thinking supernova thesis gets stronger, not weaker, in the face of the CPI green light, which oddly then caused me to think.
Yeah, so, and the thing is, you would be forgiven for thinking, because when you look at what the CPI number was, you saw tariff-based inflation in it. It's leaching slowly because obviously the first quarter, everybody ramped up inventories, and so you haven't seen the full inflation increase in prices yet. You're seeing in the PPI data, and we'll see more when they're updated tomorrow, but for 3 months now, you've seen that intermediate level inflation is getting bogged down because businesses are taking it into margins and not passing it on, even to more final wholesalers, never mind to consumers. It's just slowly starting to leach. So, of course, the inflation numbers are going to get higher because they can only take it on the chin for so long. I think from the market's perspective, what they're saying is, yeah, but when all of this hits, it is going to be such a growth nightmare that you should be getting ahead of it now. I think the real question, I mean, obviously we have Jackson Hole coming up next week. If we get a Powell speech where he's like, yeah, maybe we're going to have to be slow, maybe we don't see an urgency, the markets are all kinds of up in arms, but we don't know really what that's all about. If Powell doesn't reinforce all of this, if he doesn't stamp it, that's going to become an issue going into September. If all of a sudden the markets find that all of this dovishness is wrong,
catastrophic. I mean, this thing, that's why I'm saying I got sort of sucked into some thinking, which was, especially with the upswing and the green light, like it just feels really, really perfectly, the cliche of price for perfection seems very sort of apropos. I don't know if it's a soupçon, but I do believe it is apropos.
Well, and quite right. And the moment that this market shows a sign of weakness, like if the S&P, let's say, dips back below its July, like late July going into August high, if this breakout fails, I'm right back short. That would be a tremendous signal here. I mean, stock markets love to squeeze sellers out. So perhaps this was the last kind of smack on the chin, and then it turns once everybody has experienced maximum disappointment from all sides. But the price action will say that. It will show us.
I mean, do you understand my thought, Chris? We've lost him once again.
Yeah, it
just feels too good. And then I'm all in favor of the goodness, but this just feels ridiculously good.
Yeah, I mean, you get to a point, and I'm going to talk about this on Macro Money today, but you get to a point where you have to start asking questions about economic growth and whether gravity exists. And there seems to be this kind of cognitive dissonance between the markets going, oh, goody, rate cuts, and stopping short of saying, why do we want this so bad?
Mm-hmm.
Why do we need all this easing?
Mm-hmm.
Why is the Fed saying, hey, listen, the economy is fine, and the market goes, no, it's not fine. You better give us 3 cuts next year. And the Fed goes, how about 1? And the market goes, 3. But why? Why is it that they want them so bad? Is it because everything is great? Then why do we need the cuts? So it feels
exactly.
it feels like we're watching Wile E. Coyote run before there's the realization that ground has ended.
And I just worry whether I'm thinking.
Right. And this is why I won't go long here, but I'm also not willing to stand in front of this level of momentum and go, oh yeah, I'll be right eventually. No, I have money at risk. I'm not just going to lose money for no reason.
Mm-hmm.
I'll back up. It's fine.
The interesting thing
will present itself.
But I've had a good month not thinking.
I mean,
truth.
Not thinking is not a bad thing. I think the key is not, I think, it's not to think or not think. It's to let the price action think.
Mm-hmm.
Like we can have 5, 6 versions.
But I just feel like
a
this
possible
is a
world in our head.
Again, not to go all thought based, but I just feel like this is a classic sell the news. Like you have all the supernova jibber jabber from me and everybody else.
Sure.
Now you have the inflation green light. You're basically now considered a guaranteed rate cut next month. The market spikes. Like if like this is for me in a thinking man's world, this is a classic sell the news.
Yes. And as ever, right? And this is sort of the cross that all of us that like to think about macro things have to bear. Macro tells you absolutely nothing about timing.
Mm-hmm.
Like you can, and I do this exercise where you picture the world in multiple versions. And you go, okay, well, if the mix of assets is, dollar is doing this, and while stocks are doing that, and gold is doing that, and yields are doing that, and oil is doing this. Okay, that's a world like this. And then there's a world like that, and a world like that, and a world like that. And you can like one of those more than others. You can certainly think yourself into one of them. But I think you have to be very, very focused on risk management and on what the price action says, because as ever, if you're right at the wrong time, you're wrong and you're going to lose money. And at the end of the day, I would much rather make money than be right.
Mm-hmm.
So I'm going to back up, but not lose my conviction.
How does the dollar shake out in a world where rate cuts are happening, but the dollar's already on its ass?
I think that's one of the most interesting things on the board here, is that the dollar is quietly attempting to bottom.
That's what that's what I was kind of what I was getting at. Where it's like, okay, the dollar actually looks kind of okay in the context of a narrative that could say that the dollar might not be that okay, but it seems to be that okay, but it seems like it's behaving okay in the face of not okay.
Like it could have been much weaker this week for everything that's coming together and all the hope and yearning for these rate cuts.
Mm-hmm.
The dollar might have taken a much bigger beating than it actually took.
Exactly.
Like it's down a little. But it still looks like,
especially when you got the bond move like it is in the CPI green light, I could make a weaker dollar argument quickly and robustly.
Yes. And I think if your argument was we're going to have a stronger dollar because rates aren't going to go down, I think that argument increasingly flimsy. Because obviously we're going to get these rate cuts. I think the larger issue is now that we're on the other side of the April scare, and we've sort of gotten past the point where, and I think stock markets speak to this, where we thought for a while there that we were going to recklessly crash the entire dollar-based financial order. And then the bond market got quote unquote yippy. And the administration understood that, like, listen, there's policy we can debate, and then there is self-harm. Stop the self-harm. And they did. And they did. And I think when that occurred, and whoever is in there explained that, listen, you can do all kinds of things, but if you don't have this dollar recycling into our markets to keep interest rates in check and keep the government financed, then all of your great ideas are worthless, as is everybody's idea. Right, left, whatever. It doesn't matter. You can't run this thing if you break the dollar, because then you destroy the U.S.'s ability to finance debts cheaply. You essentially opt to say, we could have borrowed with impunity for very little money, and we're going to purposefully not. I think they learned that that's a stupid thing. And so now that we've learned that, the dollar can reclaim its haven role. So if there is some sort of a shakeout, I think we go back to dollar liquidity, much like we did in '08 when everybody was all, wait a minute, the crisis is in the US. Why is the dollar rallying? Because it's not rallying for any kind of growthy reasons. It's rallying because money has to go to cash, and it's the most liquid version of cash. That kind of argument starts to make increasing sense to me.
I know we started brushing up in here into the tariffs for a quick second, Ilya. I saw this, we talk about the dollar's role in the world. And I'm thinking about what happened at the start of this week with the VIG that's given.
The VIG.
This was a Washington Post report. Trump's using the tariffs to benefit corporate allies. I mean, allies, not corporate allies, isn't the lens after this news over the weekend that Trump is doing things that are good for American corporations, foreign market access. I know it's a silly theory with SMH doing what it's doing and then ultimately NVIDIA and AMD being the beneficiaries, I would suppose. They're not even strong in today's market. There's a rotation that's very healthy that occurs. But the administration clearly cares about the equity market. And if we're going to be running deficits, I think about the Mundell-Fleming model. What happens to asset prices?
An oldie but a goodie.
What happens to asset prices with loose monetary policy and loose fiscal policy? Asset prices inflate. So I don't think we even need to do any more thinking here about this, Dylan. And I'm so surprised. I'm shocked and disappointed in myself.
The interesting thing is I've started thinking for the first time in weeks, and I'm now nervous because I think we're on a sell that I think it's too good now. I think the CPI situation is alarming.
The CPI situation is alarming. There's plenty of things not to like in the CPI report.
I don't mean I mean the CPI green light, the price action. I feel like there's a complete release from any perceived risk.
CTAs are levered long. I mean, this is why I don't think the CPI report's fantastic. And I think the context window is when we look at this dashboard, we had this dashboard last year. We had this dashboard last year flashing red, and the Fed gave us 50 basis points of cuts. And the context there was we just had the Sahm rule triggered, right? What is the Sahm rule? Claudia Sahm, former Federal Reserve official, has this rule, as it's known, where if the unemployment rate, if the 6-month average of the unemployment rate rises, if the 3-month average of the unemployment rate rises above its lowest level over the past 12 months by more than 0.5%, then you're in a recession. So this rule comes out in 2021. You backtest it through history. It has a perfect track record. So when it flashes last summer, the market goes, oh, it doesn't matter that inflation's too high. The labor market's cracking. The Fed's got to cut and they're behind the curve. But the Fed wasn't behind the curve and the labor market stayed strong. And so their cuts gave us reflation. Asset prices go up, gold, Bitcoin, stocks, bond yields are higher. I would point out that if you had the same labor force participation rate right now that you did at the start of this year, the unemployment rate would be closer to 4.9%. And that decline in the labor force participation rate probably has to do with Trump's deportation policy.
Probably.
So thinking about the context then, these numbers are mostly lower than what you see in the left side column here from last year. A 4.9% unemployment rate, jobs growth that's probably at a break-even rate near 70K, 90K now, speaks to a Fed that is probably going to cut and probably gives us reflation again. I mean, it really does feel like we are running back last year's Fed policy decision-making at all the same exact way. This time we didn't have a big crash at the start of August. Am I wrong for thinking that as an anchoring point, Ilya?
No, I don't think so. I mean, I think you look at sort of to both Dylan's point and yours. You look at this thing and you go, that CPI report that everybody has so embraced over the past 24 hours was at least mixed. Like, okay, fine. It wasn't outright awful, although you can very easily look and see from June to July how you have the erosion of the defenses keeping inflation out of CPI start to show up. You have the biggest contribution from the goods side to inflation in over 2 years. Core goods inflation accelerating. Highest since June 2023. Over 2 years again. You're watching it. You saw in the second quarter GDP report that after in the first you had a run-up in imports and a run-up in inventories. Now inventories are coming down so much that investment is actually a detriment to growth on net. So there is no investment outside of winding down these inventories. And imports have stopped, basically. So those inventories are not getting refilled. So the insulation you had from that, from having essentially just stockpiled cheaper goods ahead of the tariffs, you're not continuing that stockpiling, even through the 90-day pause. And you're going to get PPI data tomorrow that probably tells us that businesses at the front end of the supply chain are still eating it in margin. So the defenses are weakening. And it's very like we're about to get a bunch of GDP data from other economies not called the US this week, and it's weakness expected across the board. So the US is still the only game in town. We're going to get UK, we're going to get the Eurozone, we're going to get Japan. So as you look at the landscape, it's very easy to say, well, this is why the markets want these cuts. The cognitive dissonance is when they get a little sliver of something that tells them the cuts are in, they go, oh, great, risk on. But they forget the part why they want it in the first order. And that's frothy behavior. But
there's certainly froth in the market.
But from a practical perspective, like that they jumped on the CPI and went, oh, yes, everything is healed. It's like downing Vicodin for a broken arm. Like, your arm is broken. You just don't, you're just choosing not to feel it right now.
Well, you know, there is forget the business side of this. I mean, there's meaningful evidence that the consumer is slowing down.
Very
Dylan,
meaningful, yes.
I used ChatGPT to put this together after I saw the Kava earnings. And I recall the Chipotle earnings were bad and the Sweet Green earnings were bad. And instead of just doing them by the numbers, I had ChatGPT go back in time a year. So the same store sales year over year growth for Kava, the Mediterranean fast casual company, 21.2, 10.8, now 2.1% growth. Chipotle, 5.4%, negative 0.4, now negative 4% year over year, same store sales. And then for Sweet Green, fourth quarter, it was plus 4%, first quarter, minus 3.1, second quarter, now minus 7.6. Whether or not that's, Sweet Green, I use the same store sales because their margins on labor have improved. The stores in which they have implemented their infinite kitchen, basically the automated salads, we have one near us. It's like 1 or 2 employees working on those stores now. The labor savings boost the margins on a per store basis from about 23% to about 30%. But even that's not enough for the companies to see a significant decline in traffic. Is this one of those canaries in the coal mine that, in the back of your head at least, if American consumers are no longer going to fast casual, they're being priced out or they're trying to save some money, gives Ilya's point of view a little bit more credence?
I mean, I'm in a weird situation because I've been the most ridiculously bullish person on this panel for the last few weeks, and I'm flipping over today. I'm on lookout below.
So let me get this straight. I finally get on board after you chatting me for weeks, and totally. I get onto the ride, and you're sliding out. You're like, okay, have fun on that roller coaster.
It's terrible. I feel bad.
Yeah,
I feel like it's like
enjoy yourself.
I feel like it's some sort of cruel manipulation on my part, but for the fact that I believe you're an independent, sovereign individual who is beyond my influence. But I do believe that the AI supernova is one thing, but when you lay in this sort of absurdity of this interpretation of the CPI green light, and honestly, even slap on the Ethereum rally, which I take as evidence of another exuberant red flag, that Ethereum finally goes, that the rate cuts are a go, like that the next thing that happens is things get weaker.
It does feel very rug pullish.
Yeah.
If that's a word.
Like, I just feel like, okay, what else? What other good thing can I possibly give you?
Yeah, just the companies that make up the restaurant ETFs just don't look good. They don't look healthy. The only one that's working out here well is DoorDash. Aside from that, this is about the automated future. If the economy's falling apart, where are you going to go work? It's a depressing set of circumstances on that end, but heck, stocks are at highs. So what's there to complain about?
But
market can stay irrational, long as we can stay solvent.
Well, this is your K-shaped thesis, right?
It would be.
And it's sort of, I guess you can make an argument that, to be long the soup, that basically, I don't know.
Be long companies that cater to services for the wealthy. Yeah. I mean, so I got an interesting comment yesterday. It's like, oh, Chris, you're not sounding like your usual self. What's going on? No, I mean, I'm not trying to rationalize what the Trump administration is doing. I think all of this is incredibly stupid. What I'm trying to do is figure out ways to make money within that system of what I think is incongruent and illogical decision-making, which, again, viewing it through the lens of the market is a playground for the typically wealthier. 90% of the stock market is owned by 10% of the country. 56% of Americans own equities for what it's worth, but this is mainly for those that are well off. Who's getting the benefit from all these new laws? Who benefits the most when interest rates goes down? People can refinance their companies, right? Refinance their debt. It's the wealthy that have the ability to relever themselves over and over again. And just identifying that to be the system here, how do we operate within there? I mean, Uber, DoorDash, you're using those if you have a little bit of disposable income. And that's something that Raphael Bostic pointed out today. Raphael Bostic, the Atlanta Fed president, in his speech, noted very specifically, as was pointed out to me on Twitter, not only is inflation running above target, but upper income consumers are holding up. And upper income consumers are about to get a big tax cut over the next few months. When the calendar changes, SALT's back in play. Dylan? It's good for people in California, New York, Illinois.
This is a beautiful time to be rich in America.
Gilded Age 2.0, baby.
But interestingly, Porsche says their business model doesn't work because they got themselves wrapped around a tree on electric Porsches that nobody wants. So just because you're a luxury brand, or LVMH is in the tank, by the way. So it's not so linear as to say, oh, well, the companies that cater to the rich are obviously the best way to do this when LVMH is on its ass.
But those are goods.
Fair.
We're looking for service companies that cater to the wealthy. So like a private jet operator, right? That's going to be fine. But I do hear what you're saying. Like LVMUY is the LVMH Moet Hennessy ADR here in the United States. Yeah, it's been hammered this year. Absolutely hammered this year. But it's a goods, right? We're putting in these barriers for people to import things from abroad. Is that going to affect the marginal wealthy person? No, because they'll just fly there on their vacation and they'll pick it up in person. But I think that if we're going to be this is the system that we're in. We went through regime change yesterday. The Russell did not care that yields were up yesterday. It didn't care that yields were down today. The home builders, these things are ripping the past two sessions through the roof. Rate sensitive stuff. Who's going to be able to buy new homes, Dylan, at a 7% mortgage rate? It's going to be your median
cash money, baby.
Only people who are very wealthy.
Cash buyers.
So we're giving all these the wealthy top 20% of income earners in America a big tax cut, and they're going to put it into real estate and
Ethereum, apparently.
And you can't put it into New York City because if you're a real estate investor, you're going to be stuck in a rent-controlled or rent-stabilized apartment, as people in Wall Street would tell me. So you're not going to invest in existing holdings. Forget our XLRE call, Dylan. It's all about building new McMansions. How cynical do I sound?
Very.
But that doesn't make you wrong.
Well, the one thing that you missed, Chris, that we kind of went partially into it, but I think it's worth revisiting while you were experiencing your wireless fidelity connection issues, was the relative apparent strength of the U.S. dollar in a world that could argue for its relative weakness.
Yeah.
That maybe the dollar is ready for that the bottom is in the U.S. dollar, I guess is what we're getting at. Although I'm happy to talk about oil too, if you want to flip oil charts at me. I always love a good oil conversation. It's one of my favorites.
The dollar's bothering me here, Elliot.
What's that?
The dollar just bothers me so much here right now.
Bothers you?
It's not, how should I say this?
Like a sore knee?
Like it should be doing a little bit better. Yesterday, yields were up, the dollar was down. Today, yields are down, the dollar is down. That's not that narrative elasticity, narrative flexibility.
I think it kind of is, actually. Because I think it's telling us that well, sort of, kind of. It's telling us the dollar doesn't care about yields. But the dollar not caring about yields is actually good for the dollar because yields are going down. That the dollar isn't cratering here. That we don't have the kind of a breakout in the euro, in the pound, especially the yen. That you don't have a breakout in the yen in an environment where the whole hopium story in stocks is a oh goody rate cuts story in the wake of CPI, that the dollar isn't getting absolutely bulldozed over here and still has the bottoms in July and isn't even trying to test them. That's interesting.
That's what I was getting at.
That's interesting. And it's tempting to say that the reason why it's holding up as well as it is because we haven't really seen the shuffle in policy expectations change very much on net. So let's take the April low for the policy outlook this year and next. At that point, that was like Liberation Day, maximum holy moly. We were looking at 137 basis points in rate cuts this year and next. And most of it was for this year because the market was all frothed up thinking the world is over. Since then, we've come back to about 50 basis points for this year and more for next year. But the sum total is 125 basis points. So we've gone here and there, but we're not building more easing in the kind of way that the dollar would hate. And tellingly enough, the dollar bottoms basically July 1st and has not retested those lows. Even as we get more easing in relative terms on the board. So easing wise, we've gone from as little as 80 basis points this year and next in mid-May. Since then, we've gone nowhere but more dovish. We're at 125 basis points now. Even if you take the move from mid-July, where we had 100 basis points, now we've added an extra cut. In that adding of an extra cut, the dollar has not sold off. It's actually found something of a floor. That tells me it's probably done because it really should be falling if rates were the guiding light.
That rally at the end of July just has not seen much of a bounce yet. But if there's a place for the dollar to find a low right around 97, 98 and a half, right? This area down here.
Defend it right here.
This is kind of where we've seen the previous bounces in April and again in June try to take place, maybe a little bit lower into 97, but there's a band down here. I will point out that the two places that I've been operating in the yen and the Canadian dollar, they haven't really turned the corner yet. So I haven't been feeling this pain of the dollar fall off.
Me neither.
Dollar CAD, for example, I'm still short the call spreads up against this effectively 1 month moving average. We're in at the CZ5, 73.5, 74. There's 51 DTE. It was put on when the IVRs were in the 50s. So as long as we just hang out and or drift lower, we're cool.
Mm-hmm.
So, I mean, that's kind of where if I'm thinking about a dollar rebound, where would I want to play it right now? I'd want to play it on the currencies that aren't succeeding versus the greenback at the current moment during the dollar's brief period of pullback. So the yen,
Canadian dollar, Swiss franc.
Right. We had our election pull off, right? We dropped. Okay. The election results come in. We've now neutralized. Everything's fine. So we're sitting here still. I still like more yen weakness. It's an 11.6 IVR. The volatility though across the currency space, I think this is worth noting. Typically, the euro really is the only one that has significant enough trading volume if you're going to operate in the currency futures option space. Maybe the yen. You see 122,000 contracts traded here in 6E, 102 in the yen. You go elsewhere, though, and it's a lot smaller. Even the pound, 49.2, Canadian dollar, 42.6. Some of these things would be better served to be looked at on the Tasty FX tab if you're on the platform. On Tasty Trade, of course, you can trade both there on the platform. Now, Spot FX, Ilya, which is where you and I cut our teeth originally in the world of finance, but all of them are here with all of the crosses. Dylan, you want to hedge your trip to buy those Turkish delights? There's Euro, Turkish lira on the platform as well.
Thank God. I was going to abandon the whole system if they didn't do that.
Okay, so we do need to talk quickly about gold and silver before we go out the door. Silver has a big day today. Gold, not necessarily. Ilya, what was a little bit of an evening star candlestick cluster at the start of the week? Highlight that here. Now looks like a more of a morning stick candlestick cluster here, buttressed by that 1 month moving average.
Mm-hmm.
This looks like it wants to go. Gold, obviously, less the safe haven of the two, or more the safe haven of the two, less the speculative asset of the two. It's pinned at 3,400. For the life of me, I'm trying to get off an Iron Condor here today, 76 DTE. We're getting a 2.5 to 1. Actually, I'll just put this back on the platform right now. At 76 DTE, looking at the working order, which doesn't get filled now, it will be filled later, and we will get in. This particular trade is going to be a 62% pop, risking 2.5 to make 1. And the one that you're making is more than the buying power used. I really want this to be filled. But if we're going to think about gold, I have missed this trade a number of times. Arrogance, imprudence, not updating my worldview quick enough as things progress past April, May. 3,400 has been the Bob Barker price. The price is right here for gold at the current time. And I know it's only a 16.6 IVR, but a 2.5 to 1, 3 to 1 risk to reward in a 60 to 70% pop, you got to take that almost every time if you're going to stay mechanical.
For me, I'm sitting short vol here. I have it through calls. I've had it through puts, depending on sort of where we are in this range. The current iteration of the position is in calls, short calls, vertical, because it was done near the top of the range. And I'm perfectly happy to just sit on this for now. It's still net up. And the premium received far outweighs anywhere the P&L has gone this way or that. So I'm just going to wait here. I'm going to wait for this thing to pick a direction. I'm staying away from silver because that has all the jumpiness of what's going on now in stocks, and I don't need any part of it. I've just taken myself out of the firing line for stock market shenanigans today. I don't need to get myself back involved, especially through a higher volatility, jumpier, less liquid version of risk on. But in gold, I am perfectly happy to just sit at this point and just let the thing work for me.
All right, Dylan, take us out. You wanted to sling some oil here. What's the plan with oil? It fell back today. I'm feeling a little less optimistic about this staying neutral. If the world's so good, shouldn't oil be up?
If the rate cuts are happening, and if tariffs are happening, the non-thinking man's interpretation of that information is that it's indication of reducing economic momentum, and as such, reducing demand for fossil fuels and transportation fuel. Not to mention, tariffs specifically target a reduction in global movement of goods and services, which is the most energy intensive. So the only question with oil, I would say, is whether the decline we're looking at right now already reflects everything I've just said, or whether there's another leg down in oil as economic activity generally slows down, and specifically as multinational import-export activity slows down, which, we'll see if that even actually happens, considering how price elastic and how tolerant everybody seems to be of a higher price. But you can, the non-thinking man could make a case for at least, I guess the 22, the IV rank doesn't get you too excited, but a call spread, or some short. If I was going to do anything with oil, I'd be short. Let me put it that way.
Well, it looks like it may be breaking down, but we'll have to cover this tomorrow because Overtime is out of time. For my fellow non-thinking men, Dylan Radigan and Ilya Spivak, I've been Chris Vecchio. Good luck trading. We'll catch you tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. We're coming back, though, in a little bit. Brief break. Tasty Live continues. Ilya Spivak with Macro Money. See you there.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Are there any names in the Mag 7 that you do not think will be there a year from now?
Tesla. Tesla's been like waiting to get booted out of the Mag 7 for years now. Like it's on it. I mean, maybe it'll make a comeback. It kind of did, but I'm not expecting it to be around much longer. I don't know.
Jeez. For the sake of argument, I'm going to say Apple.
Probably Tesla.
Ooh, toughie. No, you know what? Maybe this is a contrarian thing. I think they're still going to be there in a year.
Oh man, can't ever go against the family. They're all here to stay.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
We get another push higher in the stock market as we embrace that rate cuts are apparently coming and coming for sure in the wake of that CPI report. We talked yesterday about how that report was at best mixed, but price action would not be derailed. And so we have another push higher from the stocks across the major indices today. But the question remains, why are the markets so happy with these rate cuts coming? And why do they want them in the first place? Is there some sort of cognitive dissonance between wanting support for the economy and forgetting why that support is needed? That's what we're going to tackle here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we'll take a look at the price action today and take a look at how the markets got themselves here and what it is that they're celebrating, and then consider whether the logic makes sense and whether then from there is a trade to be had to express that view without getting run over by this incredibly buoyant momentum on Wall Street. So let's first consider how we did. And needless to say, stocks up here again today. S&P up 1.13%, NASDAQ up 0.9%, yields down across the board, as if to tell you why it is that we have this on the on the menu here. And as we look at this sort of in the wake of the CPI report that we saw when we looked at this yesterday, you sort of get the sense for what it is that you're looking at. Because it seems like what you have on the menu now is perfect conviction that this September rate cut is coming. And without kind of relitigating all of why the CPI report was more mixed than one-sided, there certainly is something to be said about the contribution from goods being the biggest in over 2 years. And in fact, core goods inflation being the fastest since June 2023. There is something to be said for then the Fed's concern that tariff-based inflation is creeping into the pricing structure, and that what this will do is hurt growth, which has been the Fed's song all along. Nevertheless, the markets seem to have it figured out. Not so much in that the tariffs won't be a problem, but that as long as there's rate cuts, those problems are manageable. And for all of the cross currents in that CPI data, the market has concluded in its wake that there is a 0% chance that the Fed doesn't cut rates in September. We're looking at the probabilities here from Fed funds futures, and we can see there is a 93.8, almost 94% chance that we are going to get one rate cut. Note here, the current target range is up to 450 basis points, or 4.5%. In September, we have a 94% chance that we're going to get to a range that's 400 to 425, from 425 to 50. That's one cut. And now there's about a 6% chance that actually the Fed will go bigger. So the edge case here isn't that the Fed holds, it's that the Fed cuts more. That the Fed cuts by 0.5% and not 0.25%. Moreover, if we look at the outlook for this year and next, we can see the markets are now getting to a place where they're starting to get past just 2 cuts for this year. That, of course, was where the Fed had it. Just to remind ourselves quickly, the Fed's last forecast had from 4.4 down to 3.9 median this year. That's 50 basis points. Then from 3.9 down to 3.6 next year. That's another 0.25 point cut. So that's 75 basis points between this year and next. The markets are at 5 cuts now, not 3. And this year is getting heavier. We're out to 58 basis points here. So the market is even flirting with the idea that the Fed may need to go bigger this year. That maybe just 2 cuts is not enough. Now, it's still a relatively low probability. It's only 32% chance. We've only priced in 8 out of 25 basis points in the direction of a third cut. Nevertheless, we're in a situation here, it would seem, that the market is tilting to an increasingly dovish setting. Moreover, the view for next year is, of course, unmistakably more dovish than what the Fed has on its forecasting. In this case, we very clearly have the market telling us that there is much more scope to ease than the current pricing from the Fed seems to imply. In fact, quite a bit more is something of an understatement. We're out to 68 basis points here. So the markets see at least 50 basis points, and then the probability that they are going to get that third cut out to 75, that's now starting to look like a relatively significant, better than even kind of a thing. It's 18 basis points into the direction of the cut, so a 72% chance that it's coming. And that, of course, raises a very important question. The markets are clearly happy with this development. They've clearly read the CPI numbers in a way that gives them the enthusiasm that they need to have around these rate cuts. But they seem to be speaking out of both sides of their mouth, as it were. Because if the Fed is slow, but the markets are more dovish, then the question is, well, why? Why are the markets so dovish? What is it that they're so concerned about? Why is it that we need all of these rate cuts? What is it about the current situation that, for whatever reason, seems to be telling the markets that they need to be yelling at the Fed to do more? And that's really where we take this conversation next. Because what we find here is we're going to get a nice little test of the wherewithal of the global economy here for the rest of the week. We'll get to U.S. consumption data in tomorrow's show and take ourselves back into the U.S. But in the meantime, it's the world that is going to report on these growth indications. And we can see here there's a whole slew of GDP numbers coming our way. We're going to get a first look at numbers out of the UK. As we can see here, a slowdown of significance expected here, down from 0.7 to just 0.1% quarter-on-quarter growth, so basically standstill for the UK economy. We're going to get a second look at Eurozone GDP data, where, again, we're moving in a standstill kind of direction. And then the numbers that we're expecting out of Japan, at best, hovering near that standstill level. So, needless to say, these are sort of G5 economies. So this is where global growth comes from, outside of the US and China. And these numbers clearly are pointing to some kind of a downturn. Now, the latest numbers from the S&P Global PMI data that we use to kind of approximate where we are on the global business cycle, they seem to have given us a little bit of an upturn. And perhaps that is, to some extent, encouraging until we start to look at where that upturn, at least data-wise, seems to be coming from. So we can clearly see here that basically since the beginning of last year, the trend has been lower. We hit something of a weak point extreme here toward the beginning of this year and sort of into the end of the first quarter going into the second. And since things have kind of steadied a bit and we've come back into what is essentially the middle of this range. This is, of course, as ever, done around a center line of 50 for PMIs, where above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And these are world numbers. Now, that seems big, but of course, as we've said many times here before, world GDP really is made up of three components. It stands on three legs, of which the US is the biggest, then China, then the Eurozone are relatively equal-sized parts. That's 58% of global GDP. And the rest of world, 42%, are for the most part vendors that need the big three to be buying stuff from them in order to have demand of their own, for the most part. And so the sort of weight that demand from these three economies has in kind of determining where the global economy goes is already outsized at 58%, and in practical terms, even greater. Moreover, China is a kind of middle step economy here, where it is at the middle of the global supply chain, and again, in large part, depends on end demand in the US and the Eurozone to power their export engine. Indeed, for 9 consecutive quarters, as we've mentioned over and over here on the show, in China, we've had economy-wide deflation because there is a retrenchment from these trading partners, in particular in the wake of COVID and the reshuffling of supply chains, at the same time that there is a near total absence of domestic demand in China. And so it also is not a standalone. It also is in many ways dependent on demand that comes from elsewhere. And this then makes the situation very interesting, because when you look at the S&P Global PMI numbers, the most recent update in July, you can see that both the Eurozone and China are a hair better than standstill when it comes to economic growth. And in fact, they've been stuck in this morass basically since the middle of last year. There was an attempt at a rebound in both economies, a tepid one, going into the latter half of 2023, going into the beginning of 2024. By the middle of the year, that attempt fizzles. Then you come down and you sort of settle into hugging the neutral 50 level here for the most part. Sometimes you're a little bit under, sometimes you're a little bit over. This happens to be a part of the cycle where you're a hair above, but we can clearly see these economies are flatlining. And all the strength is in the US. So when you then look at this again and you see, well, this right here, this upswing for the global numbers, that looks very much like the same upswing as what we see right here. And that seems to suggest that as long as you believe this, then the U.S. economy is the only game in town. And as long as this persists, well then, yeah, you have global growth. But without it, not so much. And then you get to the PMI numbers from ISM that you got published last week that tell you, and those were a little bit timelier than the S&P global numbers in the sense that the S&P global numbers were released meaningfully earlier. That survey includes more things in it from earlier in the month. You get this sense that timelier measures are already rolling over. And looking at the ISM PMI numbers here, you have services basically flatlined and manufacturing contracting. And both of them are pointing in the wrong direction for several months now, really since the beginning of the year. Moreover, if you look at the subcomponents, they're not encouraging either. Employment, one part of the Fed's mandate here, is in contraction mode across the board, both services and manufacturing, both of them in the wrong way here, both of them under that 50 line. And then if you want to stick with the Fed's tariff conundrum here, weak labor markets, strong inflation. Here's the inflation piece. It finally took a little bit of a dip for manufacturing in the last month's report, but we can clearly see here inflation is very much an issue here, especially in the service sector where it continues to push to multi-year highs. We're at the highest since 2022 here. So it's not nearly so straightforward that what we saw in the numbers for the U.S. out of S&P Global is in fact the latest version of this view. As a matter of fact, it may be a little bit dated at this point, whereas the standstill here remains. And so as we look at all of these GDP numbers here, more weakness in Europe, clearly. Standstill in Japan, clearly. And really all we have to hang our hat on is the US. Just talked about China last week and how maybe there's some green shoots there, but very tepid and very early days yet. And certainly the GDP numbers are still awful. Maybe the idea that the US can continue to carry this on its back is fading away. And the one thing that cannot fail is failing. That, of course, appears in spades in US GDP data. We just got the second quarter numbers ahead of the last Fed meeting. And what we find is that, yes, there's a lot of shenanigans here with inventories and imports. In fact, to a large extent, this is how you end up with CPI data looking as normal as it has. On one side of it, and we'll talk about this tomorrow, no doubt, once the PPI numbers come out, wholesalers have been taking a hit on margins to insulate consumers from inflation costs. But on the other hand, of course, there was that first quarter front run where imports surged, inventories surged, so companies were stacked with goods at the pre-tariff cost structure. And what we already see in the second quarter is that imports have cratered. Meanwhile, inventories are already getting wound down. And if imports have cratered, then, of course, those inventories are not getting rebuilt. Importantly here, this is contribution to GDP. So imports here surging looks like it's going down because, of course, imports are subtracted from GDP. And when they rise, that's a negative contribution. When they fall, that's a positive contribution. The investment component here, which is where inventories live, when those inventories get packed in with those imports, that's a positive contribution to GDP. When those inventories get spent down, that's a negative contribution to GDP, and so the investment component comes down. So that's how you interpret these numbers. If these inventories are already falling, imports have basically stopped, well, then those inventories are not getting rebuilt. And so you're losing insulation from inflation, but you can see where that insulation has come from. But all of those shenanigans aside, consumption is the thing to look at because that's 68% of GDP. Everything else is, to a large extent, an afterthought. And between the first quarter and the second, you have the weakest 6 months of household consumption in the US since the first 6 months of 2020, which is, of course, the COVID recession. Moreover, we can see why the markets then want these rate cuts in the bond market. When in the beginning of the year, stocks and these break-even rates, which are inflation expectations backed out of the pricing of bonds, nominal versus tips or inflation adjusted bonds, we can see that both stocks and these break-even rates fell because initially the tariffs amounted to a growth scare. Once in April, the worst of that panic went away. Stocks, we can see, have clearly had a sentiment-driven recovery, but break-even rates have not gone very far at all. In fact, even as inflation numbers have ticked up in recent months, we can see this most recent push higher for stocks, it's come with inflation expectations coming down. And in any case, since April, they've only just steadied, but largely held in a range. And so you end up in a situation then where the market is happy that there is easing coming. We can clearly see that develop here. Again, here's the S&P 500. Here is where we have this kind of April crescendo, as it were. Stocks bottom. Fed policy expectations reach a dovish extreme. We can see things then normalize. The policy outlook gets less dovish for a bit. Stocks recover. They basically reset this sell-off. And from there, it looks like the next leg higher in the stock market is largely around more easing getting priced back into the mix. Tellingly, priced into the mix without another panic, without there being some sort of, oh my God, growth scare or oh my God, tariff scare. And that likely speaks to what we're seeing right here. The markets want these rate cuts because they see growth as the bigger risk and inflation as the smaller risk. And they want the Fed to get in front of this thing. Well, if that's the case, then this three-legged stool that we're looking at, the three-legged stool that is global growth, is already two legs down, and perhaps this leg is already giving way, which is why the markets want these rate cuts in the first place. And it is then the price action in the US dollar that starts to become most interesting, because even as you get more and more dovish on this outlook, the US dollar having very cleanly declined as things got this dovish, seems to have attempted something of a bottoming in early July and from here. And while maybe over here in April there was a meaningful risk that perhaps the administration is going to undermine the very dollar-based architecture of the global financial system, once the panic got bad enough, they took a step back and showed the markets that they are not looking to do something quite so damaging and game-changing, which arguably is how stocks have recovered from this panic before the easing even kicked in. So this move here, this leg of it. And that, of course, takes a lot of the pressure off the dollar in a sort of structural way, and perhaps revives it as a safe haven in the event that things turn. So that the dollar is starting to find a bottom here, even as things get more dovish. That starts to tell you that maybe the market is preparing to raise cash. Maybe it's getting ready for a big risk aversion push. You don't see it in stocks, certainly not today and certainly not this week. But you are beginning to see a bit more interest in the cash side of things, it would seem. And maybe what that means is that the markets are, as all of this easing gets onboarded into the outlook, are moved to think, well, yeah, we're happy with the easing, but Why easing? Why do we want it so badly? And the thought process goes, well, if we are definitely going to get it, then are we sure it's for good reasons? And the architecture of the growth dynamic seems to say no, which is why the markets want it, but which also poses a significant gravitational risk for sentiment-buoyed stock markets. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Ragan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Back with Chris Mondays and Fridays for Futures Power Hour, writing for the news and insights portion of tastylive.com, opining at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.thread.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, of course, Dan Cecilia. What's up, Dan?
Nothing much. Just enjoying these markets. ETH's ripping, Bitcoin's up. I've been trading some of these treasury companies, as we talked about, so I'm happy. I hope everyone in the audience is happy as well.
Yeah, what's up? The market's up. We're going to talk about that here in just a second. I'm also curious about some of these treasury companies you've been trading, my friend, but we'll get into that. Before we do, get your ass over to YouTube, pop out the chat, and type some crazy shit into the chat, if you will. We're streaming live on Tasty Live. We're on YouTube. I think we might even be on X. We've got the Tasty Crypto newsletter pinned to the top of the chat. So do yourself a favor, click the link, get over to tastycrypto.com and sign up for the email. We send out 2 emails a week, and I've got to say, Dan, they're usually pretty good, right? Our hit rate's relatively high. Nobody's perfect in this game, but I would, I'm a little biased, but our analysis is okay.
Yeah, look, I want to just say something. I want to give myself some roses, if I may. A couple months ago, if anybody was paying attention to the Tasty Crypto newsletter, I do a lock of the week. I haven't done it the last couple weeks. I'll get back to it.
It's summer. You get a break every now and then.
Yeah, but I made a pick for a crypto called Aerodrome.
Yes.
Ticker AERO. We don't offer it on the platform, but we do offer it in the Tasty Crypto wallet. You can swap it there.
Yep.
I think I sort of alluded to that being Coinbase's main DEX.
Yeah, on the Base network.
And if you look at the price, it's gone up quite a bit. So
got to take a victory lap every now and then.
I'm taking a victory lap. Now, that's one that I got right out of thousands that I've gotten wrong. So we only pick the winners here.
Hey, every once in a while you get one right, but when we do, you're gonna hear about it. I got to give you credit. You've had a lot of great calls over the last few months, week to week. Hyperliquid, Aerodrome, a handful of others. It's a market environment where, let's be honest, it's been a little bit easier for us here recently, but I think, the art is to try to stay on the right side of the trend to begin with, but also when you have everything that's somewhat positively correlated, trying to find those relative value opportunities, and that's certainly what you've done with those locks or picks of the week. And that's what we try to do in the email as well. Up until recently, it's been Bitcoin over everything. We've highlighted that and given a lot of indicators that we use to try to understand when it might be time to shift some of those positions around. And as of the last few weeks or so, you got some of those signals, and you're starting to see more of those pop up. Dan, I want to talk about a variety of things here on the show. We're going to hit on a topic that we discussed in the newsletter on Saturday, and that's the announcement that 401ks are now permitted to invest in alternative assets, aka crypto, also private equity. Some nuance to it, but we're going to break down the numbers in just a second and go around our radar, talk about some of the things we're seeing in the market. But before we do, let's do a quick market update here. And I guess I'll speak to the jet ski for a second because I want everybody to understand what the dream is here. And we're maybe, with every dollar higher in ETH or Bitcoin or any of the tokens, we're one step closer to the dream. And the dream is to just get on that jet ski and ride it off into the sunset. And that's what we think crypto offers more than anything. So, market update. Let's do that, my friend. Green on the screen. What's your favorite one? Pick one, I guess. I mean, we talked about ETH going to 5. It seems like it's on its way. I think there's probably a catch-up trade with Bitcoin at some point. Soon enough, people will pull up Solana on their screen and look to the left side of the chart and say, okay, it's now at 200. It's going to go to 250. There's some behavioral components to this. There's a few that are still underperforming, right? Solana is underperforming year-to-date versus Bitcoin. Doge is trash versus Bitcoin, really. But it is up 22% on the week. We can go around at some of the smaller market cap tokens. I mean, clearly Chainlink has done a little bit better here recently. We put some trades on in Aave, a handful of others. I just bought Pepe for the first time, bought 8 million of those, which is about $100. So bought some Pepe yesterday, but signals abound. Where are you at right now? What are you trading?
So I'm just holding ETH right now. I think I'm looking to begin rotating into some of these altcoins. I've talked about this on the Liz and Jenny show this past week. I made my appearance there. Jose was there. Shout out Jose. The way this market typically works is everybody kind of gets into Bitcoin. Bitcoin goes up first, right? And there's all these laggards. ETH lagged, Solana lagged, whatever. Compared to Bitcoin, we follow that Bitcoin ETH ratio. That usually goes up. People get rich in Bitcoin. What do? They usually go further out on the risk curve, so they rotate into ETH. So now ETH's going up. ETH's catching that bid. We've heard about the treasury companies, Tom Lee. It's in the mainstream, old news. So what's the next rotation? It's altcoin season. It's that altcoin season we've been waiting for. So, I think that there's some opportunities to pay attention to that rotation next.
Do you think we're seeing that now? Because I guess that's the question, right? I agree with you. That's the path. That's how this likely plays out this time. Is it now, or are we still waiting for altcoin season?
I think we're still waiting.
Okay.
But I think you have to put it on your radar now. Like, I think you have to begin sort of looking and seeing where that next narrative where that next rotation, that next flow is coming. It's hard to time it. Like, I don't know. I don't have that answer. But we're seeing some of these alternative treasury companies popping up for some of these altcoins. There's some movers there. I think Sui was up. Pepe's been up. Obviously, Solana broke 200. That's kind of been a laggard against ETH recently. So I think like that's where I'm looking. I'm looking into some of those altcoins, and it's not necessarily like Ripple, Litecoin, Bitcoin Cash, although those are probably some good areas. They're not ones I trade. I'm looking out more on chain. I'm looking at the Solanas. I'm looking at the Suis. Some of these like newer coins, I guess I would say.
Okay, let's jump over to the platform then here for a moment and take a look at some of the treasury companies, because this is providing a bid in the market, right? And I'm going to go out on a limb and say you're probably going to see more of these. Maybe that's not much of a stretch. We saw the Bitcoin ETFs. We've seen the Bitcoin treasury companies. Strategy spearheaded that effort there with Michael Saylor. You're seeing that with ETH. Presumably you see that next with Solana. Obviously it's starting. Sui, BitTensor. There's some headlines around a BitTensor acquisition company. What are the ones, for anybody that's not familiar with this, what are you trading here from a treasury company perspective that gives you some exposure? And then I guess my question is, you've got something like Solana here that's up 22% in the last week, 74% vol. Why not just trade the underlying? What's the, I guess, in your opinion, what's the reason you might look at the treasury company, or is it just you've got money in this account and it's there, let's do it?
Well, I can give specific tickers. UPXI, I was in that trade, and then MCVT.
What is this one?
Okay, that is a Solana treasury company. Upexi, I don't know what it was originally.
Or something else, like I'm just making this up, but like a biotech or pizza company or something. But now let's add some Sui or Solana to our balance sheet.
It's a Solana treasury. Yeah, yeah, exactly. And I think really what it is it's sort of a leverage bet on Solana. Like I think, again, I have money in my the answer is I have money in my Tasty Trade account. I already have a bunch of Solana. I just wanted to make a trade on this kind of leverage bet on Sol.
Okay.
And I thought it was,
when I look at that, right, it makes sense too. You've got something that's $5, now it's $8 or was $8. Sure, Solana's up 22%, but if you put the same amount of money into this, you're up more.
Right. That's the answer. There's some options on it. The options are liquid. Maybe there's some plays there. I won't get into that. Little bit, maybe there are some trades there. We might dig into it. The volatility is pretty rich, but there's not a lot of volume on some of these. So some open interest though, obviously. So there's some plays there.
Yeah.
And that's kind of what, it's just
penny wide at the money here.
Yeah.
Or maybe not so much at the money, but your 10 strike, a little bit tighter on the calls. That said, okay, I didn't realize there were options on these.
Yeah. So those are, that's the reason, right? Like it's sort of a leverage bet on Solana. You get a little bit more, I guess you could take some advantage of some of the high premiums in the options. And then I think I bought it a couple days ago. It was $5-6. It opened today at what, 8, close to 9, 8:30 it opened, 8:50.
Good trade, my friend.
Yeah, it was a really quick trade. There was no other reason other than that was the next one. People were paying attention to the BitMines, the ETH ones. UPXI was the next one, Solana.
Okay, I like it. In a world where you really, you don't have Solana ETFs, at least not US listed Solana ETFs. You don't have options or really any way to access derivatives on these. This is a proxy for that.
Right.
You have, in some cases, depending on what happens here, you've got relatively liquid option markets, not super liquid, but not extremely illiquid either. You could probably get something done in there, depending on the size you're trying to work. This is a way to get that exposure. You mentioned Sui as another potential opportunity that you could get some exposure or leverage exposure through a treasury company. What's the ticker symbol that you're looking at there?
MCVT. Same idea.
Oh, these are the guys that are coming on the show on Monday, right?
Yes. We'll have the chief investment officer of MCVT on the show on Monday. We'll do a live interview with him, and I would love to dig into the strategy here, but basically, this came out a couple weeks ago. I think it might have been last week even. They raised $450 million through this Mill City Ventures vehicle to buy Sui, the token SUI. We offer it on the platform. And again, same idea. Look at that candle. Or what is it? Candle. I bought it a couple days ago and it sold it at the open this morning. So it was a really quick short-term trade. Doesn't have options on it yet. And, I think there's some opportunity there. Now it's going to get crazy, right? I've heard of a couple others. I don't remember the tickers. I'll get the tickers to you maybe next show. They're buying Bonk and Doge and like meme coins. So again, we're getting to a point where this is a little bit, I think, ridiculous. But these two being ones that I think are decent rotations from the ETH.
Yeah, I'm going to keep an eye on this, and we'll add these to our crypto watch list. We've got all of the underlying cryptocurrency tokens, as well as some of the ETFs that have options, some of the kind of proxy plays, the crypto companies, the miners, and now there's an abundance, seemingly, of these treasury companies. Does this one have options?
No, it doesn't.
Okay.
Does not have options yet. Maybe we could ask the investment officer about that. I don't know.
Yeah, I think that'll be a great conversation. If anyone wants to tune in on Monday, like Dan mentioned, CIO of Mill City Ventures and their SWE treasury strategy.
Yeah, I think that you have to be very. I think you have to pay attention to these, but there's opportunities here. I think because look, you could have got it beginning of August, 10 days ago, down at $4. It traded up to what, $8.50? Yeah, it traded up to $8.50 this morning. It's pretty good return for.
And if you like your volatility, well, you've got your volatility here. We'll keep an eye on this one as well. I might have to do something in here if we get a little bit of a pullback. I like the idea. Dan, did you trade bullish today?
I have not traded bullish. I saw the headlines. I'm typically not a buyer of IPOs, which I guess, didn't work out with Circle. I probably should have just bought it, but
I'm trying to get the chart to give us an appropriate view. I mean, we've got 1 day of trading activity, traded up to 120-ish, 116, we'll call it 115 or so, and down to 70. Ouch. I'm looking at the right thing, right? Yeah.
Yeah.
Okay. Not sure what happened here, but hell of a move out of the gates.
Yeah, I don't necessarily trade IPOs. I feel like you're the one being dumped. I mean, they're kind of dumping on the market.
Yeah, I mean, in most cases, there is going to be a lockup period, so a lot of insiders aren't going to be able to sell for, let's say, 90 days or more or so. But yeah, I haven't. Just curious if this was on your radar or not, given that it was up quite a bit earlier, but has come down a little here.
I saw it. I saw the headlines, but it's kind of going crazy. All these companies are IPOing. I think Kraken will IPO at some point too. How about you? Did you trade this?
No, I haven't done anything in here though. Since we had Greg on the show a couple of weeks ago, I've kept my eye on. Let me change the chart around. Apologies. Had an eye on Circle. That was one that was hot out of the gate, but has consolidated a little bit here around 150. I saw price targets come out from some analysts around 250. Whether you care about that or not, some people do pay attention to that, and it gets a little bit of excitement. Speaking of price targets, Standard Chartered came out with a $7,500 end of year ETH price. ETH at about 47 today. What do you make of that?
I think it's possible. I made an $8,000 call on Liz and Jenny earlier this week, so hopefully it's
conservative.
It's conservative, yeah. I think price calls are fun. They make headlines, but I think Standard Charter's kind of always come out with.
They've been bullish.
Yeah, they've been bullish.
And I guess to their credit, they've been right. I think if I recall, a lot of these investment banks and some of the analysts have come out with price targets for Bitcoin end of 2025 closer to 200, which if we keep trading the way that we are, we might get there. We've talked about at times 150 kind of being a level that I think is realistic, but we've got to break to new highs first. That said, Dan, to kind of, I guess, come back to reality, at least in the short term, with what's realistic or probabilistic more so. Let's jump back over to the slides here, and let's take a look at our volatility dashboard just to give everyone a sense of, I suppose you could call it realistic expectations. So if you're not familiar with the show, not familiar with what we look at or how we look at it here, these are also the dashboards that we put into the the newsletters twice a week. But we have our volatility, implied volatility ranks for Bitcoin and ETH, which I think most people on tastylive are familiar with. Definitely seeing a pickup in ETH that coincides with the higher prices. This is what you want to see. You want to see that expansion in vol on the upside. There's typically that positive correlation between price and volatility, so that's an encouraging sign. In the same way that you want to see a lot of volume behind the move, right? Supports the up move. That said, these are the 1 week expected moves that we calculate based on the spot price and the implied volatility for Bitcoin and ETH. For some of the tokens that we don't track in implied volatility, we just use 30-day realized as a proxy. It's better than nothing. We are seeing an increase in realized volatility on a 30-day annualized basis for all of the tokens that we're tracking, which is, again, no surprise given the price action. But when you think about ETH specifically, what's realistic? If we do continue to stair-step higher, you get to 6, 7, 8, 10, 100,000, just kidding. But let's say that, you're right on your price target, it's 8,000. I think it would be healthy to see a little bit of a pullback there, right? Maybe a bit rich at this level, given how quickly we've moved off of 4. So if you do pull back, what's the option market pricing in within one standard deviation, meaning 63% essentially probability? And this is not static. It's going to change based on changes in spot and vol. But right now, we've got a one standard deviation move of about 42.50 to the downside and 5,200, we'll call it, on the upside. So $473 move or so, round that up or down as you'd like. These are not perfect or exact targets. But if you were to pull back, it wouldn't be unreasonable at all to think that we might come back down to 4,200. And that could happen very quickly. If it does, I'm a buyer. How do you think about it?
Yeah, I mean, I've traded these markets for a number of years now. Like as quickly as it goes up, we get these pullbacks, and then they're usually V-shaped recoveries. So like I am adding probably below 4,500, 4,200. I think like I'm not adding any more at these levels, but I'm waiting for a little bit of a pullback. I don't think that's out of the question. I don't even think like a flash crash to 4K is out of the question. That just happens with the way the market structure is for crypto. But usually in these environments with the way things are trending, we get kind of that quick V-shaped recovery. So yeah, I mean, no reason to not have some limit orders in below 4,200, below this range if you want to kind of catch these moves down. But I don't think it's a straight line up. So I do look for a little bit of either consolidation or pullback, and I don't think that's out of the question to see toward the end of this month. But I think we're still in a positive environment. I think all signs are pointing to this trend to continue. And like I said, we're rotating into ETH. Altcoin season might be next. You want to be paying attention to that. And I think a lot of people were waiting for this. So this is where it gets fun.
Are you taking? Oh, hell yeah, it's fun now, right? And we can say that, and we can. I think we take a little bit of a victory lap because we've been here through the darkest of days, right? And for proof of that, you can go back and watch me on the show with Tom and Tony in 2023 if you want. Hit the archives. So we're having fun, of course, but we've seen the darkness in a sense. Are you selling any on the way up? I've been taking some off the table on the follow page. You can see the timestamps. You can see the prices there. We'll jump over to that. So I am not perfect by any means, but if you want to get a sense as to kind of what we're doing or how I'm thinking about different things at different times, maybe all hours of the day, click on me and you can see it's just crypto. And kind of do it in chunks where, we're going to buy ETH, we're going to sell a little bit of ETH at the top. I think what people can struggle with at times is buying it back at a higher price than where you sold your last tranche or chunk or whatever you want to call it. That to me is just trading the market that you're within. I don't think there's an environment where, I bought ETH at 2,500, I sold it at 3,500, and it's at 4,500, I've got to wait for it to go all the way back down to 3,500. I don't think so. In some cases, right, you've reached escape velocity. You're not going to get that. You might on multi-year time frames, but there's no real indication today that you're going to go from 120 to 75 in Bitcoin. Right. I suppose anything is possible, but you have to trade kind of those new ranges, obviously. So back to my question: are you taking any off the table at or near these levels?
It's a good question because it's something I've struggled with throughout my trading journey in these markets. I've always been able to get in at low prices, and then I've struggled to push the sell button. So my new rule is anytime it hits an all-time high or close, 122, 123 on Bitcoin, let's say, I sell a little bit. I have a core position that I've held for a while in Bitcoin, ETH, the majors. But anytime we get to an all-time high, I sell a little bit. That's been my rule, and that's what I followed this time. I know you have more sophisticated trading signals, technicals that you can follow, which I'm getting a little bit into myself, just to kind of like
tarot cards and a crystal ball.
Yeah, but
it's some magic dust.
But on the short, it works as like a rule, an emotion, kind of like an emotional rule, right? Like, all right,
you need some rules.
It's not something that you would follow to like, I guess, hold for a long time. But, if you're buying a year ago, ETH, or let's even say April, you're buying 4 months ago in April. I mean, ETH hits 4,800, gets close to an all-time high. Like, why are you not selling a little bit? I think that's just kind of something I learned. So yes, I am taking a little bit of profit, but I'm not exiting. Like, I'm not going to all cash, right? There's nothing in the market currently that tells me we need to be in all cash. I think when the macro environment changes, I think when we see some of the air get out of this like AI tech stock kind of craze, maybe you would. One of the signs of an overvalued market is all these IPOs, right? Circle going public, Bullish going public. We have all these treasury companies. Everybody's copying each other. Like, that obviously gets exhausted after some while, and you have to be aware of that. But it's not
today.
There's no and there's no like flatten your position immediately. Like, I genuinely think just being in these markets, it gets a lot crazier.
Right. I think that's a good point, right? You need to take some off the table. You have to have a rules-based approach, whether it's I'm going to do 25% or have a price target, or you just simply have a dollar value in your mind. My net lick gets to X amount. I can go and take this vacation or do this thing or whatever it might be. I think it's certainly prudent to take some off the table, because you're going to see on Twitter this story, whether it's true or not, of somebody that, I held Bitcoin at 5,000 and rode it to 125,000 and had a gazillion of them. And this person made, hundreds of millions of dollars. Or we've seen whales that haven't touched the position that moved $1 billion of Bitcoin over the last month or so, right? So there are those stories out there. But there's 99 other stories of somebody that bought it at that price, rode it all the way to the very top, and then rode it all the way back down to that same price or maybe slightly above, because the market finds a higher low over a longer term time period, right? Yep. And so I think you have to have an approach. I wrote about this, and this is the last time I'll mention the newsletter, but hit the link in the chat. Go sign up for the Tasty Crypto newsletter at tastycrypto.com. Wrote about this morning. And the simple point is this: stick to the mission. The mission in crypto is to make some money. This is a vehicle for making money. It's extremely volatile. It can be a lot of fun. The more volatile it is, I think the more active you should be. A good example of that is probably Aave. I'm assuming higher now. Current price, $329. We bought some at $291, dumped some at $317. I treat some of this stuff like a volatile stock. You can't trade through the rear view. It's obviously higher at $329. That said, the mission is not to try and perfectly time the market. It is to make some money, take some off the table. You have a little that you got to put aside for tax purposes, I guess, if you're in the U.S. and aren't in a tax haven. But you can enter back in on dips, have a little bit of patience, but stick to the mission. The mission is to make some money, not to perfectly time the market. That said, Dan, I think that's going to do it for our show. I'll give you the last word, though.
Plan your trade, trade your plan.
Beautifully said. We're going to be back next Monday with the CIO of Mill City Ventures, talking about SUI, talking about the strategy, talking crypto markets. But until then, I'm Ryan.
I'm Dan.
Peace.